budget solidify that and do a string of various measures which we'll all talk about ourselves and with our guests. So yeah, really excited about today's budget more than any of the others that I've seen in the recent past really.
So to be fair, all the previous budgets were also presented by an NDA government. It's just the proportion of the BJP in that government which was different. So this is also an NDA budget, but this is one where allies technically have more of a say. I mean, my guess is, or my bet is, that it's not going to skew what the finance minister puts out today as much as people think. People are thinking that this is going to be maybe more welfare consumption push, yes, but in the same tone and tenor as this government always has done. Remember, they resisted fiscal profligacy even at the height of coronavirus, when all world governments were just throwing cash at the problem. So no real reason they should do it now is what I think. We could be positively surprised by what we hear today.
Yeah, but I mean, the point being, I don't think anybody's kind of factoring that in because most people are working with actually a fiscal glide path number which could be better than what was laid out in the interim budget. So I don't think that is happening for sure.
And we do have a big bonanza this time. I mean, why are we forgetting we're sitting on 2.2 lakh crores?
0.6% of the GDP.
So
what
even
you do
if
with
you
that
become a
money is
little
the
more
question.
welfare oriented, my point is consumption is struggling. Agriculture is struggling. So populism, while the name of the word would have got a bad reputation, it may not be too bad given the current context of the agricultural part of this country, which is still not in the best shapes.
No, so you have to boost consumption. When I say populism versus, the boosting consumption, it depends on how you do it. Are you just going to increase the amount of money you put in farmers' accounts every quarter versus having schemes that will actually increase their productivity? I think that's the difference that we're going to see.
We'll talk to a lot of our guests about these things today. But let's set up the deck for today's trade.
I mean, all things are set up for a good day, is what I could say. At least global cues after a long time and quite a few sessions, US cues have turned positive. Very good pullback in US markets. You're seeing a 35-point up on the Nifty, the implied open, but let me come to what's happening there. I mean, Dow futures you can put aside for a second, but S&P 500 clocked its best day ever in a long time, in at least the last 6 to 7 sessions. Dow was up 127 points. The Nasdaq was the superhero because of NVIDIA and the tech pack, after being completely ignored and sidelined, were back in favor in yesterday's trade in the US markets. NVIDIA up nearly 5%. And that sustained pullback has really kind of reversed. So NVIDIA had lost about 8.5% in this sell-off. It's clawed back about 5% off it. Now, very key data coming up in the US as well. Remember, Q2 GDP will be out Thursday. You will see personal consumption expenditure on Friday. Very key, data point that the Fed also watches. So that's going to be important from a US point of view. And bond yields have pretty much reflected that. The latest data shows that 93% of those in the markets expect a cut in September, 93%, or at least in 2024. So that's become quite positive. The US bonds have been fairly benign, so around the 4.2% mark at this point as well. Crude has been good. Now, in terms of crude, the big concern has been an inventory buildup from the point of crude traders. But from the India perspective, that has kept crude prices in check. The Brent is below $83, so that's good news for us. And Asia has open mixed, but India is the big question. Let's look at live Asia markets right now and how they're doing. So you have mixed trade over there. Shanghai down about 0.5%. Despite China's moves, the markets have not been very positive from the China perspective. Hang Seng also in the negative. But like we said, India could open up. The FII figure is an interesting one because FIIs have consistently been buying, and a lot of people are comparing the event today to the election event, just because I suppose the two big events that we've seen in the recent past. And before that, FIIs were dumping stocks, dumping their positions before the elections. In this case, they've been consistently buying about 3,400 crores yesterday. DIIs have been selling 1,652 crores yesterday. So the setup from the global point of view looks fairly positive, I would say.
Just to add to that, they've bought 44,000 crores, FIs and DIIs, between the election results and today. So that's a significant amount of buying, not just from FIs, but even local investors have come on lock, stock and barrel. And the Nifty, and Neeraj would agree, is up 12%. That's historic since the day of elections.
Yeah. I mean, it's going strong. July number as of yesterday from the FI side was 30,000 crores. Add another 3, so 33,000 crores. So lots to watch out for. But the trade setup for the day very quickly. So it wouldn't surprise anybody that it'll be if it's a quiet session pre-budget and a choppy session post-budget. And choppy, maybe not necessarily from a headline market perspective, maybe not, but certainly from a sector-specific perspective, what is included and what is not may well make the moves on the market today. So keep an eye out for that. A large set of people still believe that it's a sell on rise market versus a buy the dips market, unless of course it's a very sharp dip in which the MFs are sitting on over 1 lakh crores of cash, will come in any which way. So, but from a tactical short-term trade perspective, maybe a sell on rise versus a buy the dips currently. The pocket, we've been talking about how energy is in focus. Oil, remember, has gotten a bit tempered. There is a bit of a pullback in global oil prices in the last 2 or 3 sessions, and that oil pullback may temper the enthusiasm on the ONGCs and the oil Indias of the world, but it certainly keeps the OMC trade firmly in focus, except for the MRPL results miss, and we'll talk about that. And lastly, I personally don't think that the return of the PSU trade yesterday means that there is something positive for PSUs necessarily coming. It may well come, but almost every budget, viewers, there is a rise in 1 or 2 PSU sectors ahead of the budget, only to not quite see any announcement in the budget speech. So it is not a given that because PSUs have risen yesterday, that there is something in the budget from the PSU sectors. Yes, defense, railways, etc. will see the allocations, but please be careful. Don't have bravado and go out and buy into these stocks, fertilizers, etc. so much percentage points higher. It may not necessarily turn out to be the best of trades.
Oh, well, let's start with taking a look at the implied Nifty. See if it's actually doing anything this morning ahead of the budget. Remember, while Neeraj mentioned that the market may have looked a little uncertain yesterday, what caught my eye, Neeraj, was how well broader markets actually did. So while the Nifty went home flat, small, mid-cap, micro-cap has actually gone home with gains of 1.5%. And the FI long-short bet remains skewed to 77% on the long side. So the bias by foreign investors in the cash market is still positive. But whether a budget can fuel an already overvalued expensive market is something that we'll all want to wait and see this morning. But the performance has been phenomenal. The Nifty is up 12% since election day. We're up 5% this month alone. So the going into budget sentiment seems heavily positive. Well, just after elections, remember, FIs have turned excessively bullish, and the latest stance in both equity and derivative segments shows that this is a view that they will be sticking to for the near term at least. But it will be a day when earnings reaction may be limited, or stock-specific reaction may be limited. It will be largely budget-centric, but that's implied Nifty in front of you. A 28-point gap up is what we are working with. This is going to be all over the place over the next couple of hours. A quick check on the top. Before we go into stocks, I'll take you through what brokerages have to say. While they, of course, most of them believe that maintaining fiscal discipline is not only important, but will be an important stand in terms of what the budget does this time. We'll quickly take you through what that is, but I believe before that, should we go into the specific stocks and then go into a budget conversation? Might be easier to do it that way, right?
Yeah.
In terms of earnings, we have Suzlon. If we can pull up Suzlon and see what they've done in terms of earnings reaction. Good set of numbers from what I saw last. A quick check on Suzlon. There you go. That was the stock in terms of earnings reaction.
50%, I'll help you there, Samina.
50% higher
50% uptick in revenues
is what we've got. And of course, in terms of profitability as well, the numbers were phenomenal to say the least. So if we can get that on the screen,
let me try and help Sabina and get those numbers on the screen.
I think we should get those numbers on the screen. But
so revenues were up 50% at 2,022 crores. The estimates were 2,132 crores.
EBITDA was also up significantly, 78%. Margins are up at 18%. Net profit, 200%. I don't know whether there's what that number really means, but 200% is a huge jump in terms of profitability. Suzlon will be one to track, unless it's an exceptional gain. I'm not sure. It's core business operation. Performance has been great. So Suzlon could be one you want to track. Along with that, you've got Coforge. Again, I think good set of earnings from them. Their revenues were up flat to slightly higher, up by 2% at 2,400 crores versus 2,358 crores. EBITDA was also up nearly 30% down actually 211% versus 301. So while top line for Coforge has been okay, EBITDA has seen a decline in this quarter. Margins have seen a huge hit. In fact, they've come in at 8.82 versus 12.76, and profits have come in at 139 versus 230. So Coforge could be on the sell side in trade, not significantly good in terms of bottom line. Top line's been okay, but of course beyond that, those numbers don't look great. Apart from that, I think Federal Bank could be the stock of the day. Of course, with Manian stepping in and taking on as the head of the bank, this one will see a big gap up in early hours of trade. And remember, since April, I think end of April is when the street was abuzz that, you would have, after KV Subramaniam, of course, stepped in. It was an expectation that he would come in and the stock would see a positive reaction. The stock's up 20% since then. What you are expecting today is maybe buy the rumor, sell the news. The stock may get a gap up, but that potentially could get sold into.
Story first broken on NDTV Profit. It's an NDTV Profit exclusive, which has been confirmed. I have to put it out there. I think Kotak Mahindra Bank has already taken the hit of him moving and has moved on to other problems, which is why that stock has been suffering. It was down about 3.5% down yesterday, but I reckon you might see an upside on in Fed today, at least sentimentally. I don't know
if
you
buy that or you sell that.
If it will be drowned out in the sea of budget, I'm not too sure. I'm not too sure if you would see something on it.
Well, I think a gap up cannot be ruled out. Maybe a 9:15 to 11 trade on Federal Bank, and then the markets move on to more budget-specific trading ideas. For all you know,
getting an MD after Shyam Srinivasan's tenure is pretty strong. So let's see how this one reacts. Very likely positively. Watch out for Suzlon positive, Federal Bank positive from Samina's list. Watch out for MRPL. So using the quarter-on-quarter comparisons simply because oil prices are so volatile. Revenue is down 6.5%, PAT down 94% because refining business took the EBITDA margins down 660 basis points to 2.59% versus 9%. So slam dunk expected on MRPL. Don't forget Chennai Petro, which may also react negatively as a result of this. So certainly watching out for MRPL in the session today. Watch out for Greenlam as well. Revenues were up 17%, which is fine and in line with Bloomberg estimates. But EBITDA margins cracked a bit, 10.6 versus 12.5. The estimates were 13.5. And the PAT was down 40% at 20 crores. The estimate was 34 crores. So not a great set of numbers. And a lot of building material stocks have these issues. So watch out for Greenlam, a bit negative. And by the way, those are live visuals. FM Sitharaman, another official. So we'll keep on showing this as the day comes on. So as the day goes by. So that's one thing to watch out for. And then watch out for Poonawalla FinCorp. Yesterday the stock didn't react to good numbers, but look at the con call commentary. They've guided for 30 to 35% AUM growth and 35 to 40% CAGR over 5 years. They aim for the AUM to be 5 to 6 times within the next 5 to 6 years. And from the third year onwards, PAT growth will mirror the AUM growth. So watch out for Poonawalla. Very strong con call commentary. Didn't react yesterday, may react today.
Yeah. So I'm going to talk about a few sectors because I think the focus is going to be here. Neeraj spoke briefly about fertilizers, and the run-up has been a bit astonishing. In fact, anything with a rural theme, agri theme, has been running up. I think in terms of spaces to watch, fertilizers will continue to be on top of the charts. RCF was one of the top gainers yesterday. FACT has been buzzing. What you could wait and see is whether there are more subsidies given for fertilizers. So that, opposed to cash in the bank, could be one way that rural income is pushed up. I would watch out for those. Don't discount what could happen with railway stocks. Remember that the capex expected is going to be high. It was not as much in the interim budget, expectedly so, for the rail sector. And the plans that have been laid out are over the next decade or so. So you are going to have to start pushing through from this budget onwards. So you should watch out for what happens to an Ircon, a Jupiter Wagons, a Titagarh. That whole list of rail stocks should be there. I would add affordable housing. Look at what an NBCC did yesterday, what a Hutco could do, an Awas, because affordable housing is going to be the other big area push that you could see in this budget. And of course, the overarching theme of consumption. You can't discount what a Nestle, HUL, ITC have been looking like. It's not only a defensive play, which they traditionally tend to be, but also something that you could see ahead of the budget. But, I put together a small bit on what I think could happen, and just reinforcing the point that we made right at the start. You could expect more of the same. More of the same would be the theme overarching that you would see in the first budget of term 3, because there will be a constant push, and you've seen this consistently from the kind of cabinet chosen, the Council of Ministers, to all the statements. The essential message coming from this government is that nothing has changed because of the election results, and I suppose you would see that in the budget as well, that overarching message. The focus on, as a result, focus on infrastructure, boosting capex will continue. The fiscal deficit glide path will be maintained, and that RBI bonanza helps you sort of do both. The consumption push will definitely be there, but not in any way to make policy watchers think that this government is moving away from its stated position. So it might not be in the form of more money being dumped into the bank. So populist measures are unlikely in that sense. Viksit Bharat will be the overall theme. I mean, look at what the Prime Minister said ahead of the session yesterday. Look at what the economic survey has said. It's in fact laid out 6 clear pillars on how you will reach Viksit Bharat. I know it's 2047 far away, but if you have to actually get there, you need to start now. So you might see more clarity on what our version of a developed country looks like and what we need to do to get there. And that's going to be an important one. If there is tax relief, if any at all, because many are talking about it, it's more likely to be in the new tax regime. It's unlikely that Finance Minister will move away from her stated purpose of weaning people off those Section 80C benefits that they get and giving them more over there. It's going to be to push people on the other end. And I think the joker in the pack is whether there's any kind of regulatory leash on derivatives volumes. Again, echoed in the economic survey, RBI governor says it, SEBI chairperson says it. And yes, we do have that statement from the chief economic advisor saying that no, it's good that people are coming in, but there are definitely concerns. Those smoke signals are there. Whether she says something or does something is something I think that the market will watch very, very closely.
Yeah, well, so a lot of things to monitor for sure. By the way, so just keep an eye out for, as we said, some of the stocks or some of the sectors that Samina mentioned as well, the likes of Excite, Poonawalla, Powermech, and a clutch of other stocks to monitor. And by the way, all of the points will be discussed at length with a battery of very special guests. So if I can just show you the power-packed lineup that we have ahead for you. So of course, Dean Kim joins in moments from now, but during the course of the day, from an Andrew Holland to a Mihir Vora to a Madhusudan Kela to Ravi Dharamshi to Manish Dangi, a whole host of corporate voices, you will have a clutch of people coming to NDTV Profit, and you want to tune in and try and get their expert opinion. But let's start that conversation with Dean Kim. He's head of research product at William O'Neill, gets in this global perspective on what's expected from the budget. Dean, good having you. Thanks so much for joining in. Good morning to you, I presume, as well. What is it that you are most watching out for when it comes to the budget speech?
Yeah, I think we'll be looking for those stocks that are positioned well in those sectors that may benefit from, the budget. There's a lot of talk about various ways in which the budget is going to be delivered. But for example, I'm seeing a lot of ideas in cap equipment, basic material, energy, financials, real estate. And, there are a lot of names that are setting up for breakout. As you know, we look at technicals a lot, and we're looking for names that are setting up in early stage bases ready for breakout. So following, the announcement, I think a lot of these stocks are going to start outperforming.
Dean, let's talk about you as an investor into India. The upcoming budget, do you believe, should incentivize in any form of a concessional tax rate for foreign investors or participation from FIs into India?
Well, yeah, I mean, it's good to see, the JP Morgan bond index is going to include India, and that's already begun. And, we are seeing a lot of interest or demand for Indian bonds. So that's good news. And that's going to, sort of put India on the map in terms of the bond market. But I think in terms of foreign investor impact into equity markets, we'll see what happens. I mean, I think it's interesting that on the financial side, you might see some privatization of state-owned banks, and that could be pretty interesting opportunity for foreign investors. They've been sort of targeting private banks, but perhaps they can start looking into public sector banks as well.
Liberalization measures from the FM or any changes in FDI caps for certain sectors, and all this to woo the foreign investment that's actually reduced fairly significantly in terms of FDIs and private equity players actually selling significantly in India recently.
That's a great opportunity for foreign investors. And actually, when you look at India versus other, let's say, emerging market, India stock market's doing great. When you look at overall economic setup for India, highest GDP growth within important markets, within emerging markets, even surpassing China at the moment. So really nice setup for foreign investors to come in. It kind of reminds me of Korea back in, let's say, 90s and early 2000s, and China in early 2000s when their stock market really took off. India reminds me of that setup. And, on the backdrop of, rising middle-class income, and it looks like the potential budget may help middle-class income, perhaps through tax incentives and other ways to help out, particularly the agri sector. All in all, great setup for economic boom and participation of foreign investors.
Dean, good morning. Tamanna here. I'm just wondering what are the specifics or the specific pockets, sectors or stocks that you're looking at before the big day, and what your take is? Because here the conversation is are we going to see more of the same? So more on infrastructure, more on fertilizers, defense, railways, the usual suspects, or would you focus more on financials, etc.? Just wondering where your gaze is this morning.
Yeah, I mean, we really like, certain sectors like cap equipment, certainly infrastructure, CapEx expected to continue for particularly roads, railways. And so, when you look at stocks like KEC, Escorts, Larsen & Toubro, Havells, these are all sort of stocks that are setting up for breakouts. Basic material, we focus on agriculture fertilizers, Deepak Fertilizer, for example, and PI Industries. In financials, I think potential privatization of public sector banks, that would be great for Bank of Maharashtra. And let's not forget insurance sector, because insurance, in India, penetration only stands at 4%. And I think there's some expectations that some reform to boost tax incentives for life and health insurance, that could potentially benefit insurance players. And real estate market, we like Oberoi, Anant Raj, and also I forgot to mention Mahindra and Hero Motor in terms of the agriculture space. So a lot of names to look at. The good thing is the breadth of Indian market is very broad, and there's a plethora of opportunities within each of those sectors.
Dean, that's amazing. That's an extensive list of ideas for all our viewers. But I know you read charts and you read them really well. Our markets do look expensive. We've had a good run this month. We've had a good run since the election outcome. The Nifty's up 12%. Do you feel like a correction post the budget is almost a given? If the answer to that question is a yes, what sort of a correction are you working with at these levels?
Yeah, that's a great question. I mean, Indian market has done extremely well, and I wouldn't be surprised if the market takes a bit of a breather. I don't expect a major correction. I think if the Indian market takes a breather and finds support at the rising 10-day moving average, or even the 21-day moving average, that's perfectly normal for market behavior. And it is at those levels that when you see a bounce, then I would be buyers in the market. When I look at earnings for India for next fiscal years, I look at the Sensex, and it stands about 4,300. And when you apply, let's say, a 20-time multiple, you're looking at 8,600. Market always looks forward. So we're looking at the next fiscal year. And so I do expect growth to continue in the market. We just may see a bit of a breather coming forward.
Thank you so much, Dean. Great to speak with you this morning. And what a clear, concise call from Dean King on the kind of stocks and sectors that he's watching out for. Pleasure speaking with you. All right, Rajesh Bhatia joins us in the conversation. He's CIO of ITI Asset Management Company. We're also speaking with Rahul Chadda this morning, CIO of Shikhara Investment Management. Welcome to both of you, Rajesh and Rahul. Great to speak with you this morning. Rajesh, let me begin with your take. And I'll start with what I asked Dean. Are the usual suspects on your radar at all, or are you looking at more growth areas? I was just wondering, Suzlon Energy, everyone's excited about the numbers, but a Suzlon, an Inox Wind, the green alternate energy play, does that become very, very important post-budget?
Yeah, I'm sure that, we are looking forward to the policies that will be kind of unveiled in the budget. And I'm sure that there is going to be a lot of support for this energy transition. Look, from my perspective, the more important thing from the budget expectation is how the government unveils its thought process as to how it's going to curb speculation. I think there's a lot of talk about how there has been a shift from deposits to the equity markets. And there's been a lot of conversation around futures and options being a very large number that the government is uncomfortable with, et cetera, et cetera. So I think the thought process of the government on how it feels it is going to tackle this issue is going to be the most important catalyst for the equity markets as far as I'm concerned. So I think the rest of the budget is more or less the same. Everybody is probably, the base case is that there has been a very good increase in tax revenues. There has been an RBI dividend. The government wants to consolidate the fiscal deficit. It wants to continue the capital expenditure cycle. There will be some concessions or some focus on rural, etc. A lot of that is the base case of the markets. But from my perspective, what is the catalyst that can move markets? I think it's policy or its emphasis on how it wants to tackle the speculative elements in the market. That is what I'm looking forward to.
Wow, Rajesh, and that is a sore nerve currently. It's the white elephant that has been addressed a bunch of times now. But we've also got Rahul Chadda. Rahul, a few months ago, the government got the cushion of the RBI dividend. Do you see the possibility of a fiscal deficit tightening to 5% or sub 5%? And also, what kind of an impact is this cushion going to have on the budget today?
So definitely this RBI dividend which government got, which was about 1,20,000 crores, is likely going to be used for parts of the consumption stimulus. And that is where somewhere market has this confidence that government would be able to do that fine balance between keeping high levels of capital expenditure or the focus on the capital expenditure they've been having, while giving some much needed sops to revive consumption, to give respite to the lower middle class or middle class, which has been suffering from huge inflation. Yeah.
So, what does that actually look like, Rahul? I'm curious to understand what you think that looks like. Everyone's talking about this consumption boost, bottom of the pyramid, agri, rural. You've talked about lower middle class, middle class. What would that actually look like in a budget announcement? What can Finance Minister do to make a difference?
So I think what would happen is highly likely some bit of a tinkering with the slabs. So you would see those higher exemptions, higher limits, etc. So I think that's the easiest way to do it. And there would be some more incentives in terms of your rural infrastructure schemes, etc. And we've seen that that has a positive virtuous loop for the rural economy. So those things are something. Maybe
By the
higher
way,
America
Rahul,
spend.
sorry to interrupt. Just telling viewers what they're seeing on screen. That's live footage of the finance minister leaving her residence, of course, for the big budget day, heading to North Block. So you're going to be seeing a lot of action and all the live pictures here on NDTV Profit. She's left her residence, and of course, the entire day will now unfold. It's a long day for her, a long day for all of us, and we'll be waiting to see what she presents. But sorry for that interruption, Rajesh. Please do continue. Sorry. Rahul, please do continue.
Yeah. So again, what was basically was that you're going to see higher rural spends. So these may be spends for Narega, etc. So I think that is likely to come. So close to, again, I would say Finance Minister has about whatever, 10 to $15 billion in terms of the dividend they've got from RBI. And I think that is likely to be utilized for this.
Right. Rajesh, apart from the financial market angle, what are your other key expectations from this budget? Because this budget in some sense will lay out the agenda, the roadmap for the next 5 years. So very significant, I believe, at least in that headline value.
I think it's going to be more of the same. I think this government has been very deliberate in terms of how it thinks about jumpstarting economic activity post-COVID. I think the allocation to capital expenditure from the budget is probably at a 2-decade high. And that has been the catalyst for the economic momentum that we are seeing. So I don't think there's going to be any let up in the capital expenditure cycle from this government. Of course, I think the election verdict has thrown up a need to address rural distress. And therefore, I think there will be some concessions or some focus on that aspect as well. So more or less, I think I'm expecting more of the same. And the direction of the government in how it wants to tackle economic growth, I think is fairly clear. And that's the base case. And that's my expectation that will continue.
Rahul, I'll come to you with a very specific question because I know up until a few months ago, domestic tourism was your big bet when you talked about the Indian equity markets. Now, of course, time and again, you have the hospitality sector, in terms of their wish list, asking for infrastructure status. From where we stand, how important do you think is this wish list from your sector? And do you feel like it could change the landscape of domestic tourism and hence the bets you make in this sector, Rahul?
Absolutely. So I think here what would happen is a good supply and ample supply would get more foreign tourists. See, what we kind of believe is that the domestic tourism would pick, but look, compared to South Asian economies like Thailand, Malaysia, etc., the number of international tourists India gets is absolutely low. So I think that's where somewhere if you have kind of an SOPs for this hospitality or particularly this hotel space, etc., that should be good. Because for this sector, I think what is really burdensome is the high interest rates and the long gestation periods for putting new properties. So I think that should go a long way in boosting the supply, or I would say the quality supply in the sector, and thereby creating its own demand as a result of that.
Rajesh, I just want to come back to something that you said in your opening comments, and you talked about what happens with capital gains, what happens to curb derivative volumes, if at all, and frankly, that's the biggest debate this morning from the market's perspective. Do you really anticipate any kind of a directional statement over here or action, and what is in the realm of things you think could happen?
I'm certainly hoping that the philosophy or the thought process around how they want to tackle this is talked about in the budget. The markets appear slightly complacent that there's going to be no changes in or dramatic changes in capital gain tax. I mean, you can see it from the last couple of days movement of the stock market. So they're clearly not expecting that. But I think the overall, whether they change arbitrage fund, mutual fund taxation, those kind of things, I think that philosophy, that thought process, I hope, is what is articulated in this budget. Look, also, I think one more thing that the government is not doing, which I'm quite surprised by, is that, PSU valuations are at such a level. Probably, they could use this opportunity to divest some of the PSU, or at least some part of the stake, monetize that, because you could use that for pro-growth opportunities. The government itself is cognizant that the markets are at an elevated level. And of course, there has been excessive enthusiasm also for PSUs. So why not take that opportunity, reduce some stakes in PSUs and use that for pro-growth opportunities? So that is really where I'm a little surprised. But those are the kind of things that I want to kind of look for, which can impact the markets.
All right, Finance Minister has reached North Block. You're seeing live footage there. Exciting day. That is the person who is going to determine what the day looks like for the markets. We will see her in a bit, in about an hour possibly, with the famous traditional Bahi Khata shot, which she carries before every budget. I think it's fantastic. She is going to be breaking a record today. Most number of consecutive budgets being presented by any finance minister in Indian history. There have been more budgets presented, but most consecutive budgets by Nirmala Sitharaman. And yes, a woman finance minister doing that as well. But Rahul Chadha, while we are all wondering what's going to be in that Bahi Khata of the finance minister, one of the questions is exactly what I asked Rajesh Bhatia, that do you think that she will crack the whip on derivatives volumes and really want to sort of cause fear within market participants, or will they really tread very, very carefully despite what all the regulators are saying?
I think it's hard to put a guess over there, but look, all the regulators been talking about it. So from a market participant's perspective, markets kind of prepared. And sometimes you've got to take that bitter medicine for one's own good. So which is why I think you may see a bit of a pullback in markets on the normalization of the capital gains, or this the change in the contract size for the derivatives. But I think this is good from a longer term health of the market. See, everywhere, if you see, our regulators been leading. It happened in case of a unsecured retail credit also, where RBI was at the forefront of it in terms of tackling the problem rather than running away from it or shying away from it. I think it would be nice that we handle this, because globally, if you see, the whole international media talks about this. So it's not that this problem is hidden in one corner and nobody talks about it. So it's good that we face it and take care of this.
Rajesh, very quickly, if you can help me understand, what is your portfolio stance as we go into this budget? So how much cash are you sitting on as we see? And also, how much of the budget is discounted in the markets? And while you're at it, your top sectoral bets over the next 2 to 3 years?
So, we believe that we are in a bull market, and basically we are at the start of early stages of an economic cycle, although we may be at a late stage of a valuation cycle. So we think that earnings per share will kind of continue to move along over the next few years, in fact. And fortunately, the quality of this market is very, very good. It's a bull market. It's the best kind of bull market that you can get, because you can see the breadth of the market. So many sectors are doing well. So our portfolio also reflects that. We have a breadth of sectors in our portfolio, and we have winning companies that are gaining market share as a part of our portfolio. So fortunately, in India, you can kind of do that, unlike other markets where the narratives are probably one sector driven. So that's the kind of portfolio that we have. The composition, I think it's private banks, telecom, insurance, general and life, capital good companies, etc., domestic pharma. So it's a fairly diversified basket, and we are quite happy to own this. And like I said, we're in a bull market, so we are at the fully invested kind of stage, as we speak.
Rajesh, very quickly, mutual funds collectively, we did some math, are sitting on probably over 1 lakh crores worth of cash. What is the kind of dip, whether caused by a budget or valuations or otherwise, would bring MFs back? I mean, for ITI, for example, if you're sitting on cash, are you looking at a 5% dip, 7% dip, 10% dip before you come back into the markets, whether it's caused by the budget or otherwise?
So it depends on what triggers this.
Got it. That's true.
The decline as well, because you saw that when during the election phase, when the market thought that this current dispensation would not come, that's a material change, and you saw a very quick 8 or 9% decline in the Nifty itself. So it all depends upon what causes the decline. But my sense is that I'm expecting a lesser correction in the larger capitalization Nifty relative to the mid cap or small cap, which I think is probably more expensive. I would say clearly in the overvalued zone relative to the Nifty.
Okay, gentlemen, Rahul, Rajesh, thank you so much for joining us pre-budget on a short notice, I might add, but really appreciate your time and your insights. Well, that's the view from two people who look at this budget with a hawk eye, global, local. I think we've done charts. It's been a packed last half an hour. Time to slip into a quick break. And on the other side of the break, of course, we talk more with some market voices. And remember, through the day, we continue to get you top voices on Budget 2024. The budget speech in about 2.5 hours from now.
Powerful driver of India's growth. The Indian economy, development of all regions, technologies and innovations. Inflation is moderate. Investments are robust. More comprehensive GDP.
एक ही लक्ष्य, नेशन फर्स्ट, एक ही इरादा, 2047 विकसित भारत।
Welcome back. You're watching the Big Budget Show right here on NDTV Profit, and we're going to get you now in this section of the show a technical check on what you can expect through the day. Aditya Agarwala, Head of Research and Investments Invest for Edu is with us, and of course Kush Bora, founder of kushbora.com, joining us on the show now. Welcome to both of you, and very good morning on an exciting day. Kush, let's start with your take. And I'm just reminded of when we were all sitting together on election day when no one knew what was going to hit us. Are we seeing any clouds in the horizon, or looking all bright and shiny unlike the Mumbai weather?
First up, a very good morning to you, to all the viewers. The only thing that's common between that day and now is that, that was a Tuesday following, a Monday, which was a bit misleading. I hope that's not the case today. I certainly hope that's not the case today. But, if you look at the broad trend, for the last 6 out of the 8 budgets, the trend has largely continued. So whatever the trend was, whether the markets were going up or down, that's continued. If I go by just the same theme, then let's look at what the current trend is. It's up, but exhausting, right? So perhaps the markets are just waiting for this big event to get out of the way before they give any kind of meaningful correction. Now, if you were to take hint, then perhaps the broader markets are giving us that, the indices on the small and the mid cap are already about 4 to 5% down. So perhaps there could be some sort of a correction, a consolidation, after this. So we'd want to take all of this with a pinch of salt. I would rather treat this day with, an ordinary day with a high volatility move, in stocks and, certain sectors. So that's how I would play it. Just being a little cautious because the broader markets were starting to give us some hints. So just a word of caution. But then again, as I said, there could be stocks and sectors which could give a bit of volatility today.
Okay.
Right. We also have with us Aditya. Aditya, you want to take us through how you're feeling about the markets this morning? The mood was buoyant up until yesterday. A little bit of nervousness was seen in the early hours of trade, but eventually we closed flat on the index. The broader markets actually outperforming.
Absolutely. Morning, Savina. Morning, everybody in the studio as well, and to all the viewers. I think markets will remain sideways to about choppy. I don't expect too much of a volatility immediately. Maybe throughout the budget session, there will be some kind of volatility that will pick up. But again, on the larger indices, the Nifty and the Bank Nifty, I don't expect too much of a correction immediately. On the downside, clearly 24,300, about 24,400 are key support areas to watch out for in today's trading session. And if Nifty closes below 24,300, then there could be a case for a deeper correction in the Nifty. And that holds true for Bank Nifty as well. On the flip side, I think if anything, Bank Nifty can start to outperform from here on because we are yet to see that kind of an outperformance from the Bank Nifty. So, the kind of outperformance we've seen from the Nifty. On any declines, I would be a buyer in the Bank Nifty anywhere close to about 52,000 to about 51,500 are key support areas for Bank Nifty. And I think if Bank Nifty comes anywhere close to these areas, these are good buying opportunities in the Bank Nifty. And I think you will, going ahead, maybe post-budget, you will see Bank Nifty outperform from here on.
Okay. Ajay Srivastava of Dimensions Consulting also joins in with his thoughts. Ajay, great having you as always, but more so on a budget day like this. How are you thinking about this, and what could the budget impact on markets be?
Hi, Raj. First of all, I'm thinking about it that this market can surprise anybody. Who thought that the best performer in this month is going to be IT? IT was a pariah. So, for all our expert knowledge and projection and our analysis, sometimes we just miss it. And I think that goes with the territory. But the fact remains that this market is going into heavily overinvested into the budget, into the same sector as the last 5 years, which is infrastructure, railways is the 2-1, defense stocks, PSU. I think the 4 sectors which the basically market is overinvested, and in the capital market stocks. So I think one is just looking at the fact that is there going to be continuity or any disruption? I don't think so that any government has anything major to offer at this point of time, given that the budget meets interest, defense, personal salaries put together. What is the discretionary left? You're already spending 11 lakh crores on capex, 2.7 lakh crores on railways. I think railways will see a major fill up at this point of time. So you may see railway stocks still gathering momentum. But by and large, I think market will be very satisfied if status quo remains. Allocations are done in the manner they were done in the past, and we move on to tomorrow. I think that's what the market wants. Nobody wants anything big changes. Nobody wants any big moves happening at this point of time. I think we're all in a good state. We just want to continue there.
A no damage budget, do no harm budget is what is expected, Ajay. Is that the right way to put it? And of course, the inference here being on no real action on capital gains, derivatives, etc.
I think, okay, two parts. Capital gain, I think it just not be wise for anyone to touch it because we have the most vibrant capital market. We have the number of IPOs coming into the market, including SME IPOs. There may be a fraud there, but so be it. Capital is being raised by India. We're not borrowing on debt for capex. I think it's such a beautiful environment for Indian companies to raise. And you've seen startups are coming from Singapore back to India and saying, let's raise money here. Hyundai wants to raise money here. Why would you want to knock up something which is doing so well? That's one. On the derivatives, I think it's becoming more philosophical than this thing. How does the difference being that I bet money in the market, I buy a stock versus I buy a derivative? Yes, there are lots of issues. A lot of people are coming to the market, but that's what creates a depth of a market. We become a vibrant capital market. So I'm on the side saying people want to take risk with their money. They are knowledgeable people. You have control and risk parameters. Ask for margins, ask for this thing. But philosophically to downplay and say that the derivatives are bad for this country, I think that's not the smartest thing to do in the world at this point of time. With great difficulty, we reached here. Let's not, as I said, if it's not broken, don't touch it. What else do you want? Index at the peak along with all global indexes. Our growth is 7.5% odd. What is missing? And I think that's a key point. The tax cut given to the corporates in 2019 has been used for dividends. And now, of course, everybody's talking about ostentatious consumption of promoters. But that should be directed towards capex. I think that's the tweak which is required in India, that you got the tax benefit, you were supposed to invest, you have not. That tax benefit should be tweaked for companies which are growing. And I think investors will love it that you reward companies with capex and don't reward companies who are just declaring dividends or taking the money away from the promoters. I think that's the thing which market would love it at this point of time.
Ajay, how much of that is already discounted by the markets? We've had a good run. We're up 5% this month, up 12% since the elections. And even if you do feel that money should be spent in the form of capex, which sectors do you think could be potential beneficiaries?
I think railways will be the number one beneficiary because that's where the maximum amount is lacking. The railway safety is a big issue in this country, wagons, and our freight traffic is growing. Passenger is not growing so much. Passenger, in fact, traffic is below level of 2020 at this point of time. So I think the railways should be the biggest one and defense should be the second one. Semiconductors, PLI for semiconductors, we're looking at a big way that should come on 8 companies getting into this one. And of course, PLI for manufacturing, assembly. I think all those 4 sectors should be fine for capex is concerned. But I think the more important is what does it do to the credit market where private companies can gain money for capex? What's holding back capex is the private companies are not able to access money, long-term money for capex. That we're looking at the government to do something about it, open up a window, allocate more to IRB, etc., so that more money flows through capex to private sector. And if you tweak the tax laws, remember the old investment allowance, it was abused, yes, but it served a purpose. And I think that could be fine. But I think railways, defense, semiconductor, power, 4 sectors should gain. I think not gain, they're already up quite a bit, but they should see more allocation, I guess.
Ajay, I have a question though. I heard you say that some sectors should be rewarded. Ones which have given dividend shouldn't be. How does a budget do that?
Okay, let's say a simple thing was investment allowance, right? That you got extra depreciation. You got a higher tax rate if your capex is not going to be even equal to your depreciation. Your taxes should be much higher. You got the tax cut for a reason to spend capex in this country. If all of you done, and a lot of consumer companies done, is to give dividends out, that's not what is intended. Intended was put money back in the company, grow India, grow capex, not to give dividends and increase the royalty payments abroad. And I think that's what has happened to the tax cut. Why private capex is down is because a lot of the profit was being done by consumer companies and banking companies who did not do capex and therefore took the money as dividends or buyback. So you can tweak the tax rate, you can tweak the depreciation rate very easily for companies who do not do capex. Number 3, you can go ahead and tax dividend. I think that's not the problem at all. Because we are all looking at capital growth, capital appreciation. Dividend is important to us, but not so. But if dividend payout becomes certain proportion of profit, please tax the dividend at a higher rate. I think that'd be wonderful. Force the people to invest and grow the company. Otherwise, we'll all be giving away money and against dividend outflows without seeing capex. So you can tweak it, investment allowance, dividend tax. I think you can do a lot of stuff, but it has to be done that companies should be forced to incur capex and not just keep declaring dividends.
Okay, Ajay, we'll leave it at that. Thanks so much for taking the time out and being with us.
Good day.
Talk soon. Yes, talk soon. Let's hope it's a good day. We need to slip into a quick break. On the other side, continue more conversations, get you some trading ideas for the day as well.
driver of India's growth. The Indian economy, development of all regions, technologies and innovations. Inflation is moderate. Investments are robust. More comprehensive GDP.
एक ही लक्ष्य, नेशन फर्स्ट, एक ही इरादा, 2047 विकसित भारत।
Back with this budget coverage on NDTV Profit and a battery of guests to take you through the next 7 hours of very exciting, exhilarating, nearly a fiction novel type of a movie.
Wow.
Yeah, it will be a pot boiler. Let's not beat around the bush. But before we get to the budget, I think there is some very interesting data and very interesting.
You know, you're making it sound very, very exciting. Yeah. I'm not sure whether
I'm television.
It's only a budget.
My bet is it's going to be quite
pot boiler.
Quite a blah thing at the end of it, because
this tells all our viewers how exciting Neeraj's life is.
Yeah, but the story that Sajid has is even more exciting, and we should come to that, because 21 mutual funds, 27 FPI, 7 retail investors, and a PMS are among the top 100 sellers on June 3rd. Why is June 3rd important? Remember June 4th, when markets crashed after the election results. A lot of allegations have come to the fore about, what happened on that day, exit polls, etc. Sajid has some fresh, new and very exciting data on it. Yes, Sajid?
That's right. While the government is maintaining that there is nothing which has come out in the investigation as of now on unfair trading on June 4th or June 3rd, the data which has been given in annexures gives a different picture. It shows that election trade was nearly $11 billion worth of trade which was happening June 3rd and 4th basically. We had on the NSE top 100 clients trading nearly 87,000 crores in sale basically, and you're looking at sale, many of them are institutional clients, so they don't do intraday trading which like others do. So mutual funds sold on a gross basis roughly 15,500 crores. FPIs were 10,600 odd crores. Interestingly, 21 mutual funds were among the top 10 sellers on the National Stock Exchange. 27 FPIs were net sellers. There were 7 retail clients which sold over 2,500 crores. Now this could be prop trade also because the retail category includes HUFs, prop trades, individuals and others. So it could be a prop trade category which is there, but it basically means that the kind of selling which was coming from retail. Insurance was 2,500 crores. So on June 3rd, Nifty went up by 3.25%. This was based on the exit poll that came over the weekend, and then on June 4th, we saw the Nifty fall by nearly 6% odd.
What's the takeaway? Because you have to contextualize it in the allegations.
The allegation is that mutual funds,
domestic investors, so that you're saying that's not correct.
That's not correct, because if you look at mutual funds, they are entirely retail money which is coming in, and they cashed on the wave of exit poll. and then they bought on the next day because the DIA numbers were showing the same thing, that on 4th they were the net buyers of equity on the stock exchanges. So yeah, smart investors and mutual funds have become smart investors in that sense. And so the June outperformance was coming because of that. We were talking about how June has been an outperformance for mutual funds, and this is coming from the June 3rd and 4th trade which they did.
You know, just before I get to Aditya Agarwal on his ideas, I must say this whole notion of how domestic investors are now smarter, for example, I think it needs to be caveated simply because I think the smartest men tracking Indian markets are residing on the mutual fund houses.
Men and women.
Yeah, smart and men and women. Yeah, but the limited point, okay, let's not get into that argument right now, please. The point I'm trying to make is, Indian mutual fund industry was not as large before, and that's why the buying or the selling by MFs didn't quite make the headlines. They were very smart then. They are equally smart now. It's just that now the size gives them the gravitas to make an impact on the markets. At no point of time did we have smarter men and women residing outside and not so smart men and women residing inside in domestic MFs. It's just that the size now gives them the advantage to be able to make an impact on the markets.
So and mutual fund sahi hai?
Yeah, most certainly. I mean, you look at the track record of the CAGR returns that MFs have given over the last 3, 5, 10 years. You know mutual fund sahi hai.
Look at retail also, right? I mean, there were 7 retailers who accounted for 2,500 on NSE. In BSE's top 100 sellers, 79 retailers accounted for nearly 6,300 crores. Yeah. So, you know, a lot of prop trading has now moved to BSE, and we're seeing that, coming into the gross sales numbers, which is coming in there. Interestingly, there was a portfolio manager who sold as well. Let me put it. We don't know the name, but they sold nearly 362, and he was part of the top 100 sellers.
Yeah, and that's what they say, right? Long-term wealth comes from systematic investing and investing through mutual funds. And like both of you have been arguing and discussing, the smart guys do live here. The fact remains. But I believe, Aditya, you're in a bit of a rush. So I'll quickly come to you. The markets have opened and pre-opened, flat as it gets, but fertilizer seems to be a sweet spot as we see it. But just before we go into that, Aditya, what are your top recommendations for our viewers this morning?
I've got a couple of buy recommendations, Samira. One is cement. JK Cement is looking interesting on the chart setup. It's broken out from a consolidation. It's a buy at current levels for a target of 4,800 with a stop loss at 4,400 on the downside. The second is from a pharma pack. Ipca Laboratories looking very interesting. I believe pharma is something which should outperform in trade today. So Ipca Laboratories is something which is looking interesting to me on the chart setup. Can be bought for a target of 1,350 with a stop loss at 1,180 on the downside.
Sure. Just before we go into the budget conversation with our in-house reporter, very quickly, your top technical trading picks this morning. Also, would you go long on the index at all at this stage, or would we avoid the index and stick with stocks?
No, avoid the index, stick with stocks. Nifty seen some consolidation, Bank Nifty respecting that 51,800 kind of support zone that we've been talking about for the last 10 days. If that gets broken, then things get a little tricky. Plus, we've seen a very heavy call option writing on the Nifty Bank. So avoid the indices for now. I'll go with the theme that I have stuck to for the last week or so, which is, a combination of long and short. HBL Power has taken good support, has seen rebound in yesterday's session. So positionally, I think 650, 680 are the levels to look at. 590 is where you place your stop loss. Then there is Serra Sanitary, where, the opening call that we discussed yesterday. So 9250, 9500 are the levels to look at on the upside. 8750 is where you place your stop loss. And in continuation with the metals short strategy, JSW Steel has broken below its key averages, also below the psychological level of 900. So I think a shorting opportunity is there. 870, 850 are the targets, and 910 is where you place your stop loss.
Okay, just some openers in the pre-open session. Strong movers. Suzlon, we talked about it. Fantastic numbers. Suzlon up 5% in the pre-open session. Look at Federal Bank. New boss has been confirmed on Federal Bank. The stock is moving quite positively. Z Entertainment seeing a sharp move. Railtel, GAIL, NMDC. So you're seeing that theme sort of playing out as well as far as the top movers are concerned. I just want to look at what's happening with Wipro, because the first tick that I saw was a huge recovery in Wipro. Is that sustaining? Well, not to that extent. But remember, after being hammered yesterday, at least Wipro is in the green. So those are some of the movers. MRPL hurting because because of its poor numbers, which was perhaps to be expected. But let's go across to Janani. She's joining us from North Block this morning to lay out what is being expected. Janani, just give us a sense of the timeline and what we can see over the next hour or so as we await the budget presentation.
That's right, Tamanna. The mood here is certainly tepid with anticipation. Any moment now, we're expecting the Union Finance Minister Nirmala Sitharaman and her budget team to be here present for a photo opportunity. Now, this photo opportunity will be followed by the Finance Minister going to the Rashtrapati Bhavan and subsequently to the Parliament. Now, as we know that at 11 o'clock, the budget speech is expected to start. And much after that, we're expecting a press conference around 3 p.m. So that seems to be the agenda of the day. But all eyes and as cameras, as you can see behind me, are all trained to the gate of the North Block here, where the Union Finance Minister and her budget team, the MOS Pankaj Chaudhary, will also be seeing key budget makers like Finance Secretary TV Somanathan, Chief Economic Advisor Anant Nageshwaran, the Revenue Secretary, DFS Secretary, Deepam Secretary, all the big budget makers that we've been that we have known so far. They will be presenting their July full budget. Following the interim budget, the anticipation certainly seems to be high. Will this be one that caters more to consumption and, in fact, furthering consumption? Will there be a tax break for the middle class? What will the government do? Will it be more direct benefit transfers for the rural economy? These are all some things that we're anticipating. But as you can see right now, it's just moments away from the Union Finance Minister coming outside for a photo opportunity and showing the red file that we know so very well with the iPad that has the budget speech. So back to you on that.
Thanks for that. It's an action-packed day. In the next couple of hours, the Finance Minister will, of course, address the audience and take us through the much-anticipated budget. But for now, it's not a bad start on pre-open trade. It's trading flat. The bias would be consolidation with maybe a negative bias. Sectors will remain, now it's turned positive. Sectors will remain in focus, from fertilizers to railways to stock-specific trading opportunities that market participants will be seeking. But Kush, coming back to you on fertilizer names specifically, do you think there could be a trading opportunity intraday on fertilizer stocks today? So something that could be bought maybe at 9:15. I know it's punting the budget literally, but if you had to, would you buy at 9:15 which budget stock and sell maybe at 12:31 if you had the chance?
Certainly a couple of them on my radar have been for a while. One of them is NFL. Saw a stellar move yesterday. So, this could perhaps continue, and again, on the back of very good volumes, I might add. So, NFL is something that I have on my radar. 170 to about 185-ish, is the target that you can look at. Now, the support zone is very clear, close to that 150 mark. Deepak Fertilizers also taking support at the 20-day moving average, moving higher from there. So, from a near-term perspective, 800, 825 are the levels to look for. On the downside, 750.
And these are intraday calls, Kush, or would you buy and hold for the next few days if you had to?
So, structurally speaking, they aren't really as bad to hold structure, for the medium term also. But again, given the kind of expectation that's already built in, if the stop losses do get triggered, you're better off maybe moving out for the day and then perhaps consider a re-entry when, the dust settles.
Also, just one quick one on Wipro.
No, sorry, just before we get to Wipro, so, just the reason why I just wanted to lay it out for fertilizers, Samina, that the way this can work out well is if the fertilizer subsidy remains stable, right, at 1.9 lakh crore.
No reduction on that.
Yeah, so if it 1.9, because the prices of fertilizers have been falling due to national gas prices coming off.
Yeah, raw material prices have been coming off.
So technically you might feel that there should be a reduction, but if it is not there, and if it stayed stable, then surely the fertilizer stocks can rally.
And there is no outside chance of an increase in fertilizer subsidy.
Very unlikely looking at
I guess if that happens, these stocks would be hitting upper circuit.
But there is no fundamental reason to do that.
So as long as things remain status quo, it could be good news, remember viewers, for the fertilizer stocks. Technically, Kush has highlighted the counters that are looking good, but he's very clear to state that if stop losses get triggered, it's wise to take that losses off the table. Kush, one more which is non-budget related, but with a big stock that saw that big fall yesterday was Wipro on back of earnings. What we've seen over the last few days, if earnings reaction is obvious, if the stock sells off, you get a dead cat bounce of some sort the next day. Would you play for a recovery on Wipro today?
So, I wouldn't play Wipro in 99% of the cases.
Okay.
Yeah, I've maintained that, in the pecking order for the large caps also, Wipro generally comes forth even on a lot of fund managers and the fundamental guests that you speak to. Perhaps, there's this gap filling theory that could take Wipro to 550, but I'm saying not immediately, give it some time in the coming months. So I wouldn't really play for a dead cat bounce in Wipro.
Okay, that's the photo op you're watching, the famous picture you see every budget. Madam Finance Minister with her Bahi Khata. Can I just digress for 1 second on this Bahi Khata story, if you don't mind?
You said that to us at the interim budget.
But then now, not everyone watched it. See, Kush is saying he does not know. So this is for our viewers, not just the audience of Samina and Niraj. But so before Nirmala Sitharaman, the Finance Minister always carried a briefcase. Traditionally, through Independent India, the Finance Minister came with a briefcase. It was changed to the Bahi Khata to represent the traditional Indian ledger book, to say that this is an Indian nation that is presenting our budget and that is going to be our focus. So that's just a little trivia for you. That's the photo op we've been all waiting for. Now, Kush, we've been talking to you consistently on what you should buy. Let me ask you what you should avoid today. Because there is already been a run-up on certain sectors ahead of budget. I mean, pre-open, I'm seeing Railtel, etc. doing fairly well. What would be on your absolutely avoid list today?
So metals for sure. For the last few sessions, we've seen metals not do well. Yesterday was, a short covering day. Perhaps, those short positions getting reversed just ahead of the budget in case there is something, interesting that comes about. So metals will continue to remain a short. We've already mentioned the JSW steel as a shorting opportunity. I think today is perhaps the day when you take money off the table from the railways and the defense names, because in the past what's happened is around the election and the PSU presentation that the Prime Minister made in Feb is when the PSE index made its high. Today, the third big government-related event, plus we are seeing some negative divergences. So I think railways and defense is where you perhaps take some money off the table, if it's a trading bet, especially if it's a trading bet.
Mm-hmm. I wonder if the stocks in news today have moved. The likes of Federal Bank, Suzlon,
Coforge,
and Coforge.
And Gensol had a big deal win, so maybe there's a
Federal is up
reaction
5%, so that one has certainly done well. Suzlon another 3.5%, so that's done well. And Coforge,
even though those numbers were actually disappointing, I'm surprised at this stuff for Coforge.
Yeah, but and then the likes of Greenlam, which had actually a negative quarter in terms of performance, was slightly wobbly. 6% down. Poonawalla FinCorp, great commentary. Zensar. So that did well. And sorry, you were saying?
Zensar.
Zensar was actually negative.
So Zensar and Poonawalla should come up on your screen. Zensar 1% lower. Poonawalla FinCorp, great commentary on the con call. If you can get Poonawalla up, that one, well, flattish really.
Even MRPL to that list actually.
Yeah.
They reported numbers yesterday. Scient, 7%. That's a rough start on MRPL. Just to take you through the reason why that's happening, their profits are down 92% to come in at 73 crores. Revenue excluding excise duty has risen 10.5%. MRPL, so that was on your screen a minute ago. Scient numbers were actually phenomenal, but the stock is not reacting as positively as you would have liked. Jana Small Finance Bank, again, very good numbers. Even though their NPAs have risen, profits and NIs have actually improved. So if I can get Jana Small Finance Bank on the screen, it should be helpful. Flat, no reaction. So you have a few reactions, but all in all speaking, I think the focus of the street is going to be budget. Kush, just before we go over to Neeraj, while I know you're not recommending a trade on the index, what is an important range that viewers who are, holding position on the index should keep in mind today?
Brilliant. So on the Nifty, it's 24,200 on the downside and 25,800 on the upside. And Bank Nifty, very clear, 51,800 on the downside, and on the upside, you're looking at perhaps a 53,000. I'm rounding it off, for convenience, but 51,800 to 53,000 on the Bank Nifty.
Okay, having said that, Kush, very quickly I'll pin you down. Okay, maybe we'll take this post-market open. I wanted to take one top idea. Maybe we'll do it post 5 minutes are done. Remember, the pre-budget session largely expected to be quiet. Really surprised if there is a big trending move ahead of the budget speech, because this speech could have multiple things, including tax changes, which the street is hoping won't come in. So don't think too many people will take large bets. The start, 54 points or 65 points for the Nifty, about 0.25%. Nifty Bank about 1/3% as well. So, well, it's not a bad start, in line with what was maybe the implied open per se. Bring up Nifty IT once, and then let's get the heat map up on the screen. Nifty IT about 0.25%. Seems that it's an all green day. Let's just see what's happening to individual names. Pull up the heat map up on the screen. A lot of green, very little red. The top loser is Shriram. HCL Tech, Reddy's. So not too much. ONGC, we spoke about how some of the oil price pullback could impact some of the oil upstream names, but downstream could do well. Wonder if downstream stocks are reacting. We'll get to them in a moment. Ultratech, yesterday's key gainer, up another 1.5%. HDFC Life, FinServ, SBI Life. So insurance stocks are doing well. Is there something coming in the budget is the question. Grasim, about 0.75%. JSW Steel bounces back a little bit. Bajaj Finance, SBI. Essentially not too much in terms of news. Not that there was too much of news any which was on large caps ahead of the budget speech today. But seems like life insurance and maybe cement are the two pockets that are playing some green. Not too much of red, Tamanna.
Bajaj Finance ahead of their numbers. Their numbers are out today as well. So perhaps Ultratech and Grasim both were gaining well yesterday as well. So maybe that could be a continuation there, and I think an infra play. Let's look at how the broader markets have opened up this morning, and is there some caution coming in? Well, I would say better on the broader markets actually. The Nifty mid-cap 150 up about 0.5%. Let's look at what's happening with the small cap indices as well. So it's all in the green. Small cap very muted. The small cap index very muted this morning. Specific stocks that we've been talking about, they've been in our stocks to watch list. Let's see how they have actually opened. Federal Bank is the first. Manian is the boss. So they finally have a new boss, something that NDTV Profit had told you. It's a story we broke. 3.5% nearly up on Federal Bank. Suzlon, we look at. Suzlon had good numbers that the street was quite excited about. 4% up on Suzlon. That's earnings impact. A lot of it as earnings impact. I would just mark out Railtel and Inox Wind to see if you're seeing any kind of a budget position, budget play building up. So yeah, both those stocks up in the green as well. Oberoi Realty is another one. Numbers were out yesterday, liked by the street. The con call was also fairly positive. So you are seeing Oberoi Realty in the positive. MRPL, the numbers were disappointing. That's being reflected. Likewise for Zensar. So the first play, I would say, is more news-driven, results-driven, because remember, you have Q1 season going on as well, rather than any clear budget play. Wait and watch mode in the market before the dust clears and we know what is coming in the budget.
You're right, a large part of it is earnings reaction. You've also got a bunch of big earnings coming today. So from the likes of an HUL, a Bajaj Finance, Torrent Pharma, United Spirits, Indoco Remedies, ICICI Securities, to name a few, will report earnings today. The broader markets are doing okay as we see it, largely in line with the benchmark. There's not too much in terms of nervousness or aggressive short calls being coming in on the index. The broader markets up 0.5% in the mid cap and the small cap index trading flat. Coforge, interestingly, those numbers were disappointing, but the stock is reacting positively. Now, one of the reasons that could be the case is that they've signed their step-down subsidiary DPANA has signed an asset purchase pact with OptML. Maybe that is what's driving the counter higher, I'm not sure, but for now, the stock doesn't do too badly in early hours of trade. Signed numbers were good. The stock should see some sort of movement, even though the earnings, but the reaction may be muted because a large chunk of that gain is coming from other income, which is to the tune of 9 crores versus under 1 crore of rupees that the company had last year. On the Nifty 500, the top gainer, like Tamanna has already highlighted, is Suzlon with the 5% gain on back of very strong numbers. Tata Tele gains the second straight day, up 4.5%. Oberoi Realty is up 3%. Sporadically, some of these rail counters aren't doing too badly. So Railtel, second day running, sees a 3% gain. Tejas Network reported numbers yesterday. Today, the stock is up 3%. Adani Power is up 4%. Oil India, Torrent. So Power also is in a sweet spot this morning. Adani, Torrent, both trading with 2 to 3% gains. The big focus could be green, reducing carbon footprint. Stocks like Adani Green are seeing a big uptick in trade, 2% higher as we see it. Borosil Renewables is up 2.5%. that I said. Aisha Motors, Happy Forgings, Inox Wind are some of your other big gainers on the Nifty 500. On the sell side, MRPL is down 4% on back of weak earnings. Zensar numbers weren't impressive. The stock sees a 3% cut. Metals are doing badly. Some fertilizer names are seeing profits being taken off the tables. Specialty chemicals and mid-cap IT are seeing some weakness in trade. But largely speaking, it's status quo. No big runaway rally on any particular stock and no big cuts apart from, of course, MRPL because of earnings.
Yeah, but Suzlon, 5% now. So that one is clearly seeing that big move. Now, just before we get in Pankaj Murarka, Kush, quick 20-second answer. Any stock or anything that you would look trade at open?
I'll continue with India Glycols. I know it's down 0.5%, but we've spoken about it for the last couple of days. So India Glycols, 960 stop loss. Your targets will be 1100 and 1150.
Great. Okay, Kush, thanks for those updates. Of course, we'll have the presence of Kush Bora through the trading day to guide us through what the charts indicate. But great time to get in Pankaj Murarka, CIO of Renaissance Investment Managers on the show. Pankaj, great having you. Thanks for joining in on an important day, I might add. Would you reckon that the budget could be a make or break event, or you reckon that it will not have too much of an impact on the market at large, say for specific stocks or specific sectors?
Morning, Neeraj. Always a pleasure talking to you. I think, Neeraj, I would like to think about this budget as the 11th budget of a government which has been in continuity. Having said that, I think obviously this budget is coming on back of electoral setback. So it's a budget from a leading party with 250 seats. In pre-election, what one would have expected is a budget from a government with 350 seats. In either case, I think the budget will be very different. So I think this will be a please-all budget kind of a thing where, because it's coming on back of electoral setback, it will be a budget which will try to appease or address concerns which have come out to the fore in the election outcomes, and make sure that every section of the society gets something out of it. Having said that, while achieving those objectives, I think the budget will be a very balanced budget, and it will continue to focus on its thrust on investments and capital expenditure, and government will maintain the overall fiscal prudence targets in terms of fiscal consolidation. So I would think it's a budget which is the 11th budget of a government in continuity, and in which way I don't think so it will be a make or break in terms of markets. And I still go into this budget with a very positive bias in terms of outlook for growth and budgetary allocation and thrust on investments and growth.
Pankaj, we've had a good run even ahead of the budget this time, right? The Nifty's up 5% in the last couple of weeks. Do you feel a good budget is already factored into the markets? And some believe and argue that the markets do look expensive. Do you anticipate a big correction around the corner, be it because of budget or any other reason outside the budget?
Well, I take your point that India is an expensive market. We are the most expensive equity market in the world. But given the context that we are the highest earnings growth and the highest economic growth or GDP growth in the world, and probably one of the highest quality of earnings in the world, India will remain expensive. So it's unlikely that Indian markets on aggregate will trade at valuations which will be lower than global markets. Indian markets will command a premium. So to that extent, given the fact that we've had an extended rally in the last few months and probably over the last 18 months, market is prone or susceptible to a round of profit taking or a correction. But my view still remains that for investors who have a time horizon which is 1 year and above, any correction or any dips in the markets will be an opportunity to buy. So I will not be too concerned about short-term corrections or dips in the market, because from our perspective, we invest from a slightly more longer-term horizons. But a round of profit taking is possible because markets have had an extended rally. But I don't see a very sharp correction or a deep sell-off in the markets in either ways.
Hi, good morning. Tamanna here. Just wanted to get your take on rail stocks which are buzzing this morning. Let's pull up an Ircon. Let's look at what a RailTel is doing. All of them ahead of an expectation of a significant bump up in allocation in the rail budget, which of course sits within the larger union budget. Do you think that there is, a constructive view on the whole rail pack despite the run-up that has already come through?
Morning, Tamanna. I certainly think so. There's a great thrust from the one paradigm shift that I've seen, or I think all of us have observed in the approach to government in terms of steering the or driving growth in the economy was during the middle of COVID crisis, where the government realized that they need to significantly accelerate investments, and that's the only way to build growth. And in context of that, if you see over the last 4 years, India's capital expenditure or the central government capital expenditure has actually doubled from about 5 lakh crores during COVID. We are about 10 lakh crores or 11 lakh crores as projected in the interim budget. So obviously across the board, there's been a significant momentum or significantly higher allocation towards investments into different segments of the economy, be it roads, ports. Railways has been one of the big segments in that context. Railway capex has actually it's gone 3.5 times in FY20. When we hit COVID, central government's railway capex outflow was about 70 odd thousand crores, and this year we'll be clocking something around 2,50,000 crores. It's already growing at double digits as projected in the interim budget. So I certainly think there's a lot of momentum in the railway investments from the government side, and it ought to be because we are the second largest railway network in the world, and it's a network which requires massive investments across safety, infrastructure, passenger facilities, and so on and so forth. And we really need to build that. So I certainly think so, meaning railway, all the stocks within the sector have been one of the best performing stocks over the last year and a half. So obviously valuations in the sector have now caught up with the growth momentum and are rich. So one should, meaning be careful in terms of picking the right stocks. But I certainly see the momentum in railway investments and strong momentum for these rail companies continuing, undoubtedly.
The big focus has been that India has to reduce carbon footprint, the trust on green, clean energy. Now, how does an investor play this theme? Today, of course, stocks like Adani Green, Borosil Renewable, largely anything in the renewable space is doing quite well. But is that a mature way of investing in this sector or in this piece of clean and green energy?
So if you look at the whole value chain, there are 3 or 4 players in the value chain. Clearly, one of the players where the value chain starts from is the utilities who are setting up or who are investing into creating these clean energy facilities, be it a solar or a wind or green hydrogen and blue hydrogen and things like that. So clearly the utility is a starting point, and then you drill down to EPC companies or project companies which are executing these projects. And there, apart from the companies executing the projects directly on the contractual basis, there are other companies which are providing technology to these companies or services to those companies. And then eventually there is a huge transformation that or investment that needs to be made in the grid as well, because the grid for renewables has to be very different in terms of its ability and context. So I think across value chain, we have enough plays, and I'm sure over a period of time, we'll have more companies, meaning I know that there are at least a handful of companies which are lined up for IPOs over the next 6 months across solar, wind, renewables, and so on and so forth. So I think within the listed space as well, there are a fair number of opportunities, and I think that will only expand as companies grow their business and more companies become public in that sense.
Okay. Pankaj, just one quick thing on IT, and I don't quite remember what your take was 3 months ago, but the sector seems to have come out of nowhere and become a darling. The numbers mixed bag, the commentary mixed bag too. Are you constructive here from the current point of time?
Well, Neeraj, I've been positive on IT as a sector for almost now last 9 months, and obviously the sector did not perform for the last 8 odd months or so on. But we continue to remain extremely positive on IT sector because we think the worst in terms of the slowdown in US spending on IT over the last 2 years is clearly behind us. We see strong signs of things stabilizing, and more importantly, as rate cuts start setting in US, we see clients coming back and spending in US. So we think IT spends in US will start picking up from the second half of this year. And more importantly, from a slightly more medium term to longer term, I am of the firm opinion that the implementation of AI across corporates and consumers over the next decade will bring in or will usher in one of the biggest IT wave that we haven't seen. So my view is that this spending cycle in IT over the medium term as AI-driven projects accelerate will be much bigger than the biggest wave that we have seen so far, which was the internet wave in the mid 90s and late 90s. I think probably we are in for a much bigger and a very stronger IT spend cycle over the next decade.
Right. Pankaj, please complete what you were saying.
No, so I was just saying that I'm a very strong bull on IT, and I think it's a story for the decade.
And it has been, even historically, the last decade, in some ways, IT stocks have actually not disappointed investors. One space that became the biggest bet when we talked about Modi, the Modi government, there were Modi stocks, anything to do with PSU caught the fancy of investors. PSU mutual funds have outperformed by over 100%. But with the increase in market cap in the recent past, some of these counters are not investable anymore. Would you agree with me, or would you continue to play the PSU theme for the next year or two?
No, we still have ownership in PSU. So one, clearly the kind of stellar performance we've seen in PSU stocks is also coming on back of the fact that these stocks had a decade of underperformance in the last decade. And at the starting point of this rally, these stocks were extremely underowned, and in terms of valuation, they were extremely cheap. You had a State Bank which was trading at 4 PE, and a lot of you had companies like REC and PFC which were trading at 0.4 times their 40% discount to their book value or their net worth, and which is where meaning what we've seen is a mean reversion where these stocks are reverting back to their mean valuations, longer term mean valuations. We still believe that these valuations, while stocks have done pretty well, but valuations are still below their long-term averages. So we still believe that especially in case of financials, when we talk about PFC or REC or State Bank, we still think that there's a valuation upside in those stocks apart from earnings growth that these companies will deliver. And obviously, so we still continue to own PSUs, and we are a believer in the whole PSU rally in that sense. And I think our view is that this whole PSU rally will continue.
PSU rally will continue, says Pankaj Murarka. That's an important point because, this whole narrative of that the PSU story is oversold, overbought. We'll have to see if that really plays out, and that's an interesting call right there. Rajesh, exports, Borosil, Renew. Look at some of the stocks that are doing really well this morning in the pre-open session. Sorry, the pre-budget session. Even as we're waiting for some kind of clarity. What is clear is the renewable alternate energy space is definitely buzzing. We're going to take a very short break, but on the other side, Radhika Gupta, MD and CEO of Edelweiss Mutual Fund, joins us for more. Stay tuned.
Driver of India's growth. The Indian economy, development of all regions, technologies and innovations. Inflation is moderate. Investments are robust. More comprehensive GDP.
एक ही लक्ष्य, नेशन फर्स्ट, एक ही इरादा, 2047 विकसित भारत।
a powerful driver of India's growth. The Indian economy, development of all regions, technologies and innovations. Inflation is moderate, investments are robust, more comprehensive GDP.
Minutes and a few seconds counting to the big announcement. So why should you stay with us till this happens? Because you are going to find out exactly what to make of those announcements, what is expected. And yes, we're also going to give you the budget trade of what you should do ahead of the big event. Well, joining us now in the conversation is Radhika Gupta, MD and CEO of Edelweiss Mutual Fund. Radhika, great to speak with you on NDTV Profit on budget, pre-budget morning. Excellent to have you here. And I'm going to start with something you tweeted out yesterday, actually, which I found very interesting, where you've talked about what the economic survey says on derivative volumes. And I thought that was, I was keen to know your view. You've said, I have seen people in their 20s saying they don't need to work because they're busy doing F&O. Young women who say their lifestyle and handbags are funded by trading gain. Economic survey highlights this in some very strong language. Other regulators have also rightly and repeatedly warned us. It is time something is finally done about this form of liquidity that is both unproductive for the economy and dangerous for the individual. Now, that is a very interesting stance, Radhika, and I wanted you to elaborate on that. When you say it's time something is done, what do you mean? What do you want to see done?
So, firstly, I think before I say what should be done, and I'm sure people have, and I don't think the only answer is, going to be found in the budget. The stance that I have on F&O trading by individuals is a stance that seems to be very popular, and rightly so. It's been, SEBI chief has alluded to this in the form of non-capital asset formation, non-productive kind of liquidity. RBI governor has talked about this. Economic survey has used some extremely strong language. I think there are two things that can be done. One is a budgetary matter, which is potentially some increase in taxation on STT or any kind of taxation that is related to short-term capital gains, not long-term capital gains. I mean, STT on F&O looks like the expected, outcome or anticipated outcome. SEBI, I think, separately will look at increasing the lot size because there's nothing wrong with F&O. F&O is for institutional use and for those who know how to use it. But the average 25-year-old using F&O and using options to, lose more than they have is a problem. So increasing the lot size. So some of it I expect from budget, some of it I expect from outside budget, but it looks like a coordinated mechanism at the highest levels to address this problem.
So let me then ask you one more question, which is a problem, quote unquote, from a regulator's view. And here's the RBI governor talking about the diversion of savings into mutual funds rather into banks is going to be an issue. Now you are on the other side of that quote-unquote problem. How do you look at that debate? Because then that debate also says that people have a right to choose what to do with their savings, right? People don't want to put it in FDs anymore. And the RBI governor says that could structurally be an issue for banks.
Yes, I think the RBI governor is making a point that loan growth should not run ahead of deposit growth. I think that is the problem that is being pointed out. I think it's less of, and why is deposit growth not happening? That's a separate issue. But the point that the RBI governor is making is that systemically, if loan growth, if credit growth is running ahead of deposit growth, which it may be seeming to, and we have seen multiple banks earnings calls talking about challenges in deposit growth, then it's a structural problem. I am not sure I completely buy this argument that all FD money is going to mutual funds and banks, to mutual funds and equities, because finally money is moving back to the same pool. By the way, most of the large mutual funds in the country, I think of the top 5, 4 are bank owned mutual funds. So it all moves back to the same pool. And I think the FD investor is a little bit different from the the equity investor. So I don't know if I buy the argument in totality. A small part of savings, are they moving to investments? Yes. Is that a natural process of financialization that has happened in China and the US and is happening in India? I very much think so. So I do think people have a right to decide how they want to save. And finally, I think from an India point of view, money going into long-term equities, money going into SIPs has the best multiplier effect on the economy. This is productive assets. This is domestic capital formation that helps India when FIIs redeem money. So I don't think that, I think RBI is pointing out a very different issue, and I don't think MF is the cause of all people not doing FDs.
So then what is the cause, Radhika? I mean, I think SBI has gone on record and said that rationalization of taxation on fixed deposits in line with other asset classes could help. If all the money is not coming into mutual funds or equities, where is the money going? Because FDs are dropping, consumer spending is dropping, mutual funds has gained a little bit, but not all of it, right?
Yeah. And by the way, on this rationalization of tax, if I can just make a point, till last year, debt mutual funds had capital gains taxation. Last year, that was changed because it was believed that debt mutual funds finally generate interest-bearing income. Income from interest, that should be on parity with FD. So it's a little bit of a sticky argument to go back and now say, hey, deposits are dropping, let's make FD on par with equity. Then what happens to debt mutual funds? This is a tad bit of a circular argument, isn't it?
Radhika, talking about taxation, I don't know, some quarters of your industry are of the opinion that after what we saw on debt capital gains last year, it could be arbitrage funds that could see a change of taxation. Of course, arbitrage funds have had phenomenal returns. I mean, I think a lot of money is going into arbitrage funds, even if it is long-term equity money, right? So it's become a really good parking place in that sense. And maybe some part of the short-term FD money is also coming into arbitrage funds. Is that an opinion you stand as well with, that maybe some tweaking of taxation in arbitrage funds is likely this budget? And if that happens, what could be the impact?
No, firstly, we run one of the older arbitrage funds in the industry, and the whole arbitrage category is 1.5 to 2 lakh crores. And if you look at the money that would have come in the last year, it would have been maximum 60, 70, 80,000 crores. So I don't think the entire pool of FD money is going to arbitrage funds. In fact, I deal with many treasuries. Some of them do arbitrage funds, but the whole world doesn't change their FDs to arbitrage funds. Now, this arbitrage fund taxation tweaking, I've heard of this. I'm not saying it can't happen, but it's a little bit tricky because arbitrage funds are not recognized anywhere in the Income Tax Act, right? The Income Tax Act refers to equity funds and funds that have 65% more of equity exposure. Now, if you have to tweak this, you have to say that equity exposure has to be net equity exposure. It can't be hedged equity exposure. Then it just doesn't affect arbitrage funds. It affects the whole balanced advantage fund category, the equity savings category, the multi-asset category. So the issue, if it has to be addressed, is going to be a lot more complicated than arbitrage funds. I don't think arbitrage funds are such a big problem or such an outlier for the whole world. They also have daily mark-to-market. So I don't think they're comparable to FD also in entirety.
Radhika, sorry, may I come in? So, Neeraj here, of course, good morning. But can some tweaks be made? I know you said it's not easy, but not entirely out of the box. I think the argument coming in is not from a perspective of maybe just that they are comparable to FDs, but because deposit growth shore up is not happening and arbitrage funds are a great option out there, but being taxed at a much lower rate. So maybe bring them at parity with FDs and let the investor then decide whether they want to choose the arbitrage fund route or a bank deposit route. So while not easy, could it be possible though?
So the way you would have to do it, technically in the Income Tax Act, Neeraj, what arbitrage funds enjoy is equity taxation because they are 65% equity. The Income Tax Act doesn't refer to any class of mutual funds. It doesn't have a call out for arbitrage funds. What you would have to do, if you had to do this, is amend the Income Tax Act to say that, boss, it is 65% equity, net directional equity exposure. If you so did that, it would affect arbitrage funds. It would also affect the industry's very large category of balanced advantage funds and a bunch of other things. So that decision, if it were to be done this way, would have multiple different ripple effects. Unless the Income Tax Act called out arbitrage funds, can be done is a little unlikely in my view. And I don't think, as I said, the pool is not so big for anyone to care.
Okay, so you were actually saying that it is very, very unlikely for this to happen. Very interesting, because of the complexities involved. Okay, this is live footage, of course. The top team, and of course, the finance minister meeting President Murmu as well. So we'll keep on getting you these updates. Well, some glimpses of that meeting as it had happened. Not exactly live footage, but some glimpses of the meeting as it happened. Okay, Pankaj Murarka is back with us. And Pankaj, we were having this conversation with Radhika around whether some tweaks in taxation can be done and let's get Radhika on the screen as well, but whether some tweaks can be done to arbitrage fund taxation to bring parity with bank deposits, because bank deposits are hurting, and maybe this is one route when it can happen, essentially tax parity. Radhika has put out very beautifully that why is it difficult. Now my question to you is, Pankaj, if indeed, is the budget a place, or does the budget have the tools to be able to do something, independent of whether it happens to arbitrage funds or no, to do something to help bank deposits get shored up? Or is it not the purview of the budget, you think?
Well, Neeraj, from my experience in the mutual fund industry, and I've spent long years, there's always been this constant debate or sort of argument by bankers that mutual funds are eating into their pie. Well, coming from a mutual fund industry, I have a bias and I don't believe that is the case. But given the circumstances where we are in, and there's actually been a change in approach by RBI as a regulator in terms of they wanting banks to have deposit growth higher than loan growth, and which is actually constraining credit growth or credit disbursement in the economy. So I certainly think that there'll be some swaps for bank deposits for reviving or getting higher deposits in the system, or retaining for bankers, or getting higher deposits or retaining deposits in the system. The fact is that during COVID, we did a fiscal expansion, and because of which the government borrowings are expanded, and the pool of savings that is available, household savings that's available for banks and mutual funds has become lower in that sense. And as government consolidates and the economy grows, I'm sure the household savings will increase. But for the time being, given the fact that the government has done a fiscal expansion a few years back, and given the fact that we are in an environment where household savings has been somewhat under pressure, bank deposits have banks have been facing challenges in raising deposits. And to that extent, I think we'll see some swaps coming for bank deposits in the budget.
Thank you, Radhika. Thank you, Pankaj. Great chatting with you all this morning and helping our viewers build perspective on what could be expected from this much anticipated budget. Well, let's quickly change focus and move away from equities to economy, because truly that is the cornerstone of our budget. Tanvi Gupta Jain of UBS India joins in now with what she expects from this much anticipated event. Tanvi, hi, good morning. Thanks for joining in. Tanvi, it was a few months ago that the government got the cushion of the RBI dividend. Do you see the possibility of a fiscal deficit tightening to 5% or sub 5%? So largely, what sort of an impact are you expecting this bonanza to have on the budget?
Thank you. Today's announcement is definitely exciting. We do expect the government to show a better fiscal consolidation than what they reiterated as a part of the interim budget. So if the deficit target was 5.1% for FY25, we have a number which is somewhere around 4.9 to 5%. So definitely the bounty of RBI dividend transfer, which was much higher than expected, will be used to achieve both the dual objectives. So we do expect fiscal consolidation at one part, and at the same time, we do expect this budget to focus on social welfare spending. So that bounty could actually be used to meet both the objectives and at the same time show a budget which is on the consolidation path.
Good morning. I was just going through a report that you put out a few weeks ago where you have said you're expecting in the budget, a support for the rural sector, and you are looking at an improvement in the rural economy, a modest improvement in FY25 as well. Now, how do you see that support coming in? And I think from the report itself, you think it's going to be within the confines of the fiscal space that the government has. What is the form and nature of the support that you see?
Sure. I think it's very interesting because we have seen a very mixed recovery in the rural economy since the pandemic. I mean, it's up, down. And the high frequency data that we track are already showing some signs of a green shoot, which is actually quite positive. What is interesting is that when we say higher fiscal support, it is both the central government as well as the state government. If you look at most of the state governments which have announced their budget or which have gone for elections, they have promised that they are going to increase spending towards the rural economy. So when I say spending increasing towards the rural economy, could include the cash transfers to farmers, bonus over minimum support price, a farm loan waiver, in addition to the capex spend. In today's budget specifically, I think a couple of things that should support rural demand. The first will be the double-digit growth, which we are estimating for the central government spending, because construction in India is the largest generator of jobs outside of agriculture. Second, we do expect that if you look at the rural housing scheme, the government had already increased the outlay as a part of the interim budget by almost 70%. What will be more interesting if the subsidy which is given to convert your house to a pakka house, what we call, which is around 125,000 rupees. If that number goes up to say somewhere around 200,000 rupees, I think that again is giving some support to the rural demand, but within the fiscal boundary. Other things which I will be looking out besides that will be anything on rural jobs, rural housing, more specific steps, something on the lower income tax rationalization. And lastly, obviously, what is the number of the central government capex spend? Is it going to be similar to 17% growth what they targeted as a part of the interim budget? Or is there probability or some possibility that that number could be revised slightly higher, maybe towards 20%? So that is something I think should support the rural economy going forward.
Well, a very effective way of actually not letting the rural spends go on discretionary consumption, but maybe towards some bit of capital expenditure on housing as well. Interesting, Tanvi. The other part of capex that I want to, or actually the part of capex that I want your thought on is whether the government sticks to the number given in the interim budget, given the fact that there is an RBI bonanza that has come its way, but it has these spends on rural to focus on. And does it bring about interest-free loans to states? Because there is only as much that central government can do. Some of these capex better be done by the state government. So do you expect some major announcement on central allocations to state governments for capex done conditionally?
Sure. So if you look at the interim budget also, they transferred somewhere around 1.3 trillion to states as an interest-free loan for capex spending. Obviously, a function of certain conditions being met by states in terms of allocation of money to the states. Now, if you actually look at the pure capex spend by the government, say in the infrastructure sectors, you realize the three sectors, which is basically your highways, your defense, and your railways, almost account for 2/3 of the core capex spend by the central government. And I think we have already seen a massive increase in the roads and railways over the past few years. So I think incrementally it will be very difficult for the government to be able to execute the actual infrastructure spending increase on the core sectors. So I guess the easiest way out is to give that money, allocate that money to the states and ask them to spend on a much wider variety of capex. Because if you look at the actual real spending on capex actually happens at the state level. So whether it's irrigation, where a big chunk of states' capex spend ends up being shown, I think that will have a much incremental impact on the rural economy and overall on the capex spend versus only spending at the sector's level.
Okay, live pictures of Finance Minister at Parliament now, less than an hour to go before the budget announcements continue and the actual session starts. So this is technically the monsoon session. It's become the budget session because the budget is being presented. That happens once in 5 years because of the general elections, so that entire cycle changes. But this is also the start of a session which is going to be very, very crucial. Today's focus and work of the day in Parliament is the budget primarily. But remember, the opposition is going to come geared to talk about a host of issues, including the NEET controversy and all of that. You might see some noise right in the beginning when the budget is being tabled. That's her entire team, the A team of the Finance Minister. Remember, you will be hearing from a lot of those secretaries on NDTV Profit 5 p.m. onwards, where all of the fine print of the budget will be discussed in great detail. And a lot of those faces that you saw there with Finance Minister Nirmala Sitharaman will be on NDTV Profit. So those are going to be some of the big voices to watch out for.
Indeed, and in the meantime, the markets are as flat as a pancake. 24,500 is being respected. The Nifty is down about 3 odd points. Tanvi, another quick one on collections. There's an anticipation that tax and non-tax receipts could be higher than what was penciled in the interim budget. What is the number you're working with in this budget, and also anything on divestments? You know, we've not seen the companies getting divested, but assets have been. Where do you think the divestment target will stand? What could be the commentary around that be, and what will be good?
Sure. So if you look at the divestment, if you look at actual performance in FY24, it has actually disappointed even the revised estimates of the central government. I don't see too much of a change in the divestment target for FY25. They laid out a number as 500 billion rupees. I think it will be largely similar, but we really have to see how much progress we are going to see on divestment. There's always a risk of divestment falling short of the target. And this time around, we are already a quarter late because of election. So how much progress we are actually going to see in the remaining 8-9 months on the divestment will be key to watch out. I would see the RBI dividend transfer basically indicates that the non-tax revenue will definitely, the growth will surprise on the upside. We see 30 basis point as a percentage of GDP, where the non-tax revenue collections will be higher, which is almost $15 billion or more than 1 trillion rupees is what we are budgeting. On tax buoyancy, I think that is interesting because if you realize that after the pandemic, the tax buoyancy has actually improved to somewhere around 1.4. Pre-pandemic, the tax buoyancy in India used to be somewhere around 1.1. And that increase in tax buoyancy also happened because of formalization and kind of, number of people coming into the tax net going up and kind of cracking the gaps in the system. But I think we are almost nearing the peak. So we are estimating a tax buoyancy somewhere around 1.25. So around 13.5% the gross tax collection growth that we will be estimating in today's budget.
Okay, so a lot to watch out for. Thank you so much, Tanvi, for joining us. And we'd love to have you back once the budget announcements are done to sort of compare notes to everything that you expected as well. The UBS view over there. We'll take a very short break, but we're coming right back with what call you should take on the Bank Nifty at this point. Kush Bora is with us. He will join with that call. We'll also have a deeper dive on the Federal Bank story. That stock is moving as well. So all of that, even as 1 hour to go to the big event. Stay tuned. All the actions right here.
Driver of India's growth. The Indian economy, development of all regions, technologies and innovations. Inflation is moderate, investments are robust, more comprehensive GDP.
एक ही लक्ष्य, नेशन फर्स्ट, एक ही इरादा, 2047 विकसित भारत।
Welcome back. You're watching the budget special coverage on NDTV Profit. Now, it's 10 a.m. or just about, actually it is 10 a.m. and the markets are very flat. Then Bank Nifty 2 is just about 0.1%. So no movements there. Now, Kush Bora is with us. Kush, if I were to ask you for a trading recommendation, the budget is just an hour away. Would you take any trades right now or would you sit on the sidelines? And if so, what trade are you taking?
So, Neeraj, I would. I mean, trading doesn't stop, rain or shine. So I would take a trade. I would say what we've seen so far is a storm in a teacup kind of a volatility where the markets have come off the highs. Not too much, of course, because of the impending event, just around the corner. But the setup is encouraging or rather suggesting, a short call on the Bank Nifty. So we've just initiated a 52,000 put buy for the 24th July expiry.
Sorry, buy 52,000 put
52,000 put on the Bank Nifty. And the targets are 550 and 700 and a very strict stop loss at 300. The call option writing that I was referring to before the market started has actually picked up. So if you see even those odd strikes of 50 to 400, 50 to 300 are seeing some writing. So at least for the near term, I think this pressure could continue. But as I said, given the event, have a very strict stop loss at 300, but the targets remain 550 and 700.
Give a very quick call, Kush, if you can, on Federal Bank. The stock is up 2.5%, but it's off the highs of the day.
Federal Bank, Bank of Maharashtra, some of these names have had a very exciting run. Just the kind of emotional gap up that we've seen today will perhaps be corrected, and we are seeing a bit of that. The stocks off from those 203 kind of highs. The gap is around 197. We'll perhaps see that gap filled, but I think in the near term this momentum could continue. So I will remain a buyer as long as 195 is held, and my stop loss will be at 190.
Okay, I just quickly want to see what's happening with Kotak Mahindra Bank, because remember when the news first broke out, Kotak Mahindra Bank was impacted negatively. I think that has pretty much been priced in. That's flat, steady right now at 1758. You have a call on Kotak?
If I could just give a comparison, of course, it's not an apple-to-apple comparison, but the Kotak Mahindra stock is like the Wipro for the IT space, right? A lot of other names stand before it before, you go and buy Kotak. So for me, ICICI, Axis still rank higher. So I wouldn't really, venture with Kotak just yet. Just for the technical levels sake, I think, there's a good support at 1700, and on the upside, the 20-day moving average of 1820 will be the resistance.
Okay, I like that title. Kotak Mahindra Bank is the Wipro of the banking space. All right, but we're talking about Federal Bank, and that story is a story which was broken on NDTV Profit. That news break has now been confirmed. Of course, the stock is buzzing in trade after the much-awaited appointment of KVS Manian has come through. The RBI has okayed his appointment as MD and CEO of Federal Bank. Pragati joins in with more. Pragati, give us some context of why this was an announcement which was being awaited so keenly for Federal Bank.
Morning, Tamanna. Yes, so as you can see, while the markets are largely flat, but Federal Bank shares have inched almost 3% in the trade. In fact, when the market opened as well, the shares hit their all-time high of approximately 5%. So the stock is definitely reacting to KVS Manian's appointment, which came in last evening because RBI approved his appointment as the bank's next MD and CEO for 3 years. Now, the news was doing rounds since February when we broke the news first that he may be tapped as Federal Bank CEO. The bank's other two candidates, or the most front runners for this race, were Harsh Dugar and Shalini Warrior, who were the bank's ED. But as we had reported, KVS Manian, the veteran banker of Kotak Mahindra Bank, who was in fact also the joint MD, when he stepped down, he's now been appointed as Federal Bank CEO. In fact, brokerages have also reacted to this news. For instance, Nomura has said that the new CEO appointment will continue to drive re-rating for the stock. They also view this development as positive. It also brings an end to the uncertainty around management succession, because for any lender or any bank, the management succession is a very key driver for the future growth of the bank. And now, since the appointment has come in, that uncertainty has ended. And finally, once Mr. Shyam Srinivasan, the current MD and CEO, his term ends in September, Mr. KVS Manian will take over, who's anyway a veteran banker and has experience in corporate banking and several other segments. Back to you.
Okay. Pragati, thanks a lot for that. Thanks a lot for getting us that update. Now, less than an hour for the budget speech to begin. Great set of guests to try and analyze what should you keenly watch out for. We are counting down to the big R. Mihir Vora, CIO Trust Mutual Fund. Andrew Holland of Avendus Capital Public Markets with us on the show. Gentlemen, both of you, thanks so much for taking the time out. Mihir, I'll start with you first. What is it that you believe would be the cornerstone announcement in this budget? Would it be around the fiscal deficit glide path, which probably is a given, or could they better it? Or could it be something around capex announcements or consumption?
Hi, good morning. See, the good thing is that the finance minister has enough levers to tweak around the numbers if she wants to, focus on any priority. For example, there is enough if you want to increase capex. There is enough leeway available if you want to increase the rural support, because there has been a little bit of acknowledgement of the fact that the rural economy recovery has not been as great. And we have also seen some states going in for measures to help the rural population. So as I said, there will be different focus areas. The economic survey also provides a few pointers. As you rightly mentioned, capex is important, but I think the economic survey kind of alluded to the fact that the government has done its bit, and it's now for the private sector to start chipping in as far as the capex is concerned and job creation is concerned. So I'm hoping that there might be some encouraging signals for the private sector to further, create more jobs and put in money into the industrialization of the country, as we know, including Atmanirbhar, etc. So that's one focus area. Second is the rural. I think we may see some more spending, not necessarily as direct subsidies, but on areas like rural housing, on areas like minimum job guarantees, etc. That is possible. And the good thing is, as I said, there is the RBI dividend as a leeway. Tax collections are better than expected. Nominal GDP growth is likely to be higher than what they estimated in the interim budget. So there are lots of places where there is additional resources available to juggle these different priorities.
Okay.
Andrew also with us this morning. Andrew Holland of Avendus Capital. Very good morning to you, Andrew. And on the scale of anticipation, are you hot, cold, or just right, medium? What are you expecting out of the budget in terms of anything that is really going to move the marker, or like we've been saying this morning, more of the same? And do you think there will be a resurgence in those typical budget stocks that people have really not been looking at?
So, Tamanna, I agree with your more of the same. That's really what the market wants. And therefore, the kind of themes that we talked about previously, whether it's hospitality, premiumization of beverages, infrastructure spending, renewable energy, all of those, defense sectors will all continue to do well. But, you've got to ask yourself, is it priced in? And, if it's more of the same, you might have, a bit of a rally if there's no tax changes. But given RBI noises, SEBI noises, and the economic survey, either they can talk the problem or they do something about it. It feels to me as though they might want to do something about it in terms of moving money back to the banks, because you can't fund all the expenditure. And you're talking about private capex picking up. You've got to have the banking sector in a position to be able to do that. And if they're finding that their pressure on margins is there because they can't get enough deposits, it's going to slow down the growth of the economy. So that would be the negative, I think, if they follow through on their words.
Okay. By the way, news flashes about Asian Paints raising prices again. So just in between this macro conversation, keep that in mind. Second price hike in probably 15, 20 days. So the paint companies are certainly going out there. Andrew, so if it's more of the same, would you be happy with all the measures announced in the interim budget? Or what are the changes that you're watching out for? Because between the interim budget and this budget, there's this RBI bonanza that has come the government's way. They'll do something with that money.
True, and I think that there's they can increase the capex themselves, which would be fine. They can put more towards rural expenditure. I think housing would be an area which I think they should focus in on, because it has multiplier effects across many different industries in that respect. So that would be where I'd see some incremental kind of expenditure from the government. But fiscally prudent is what they have to be as well. So I don't think they want to kind of throw everything into expenditure. And I think what they really need to kind of focus in on is getting the rural economy going. I think housing is going to be one of it. But yes, it can increase the capex, but I don't think it has that material impact on the markets overall. I think that the problem for the market at the moment is priced in everything apart from any tax changes.
Could be a negative. Okay, interesting. Mihir, some numbers here. Receipts versus expenditure, right? So, and let me try and focus on receipts. The indirect tax collections have been very robust thus far. But if indeed there is a cool off in corporate activity and the tax collections go down over the course of the year, what is it that the government can do on the receipts side to try and shore this up? Because we know that this government is not necessarily very keen on divesting state-owned enterprises, maybe individual assets but not enterprises. Where do you think the numbers will be watched out for on the receipts side?
See, first of all, the probability of corporate tax collections not meeting the full year budget target is quite low, I would say. Couple of reasons. One is that in the interim budget, they've only assumed about 10% nominal GDP growth rate. We are already, closer to 11.5. So there is, an upside potential there. Second is that corporate tax collections are no longer the largest of direct taxes anymore. Personal taxes are actually more than income tax. Personal income taxes are more than the corporate tax collections, and those tend to be less cyclical than the corporate taxes. So I think even if corporate taxes were to not grow at a rate assumed in the interim budget, I think there is enough leeway on that. So I would not be too worried on that front.
Mihir, just talking about the corporate tax, one of the key demands coming in constantly has been to retain the corporate tax rates at 15%. And the counter in that debate has been that have corporates actually created jobs, increased manufacturing, increased capex with all of that lower tax rate given, or did they use it to line up profitability? And that, of course, is a broader debate. But speaking about that, do you think that on the corporate side, what would you be looking at in terms of that boost to capex, private capex and manufacturing, and how key does that become?
So I think the economic survey gives some answers. It clearly mentions that the government has done a lot of heavy lifting for capex in the last 3 years, and the private sector now does need to chip in. And as you rightly mentioned, the economic survey also points to the fact that corporate profitability has gone up substantially, but most of the investments are lagging, so to say. So I think from the corporate point of view, two things need to be done, and the first one is also one part of the economic survey which I read is that while we have improved the ease of doing business versus our own history, there is a lot that needs to be done in terms of absolute ease of doing business. So whether it's in terms of approvals or tax confusions, etc., businesses still need to feel more confident about how they are going to go about doing business in India. So I think tax is not going to be a tool to encourage or goad the business investments anymore, because we are already at quite reasonable levels. There is no space for cutting taxes anymore. However, one should expect more on the PLI, because the production link incentive scheme has been successful. They tried it in a few sectors with good success, and the government has been quite open-ended about it and open-minded about it, to the extent that more and more sectors are included in the PLI schemes. The economic survey points to the fact that we need to create 80 lakh jobs a year from now till the next 10, 15 years, given our demographics, etc. And manufacturing can be the only way to go. Manufacturing, construction, real estate, and labor-intensive industries are the only way we can create 80 lakh jobs. It can't happen in services alone. So to that extent, I would expect more trust and more focus on PLI schemes and the Make in India or Atmanirbharta theme.
I'm going to depart for a second away from the budget, even though we're 45 minutes out of the announcement. And Andrew, I want to come to you first on this, and then Mihir, I'll get your view as well on what we've been seeing so far on Q1. Because after the budget excitement is done and dusted, we'll see a lot of plans for the next several years, some allocations, tinkering here and there. What we're left with in terms of solid factual evidence of what's happening with profitability are the numbers. Andrew, would it be fair to say that Q1 so far, apart from a few exceptions, and I think IT is the outlier, has not been the best performing or on par with Street's expectations?
I would agree. I mean, it's been lackluster. If anything, I'm seeing earnings, below expectations, below the market expectations, and therefore you're seeing some cut in earnings. So let's just take the budget out of the picture. Whether it goes up or down is immaterial. For afterwards, we go back to the fundamentals, and the earnings is not supporting the market valuations at the moment. And our view has been that we'll probably see something like 15% earnings growth this year, and maybe the market would move up in line with that. The market is already up 10% this year, so you've really got little to play for in the next 6 months, unless two things happen. One, the government increases the capex and those orders go up very quickly, and our private capex picks up, because that does have a multiplier effect, and that would probably mean that earnings can be upgraded in the first part of 2025, and that would keep the market going towards the second half of the year. But without that, there's very little to get you excited about the market in terms of earnings growth given the first quarter so far.
Mihir, same question to you. All said and done, at the end of the day, Q1 has been a little lackluster, to quote Andrew.
Yes, even in IT, I would say that while there have been some upgrades in some of the guidances, we're still talking about, at least as far as the large companies are concerned, we're still talking about very low single-digit kind of growth, at least for a year or so. So it's not that exciting. Banks have faced some pressure on deposit growth, so that might actually end up curtailing the overall lending growth also. So those are some of the flags that probably the finance minister would have in mind when presenting the budget. You might see something for the banking system also, because deposit growth does seem to be a bit of a struggle.
I wonder what can be done to shore up deposit growth, and comes back to the question that I asked Radhika as well. Radhika Gupta, when the governor says that money is going, instead of going to the banks, is going to mutual fund industry. Mihir, that's good for you, but is it good for the bank? So when you say that something could be done to shore up deposit growth, like what? I mean, increasing interest rates could be one measure, but that's in the realm of the RBI.
Well, you could have for the middle class, hike in the slab rates, hike in the exemption levels of income. Plus, you used to have, we also have the interest ceiling, maximum ceiling up to which you can have interest or rather tax breaks on your interest income. So those kind of tweaks can definitely be done. But overall, the mutual fund industry, while it's been growing, I think it's more a function of percentage of household savings rather than mutual fund versus bank. We must also realize that a lot of savings are actually going to physical assets. So I don't think it's mutual funds versus banks. It's physical assets versus financial savings. That's the debate.
Andrew, now just trying to talk about what could find a sure shot mention. We know defense, railways, power, for example, will certainly find a mention because these are sectors that the government has a focus on for a number of years. Let me start with power. Where do you think, or what's the quantum of thrust do you think? Could there be a surprise there, or is it a present continuous? And will the markets have a positive takeaway from there? Because it's a very wide ecosystem of stocks which are listed, which could benefit or not from whatever is announced.
So the question is for...
Okay, yeah, Mihir, you can start. Then I'll get Andrew's view. I'll ask this to Andrew, but Mihir, maybe you can start first.
Sure. So see, as far as the power sector is concerned, we have the PSUs and we have the private sector. As far as the transmission, distribution, generation ecosystem is concerned, most of it is in the central or state government ambit. So those outfits are anyway spending the way the government expects them to. So it's not a part of the budget really. The budget probably has more impact on areas like defense, railway, where there is a direct allocation, roads, etc. For example, where there is a direct allocation. So on the power sector per se, the influence that the government is having would be more on the policy front, and for which we've seen various measures for renewables. We have seen adequate incentives for even local manufacturing of a lot of components, etc. And the ordering in the power sector has picked up both in the private sector as well as the public sector space. So I don't expect specific capex linked announcements for power. It's more on the policy front that we can expect something.
Okay, Andrew. Same question, is power the space that you would watch out for the most, and within that ecosystem, therefore, what do you like, or are you expecting better announcements in maybe defense, railways, what have you?
No, I'm really not expecting anything more from what the interim budget said. I mean, there might be tweaks here and there. I would agree it's more of a policy in terms of power of how they kind of give orders. I think there's still a deficit, so maybe those companies involved in kind of providing power from wind might be kind of the areas that you get more focus on, more incentives for that to happen going forward to help with that deficit. So that's what I'd expect to see. But I'm really not, for the interim budget, I don't see why they need to do so much more. We're all happy with that interim budget. I think the question will be how much more towards rural spending, where they're doing it. If it's towards housing, that's great. Maybe one sector which they'll look at a little more closely is the hospitality sector, because again, it's a big, in terms of employment, it's a big area. So maybe they could do something for the hotel industry as well, to get that picking up. It's going very well, but to continue that kind of move towards more employment in the services sector as well.
Look at Easy Trip this morning, about 7% up. Since you spoke about hospitality, Andrew, Indian Hotels was the big winner yesterday. Chalet seeing a bit of profit booking, but let's quickly see what's happening with Indian Hotels as well. That was the big winner. A bit of profit booking there as well. So yeah, you could see impetus for there. But I just want to take a second to talk about Borosil Renewables and what's happening there. 11% up, has been on a steady stream run since this morning, and no specific news. So perhaps a clear budget play over there for a boost to alternate energy, even an Adani Green running up. Suzlon, of course, fantastic numbers, but nevertheless also a big push there. Mihir, this is now a longer term theme, right? And we'll be talking about this next budget also, possibly at the budget after, because alternate energy is a stated goal and it takes time to really push through. But what would be the top bets in this space if investors want to ride that wave?
Renewables is a vast area, and while we have huge amount of investments which has been committed by the private sector in solar, in wind, of course nuclear is also coming up as a thrust area. But generation is only a small part of the game. Equal amount of investments need to go into the transmission and distribution system, especially the transmission systems, because as we know, the renewables are not uniform in terms of their availability throughout the day. So it needs a different set of transmission systems. It needs power storage as a system. So I could expect something on the say storage system incentives, something on battery storage, etc. If at all we have to come to this situation for renewables. So the way battery prices are coming down globally. So 1 or 2 years ago, or very short time ago, I would say, even a couple of years ago, it was perceived that battery storage can be very expensive and it's not viable as a mass storage device. But the way battery prices have come down in the last few months, it's now becoming increasingly possible that even large-scale battery deployments can be done for the buffering of renewable energy, so to say, storage of renewable energy, which is not uniform throughout the day. So I think you might see some announcements on those, say PLI schemes, etc., more for battery manufacturing, etc. So those kind of incentives are required. As far as the TND, the transmission and distribution space is concerned, we have seen the state and the central transmission utilities announce projects in the HVDC space. So those are anyway out there getting bid out, and we are seeing it in the order book of a lot of companies. So that theme is already running, and I think the pace at which it is happening is also adequate. But on the battery storage part, you can expect, or storage in general, you can expect some announcements.
Hi, it's also Samina joining in. A more broader based question. What do you think the budget could do to trigger the next leg of rally on D Street?
With taxes, that's the only thing. I think everything else has been played into the market.
Right. Mihir, what about you? What are your thoughts? What could the budget do to trigger the next run-up on D Street? We're already up 5% this month and we look expensive. Anything that the budget could have that could help the next leg?
Well, there could be some relief for the middle class, the tax-paying middle class, because there is a feeling that the current slabs, etc., are kind of out of date, and given inflation, etc., you might want to remove, at least move the exemption slabs up so that it increases disposable income, and you can have benefits in the discretionary space, in the housing space, as the white-collar tax-paying population gets more disposable income. So that's one definite possibility, or not possibility, hope, which can actually improve the sentiments. And of course, there's been a lot of speculation on capital gains tax tweaking around the duration or the rate of capital gains. So if there is no negative on that, that can be a good news. So no bad news can also be good news.
No bad news can also be good news. Andrew, what do you think the budget should not do or disturb at this current juncture we are at? It's there are a whole bunch of wish lists, I know, from various sectors, just like it is every year, right? But what do you think is non-negotiable in that sense?
Well, from a market perspective, non-negotiable is increasing capital gains tax, and both long-term and short-term. That's non-negotiable for the market. So that's the one area which we all worry about, right? And in which the market's worrying about. As I said, I think everything else that you could ask for in terms of the interim budget, and now you're going to get more money towards rural expenditure, is a nice kind of Goldilocks scenario for the market to ponder on, and that's why you've seen a large move, since the elections on the back of this thinking that fiscally prudent spending money on capex, getting the rural economy going, you can't ask for a better mix, right? It's a nice cocktail to drink.
Mihir, always great talking to both of you. Thank you very much for joining us and helping us understand what those expectations are from the much anticipated budget. The markets are quiet as expected. The broader markets are looking good. Pockets of gain is very obvious. Anything to do with green and clean energy is looking good. Fertilizers are taking a bit of a break this morning, and so are some of those railway stocks. But of course, the big question is, what are the markets expecting? That's what we need to drill it down to eventually. And Neeraj is standing with us for more on that. Neeraj, what is the market expectation? At least in terms of the ticks on the screen, it's flat as it can get.
Yeah. Well, it's interesting, Samina, because this morning all of us spoke about this, that the pre-budget session will be quiet and choppy post-budget. No brainer, but good to lay it out. Now, what are the key headlines or the key numbers or the key heads which the street will be watching out for? So one of them, I mean, we haven't given the number or the key point out here, but this plate is talking about the fiscal glide path being maintained. Now, maintained or bettered. Remember, there's a Bloomberg story which says that the number could actually be 5% as well, and that seems to have been the common consensus. What that would do is that it emphasizes the focus on macro stability and shows the unwavering commitment to fiscal prudence. Remember, when the S&P outlook changed about a year and a half ago, their thought was that the combined state plus center fiscal deficit should near 7%. Now we know states are at 3%. If the center says that their fiscal deficit number is 5 now, 4.5 later, and then eventually moving towards 4%, it helps give confidence to rating agencies, which is a big thing for borrowing costs. So that's the first one. Then loans to state for capex is the second head. Quantum and conditions of the loans to state. Remember, in the interim budget as well, a large sum was given, some conditions attached to it, but it's a great way to do capex. Would be interesting to see if that number is improved upon, particularly in the ally states. And aid to the ally states, like I said, is the key head as well to watch out for. Will there be extra outlays to rural, housing and MSMEs? That's the third key thing to keep in mind, because it shows job creation focus. And these are sectors with very strong needs for capital augmentation. So watch out for this as well. Similarly, focus on manufacturing. One, could there be moves done to attract global manufacturers? Remember, the stability in policy of import tariffs is a big thing that global manufacturing companies are watching out for. Beyond that, PLI schemes for mid-tech job-intensive sectors. India has done beautifully well on high-tech exports. In fact, now they are leading the exports, but can mid-tech come to the fore? That's the other thing to watch out for. Focus on FTAs as well, important. Last but not the least, the most talked about thing before every budget. Will there be any tinkering with the capital gains? I think at the end of every budget, there is a sigh of relief that there is no tinkering happening and the market goes on. Could this time be different in more ways than one? Could there be something on derivatives? Remains to be seen. So I think all of this watched out for.
Absolutely, and live footage coming there. Prime Minister now entering Parliament. Remember, the Cabinet has officially approved the FY25 Union Budget. That's part of the process, but Prime Minister Modi now coming in and just hark back to his message on the eve of this Parliament session yesterday, where of course the customary appeal to opposition that let's do some work together, the elections are over, now let's work together, but also talking specifically about what this budget will entail, how it will base or set the base for Viksit Bharat, and how this will be a budget which has a very, very clear vision. We'll be getting you all of that. Very quick break. Nirav Sheth on the other side.
Powerful driver of India's growth. The Indian economy, development of all regions, technologies and innovations. Inflation is moderate, investments are robust, more comprehensive GDP.
नेशन फर्स्ट, एक ही इरादा 2047 विकसित भारत।
Welcome back. 24 minutes to go, and then, of course, the budget will be upon us. But just before that, Nirav Seth, CEO, Institutional Equities of MK Global Financial Services, joins in. Nirav, hi, good morning. Thanks for joining in. Nirav, as a significant market participant, let's start by talking about how are you feeling before we go into this budget. Are you confident, buoyant, excited? Tell us what your thoughts are, and what have you made of the last few budgets or Nirmala Sitharaman's term in the last 6 years as FM?
I'm fairly excited, and anyone remotely concerned either with the economy or with the stock markets have no reasons to complain. But frankly, if you ask me, I've been quite vocal about this, that the last 5-7 years have been probably the best managed in terms of the macroeconomy and in terms of the microeconomy as well. And therefore, you just keep doing what you've been doing all this while without tinkering too much, and let the free market do the rest for you. Focus on infrastructure. There is miles to go, and then obviously you can talk about some few policy actions that you can take given the buoyancy in the markets. But broadly, the fact that you need to push investments at a different level, you need to improve the structural potential growth rate of the economy. That is where the focus has to be, and eventually it flows down to employment as well.
What would the expectation then be, taking forward where the interim budget left things? What would the expectation be from the full budget this time? What were you left longing for?
Frankly, like I said, the only difference is that from the time, from the number that you had for interim budget, obviously you got a bonanza from RBI, which is roughly about 40 bips to my GDP. And the best way to try and use that is try and improve the capex outlay, probably a bit on revenue capex as well, because that has been declining for last 3 or 4 years, and that is probably politically the right thing to do at this point of time. The only thing I really want, and this is a bit difficult to pull it off because it requires a lot of political capital. Indian government is probably, we are slightly poor in terms of the income generation, but we are very, very asset rich. This is the right time to try and lay a path for big, massive divestment and privatization for the next 3 or 4 years. If you pull that up, the balance of the government of India can change dramatically. You probably got all the monies in the world to try and do whatever you want. And you have the political capital to do it as well. Whether they do it and whether they announce that they are going to do it is a different question altogether.
Okay. Nirav, good morning. What is that one thing of the many? I know it's difficult to pin it down to one thing, but if there's one thing that you would watch out for or hope for, which would be positive or not negative for the markets?
Well, if you ask me, what is the risk to your view on the markets, and importantly means what is the risk to the view on the economy? I believe that you should not do anything that tinkers with the efficiency of the market. You can have utopian views about what you want to do, the small investors not losing money, trying to curb excessive speculation. These are good utopian targets to try. You believe in the efficiency of the market, you to believe in free market economics. They work beautifully well, right? You need to create very broad regulations so that people follow those regulations. Don't kill the animal spirits. They come, they don't happen overnight. It takes a hell lot of time to build confidence, and it takes a second for you to become fearful, right? As long as you don't tinkle with the tax rates, which means that you don't change the intrinsic value of the Indian economy, right? You don't essentially sort of disturb what is going to the shareholders and what is going to the government. I think you are mostly fine. The rest, everything is simple mechanics. I don't get too worried about whether fiscal deficit is 10 basis points above expectation, 10 basis points lower than expectations. That is just a narrative that dies in a day. Don't kill the animal spirits. This is the only thing I look for in the budget.
But just one quick thing, you reckon that if they indeed tinker with the taxation on derivatives, it could have a meaningful negative impact on the markets?
Well, I will, I'm referring more to the long-term capital gain tax because
okay, which is fine.
Which
is fine. But what about the derivative tax? If that is tinkered with specifically for options trading, will it have a big negative impact on the markets?
I don't think it will be a big negative impact. It can have some collateral damages because obviously, there is a big book that is created in arbitrage and, there could be some impact on the spreads and therefore, a particular subsegment of that asset class could get impacted. But outside that, I'm not too worried about, tinkering of taxation with the derivatives. I do believe that don't do anything which is regressive. You should not assume that small investors don't know how to trade and big investors know how to trade and therefore don't do anything that distinguishes, for example, you're talking about increasing the lot size and stuff like that. You're just trying to push the small investors out of the market. Ideologically, I don't believe in that.
Just hang in there. We'll come right back to you. In the meantime, Tamanna is also standing by with a quick take on what is expected from the budget. Tamanna, it's over to you.
Yeah. All right. So this is a take on what I think will happen on the budget based on a lot of conversations we've had, based on commentary which has come in from a lot of quarters as well. So the number one pointer, which I think that you're going to see more of the same in budget 1 of term 3, while there will be an attempt to say that you are setting the roadmap for the next 5 years, there won't be too much difference or deviation in policy. Because remember, right from when the election results came out, the government has been harping on and re-emphasizing that nothing really has changed. Your cabinet is the same, your policies are the same, your finance minister is the same. So expect budget to be a continuation of the interim budget, because the messaging is that just because the BJP has lesser seats than was expected in parliament, it makes zero difference, and that's important. Focus on infra, hence will continue. Boosting capex will continue, but there will be a push for consumption as well. That will have to be because the economy needs it. The form it takes is what the question really is. Will there be welfareism? Will there be populism? The likelihood seems no, which is why you will see the fiscal deficit glide path at 5.1 in the interim budget, which will be maintained, could even be bettered, because remember, you have that RBI bonanza come in. So watch out for that number. That becomes a very, very crucial number. Like I said, consumption push stays. Popularism and populist measures are very unlikely. So anyone expecting huge dole outs because of the elections could be disappointed. And I'm sticking my neck out a bit by saying this here. We'll see what really happens at the end of it. Viksit Bharat theme will really dominate everything that the finance minister says. It might not translate into specific schemes, more of a roadmap. But remember, that is the big theme, not just for this budget, but for the next 5 years. That was very clear from the Prime Minister's pre-session address as well. Tax relief. Everyone's waiting for tax relief. Middle class, lower middle class. Will slabs be tinkered and changed? We've heard a lot of guests this morning also saying it. My take is that if you see any change at all, it will be in the new tax regime, not in the old tax regime. It's unlikely that tax slabs will be really tinkered with. We'll wait and see what happens. The only joker in the pack is what happens with derivative volumes. Do you do a tax tinker? Do you put some kind of a regulatory leash? And if that is what the government aims to do, remember, they don't need to do it in the budget. There are a lot of ways to sort of burst that bubble if that really is the concern coming in. And it's likely to be a measured move, something that won't spook the markets, but will get exactly what they want, which is tempering a bit of the froth and frenzy on derivative volume. So this is basically my take of what I think will happen in the budget. We'll, of course, wait and watch.
Interesting to see if the tinkering on the derivative side of the business could actually impact the sentiment, just like maybe capital gains potentially could. But of course, this is going to be important because there'll be policies proposed, especially as Prime Minister Modi and the run-up to the Lok Sabha election had talked about making India the third largest economy in size and, of course, $5 trillion. Well, talking about what industry is expecting, their wish list, let's cut across to a conversation my colleague Janini is having with CII's Vice President R. Mukundan and Vinayak Chatterjee, Chairman, CII Infrastructure.
To maybe 12.5 or 12 lakh crores. So the budget will provide a very strong signal as to whether there is being this not so subtle shift in economic thinking.
Right. So on that very same subject, we've also seen that, while we're on the subject of, say, the government will not pause, the government will continue its pace. The private capex pickup is also something that was highlighted very much yesterday. It has been taking off in a few sectors, that was noted. However, what they expected, it's not at the pace that they wanted to. Now, coming to that front, what could be that pivot? What is the industry hoping to hear perhaps this time around that will give them that push?
I think in terms of creating the environment for investment, that already has been more or less done. I think we can look at other factors of, let's say, making the investment climate even better, whether you talk about labor codes, operationalizing that in the states. But leaving that aside, I think the capacity utilization in most units is already at 85, 87, 90%. I think at that point, most industries try to at least come with additional investment in capacity, new capacities. I think most companies, at least we speak to in CII, already have investment plans, not just for India market, but many of them are actually looking at international market. So I think India is getting its act right. I think Indian industry, private sector is getting its act right. And I think we need to continue to carry on with the momentum where we continue to create a positive environment for industry to invest. At the same time, I think also continue the good work which government has done in terms of infrastructure. Because two factors of production, as I said, which is very, very high, very capital intensive. One is logistics, other one is power. I think in these two, there can be no let up. I think we need to continue to ensure that our energy costs remain low or at least very competitive. And also our logistic cost of transportation remains very, very competitive.
Right. I want to come back on energy to Mr. Chatterjee, but quickly before that, when you did say, Mr. Chatterjee told us also about perhaps a change in thinking. And that brings me to one other point that the CA made yesterday, especially vis-a-vis our treatment towards import and trade with China. Now, perhaps a change in the China plus one strategy, or rather he highlighted that we have to find a balance between what we're importing and how we're looking at the import of capital and the import of goods. So on that front, how do you think the export market and the industry, particularly the representative of the body that you are, how do you think the industry is looking at this? Are they ready for what was in the likes of, say, Brazil or Vietnam that was explained yesterday?
If you look at the broad environment which is there, I think we've got an aging population in Far East. We also have rapidly aging and more expensive labor force in China. I think the competitive opportunity for India is absolutely there, whatever may be the policy we want to adopt. I think that opportunity is what we need to capitalize on. Leave the goods and services export. I think if you look at sheer labor which is needed in Japan, for example, the Japan industry was telling me almost 400,000 qualified skilled labor they need every year to come from somewhere. Is it going to be Philippines? Is it going to be India? I think that's an opportunity for us because of the aging population. So I think there are some factors which are changing with our youthful population. But I think when you talk about youthful population, I think Chief Economic Advisor did focus on skills. I think emphasis on skills and skilling our workforce to make them ready for international market and domestic market is going to be extremely critical. And this overall move by government that now companies can actually certify skills is going to be a very, very positive game changer. Hopefully it gets implemented with vigor. If that happens, I think we will be not only create jobs, but also be very, very competitive vis-a-vis not just China, any country around the world.
That ties to the larger point of jobs and what, in fact, the finance minister will be saying to that particular topic. So I want to close with this question on energy. And in fact, if we go back to the speech yesterday, the CA mentioned that it's not a question of if, it is a question of when. And if we talk about the energy priorities, there is a reality that a country like India and what it can afford to do at this particular point. There is also our larger ambitions of what we want to do in terms of EV, in terms of green energy projects. How do we find a synergy between the two? That is my question.
So this is a most appropriate question because energy is probably one of the key inputs to a cost competitive economy and the welfare of the people. You know, as we speak here, the economy is transiting from a historic, hugely fossil fuel dependent economy to the ambitions of a green energy economy. This transition is public policy. We have made all these pronouncements and taken targets at the various COP meetings, etc. Now that is a fact of life, but this transition involves tremendous pain across the delivery chain. So, for example, the amount of transition finance, support finance that is required to make this move, whether it is storage systems, battery energy storage systems, pump storage systems, EV infrastructure rollout, hydrogen, green hydrogen, ammonia, flue gas discharge, anti-pollution equipment, all of these require concessional long-term financing to shift this economy from fossil fuel to green. So one of my...
All right. Yes, the shift from fossil fuel to green, or maybe a combination of that for the time being, considering the power demand is an interesting one as well. But so that's the CI view, of course. Now, 9 minutes left for the budget speech to start. We told you on Friday that we have a budget think tank with whom we have discussed some of their expectations from the budget. One of the members of the think tank, Ravi Dharamshi, founder and CIO, ValueQuest Investment Advisors, joins us right now in the studio ahead of the budget and will be with us post the budget as well. Ravi, great having you. Thanks for taking the time out and being with us. No, the pleasure is ours. Ravi, some time has passed between that Friday conversation that we had and now. Is there a change to the thought process around what will come in the budget, or do you believe policy continuity from February is likely the key thing?
No, I don't think there is any change. The government will stick around to the fiscal discipline, but they have additional rooms in terms of doing some revenue expenditure without actually, kind of ruffling the budget math. So the only thing is that usually budget tends to be a non-event for most of the time. But this time around, I feel there is slightly more emphasis because of the way the setup has been. Yeah, we have come into this budget with a slightly reduced, mandate. We are going into the US elections. Markets have rallied for a 4-year period. There is some noise building around capital gains tax. All that makes it that this will be an important event from the continuity of policy perspective and continuation of the capital cycle. It is very important to pass on the baton from central government driven capex cycle to a private sector and a state sector. I think that is the most important thing that I'll be looking out for.
Ravi, coming specifically to sectors, how much does it matter if capex allocation is increased significantly? I mean, that was one of the views that Vinayak Chatterjee had also given us. People are going to wait and watch that over the interim budget, how much more? And I remember this conversation we were having in the interim budget when the first cut was, the capex allocation has come down. And then you made the point that no, if you look at it over what was actually spent, it is a 17% uptick. Are you expecting a bigger number there? And if so, where does that sort of benefit flow in terms of sectors?
So 17% if you adjust for the BSNL equity infusion, then probably 16%. But I don't expect a meaningful shift over there. I still expect it to be, say, 3-4% higher at best. But the important thing is not the budget allocation. Important thing is, will they be able to spend that? Because the first quarter has not been that great in terms of spending. So you have only 6, 7, 8 months to catch up, to do the catch-up spending. So more than the budget, what I am looking for is on the ground what happens, whether it is actually spent or no. And in terms of where that goes, I think that will continue to be the case. I think a little bit more emphasis on revival of the real estate cycle at the bottom of the pyramid, the affordable housing. I think that is where I feel government will foresee that has the maximum bang for the buck, because that has a big multiplier effect and it will impact a large number of the populace. So they need to get that cycle moving, and I would expect some more extra impetus on that front.
Like what?
Affordable housing, just maybe incentivizing the real estate cycle to kickstart in the rural areas, in the tier 2-3 towns, not only at the peak of the pyramid.
Ravi, the theme so far has been anything PSU becomes a buy. The market cap of PSU stocks has doubled in the last one. I mean, Cochin Shipyard, case in point, right? Do you feel like that theme will continue for the next couple of years, A, or do you feel like newer themes and sectors could carry the mandate of taking the markets higher from these levels? What is that going to be? Same old or brand new?
No, I think there are a few transitions that are likely to happen in the market. I don't see it happening like immediately, but over the next few months. One is this reversion to mean trade that is happening, and I don't like to call it a PSU. That's what market narrative is, but it might as well be cheap stocks not bought for a long period of time getting a reversion to mean trade. Those kind of companies, I think that reversion to mean trade has panned out. What is likely to take over is again some of the secular themes. And within that, I think the incrementally shift away from capital goods, especially centrally driven capital cycle, away towards private sector cycle. So railway, defense are two sectors actually which are totally dependent on central government capex. So incrementally, if I believe that state and private sector is going to drive this, then those are not the sectors that are going to be favored automatically. And also incrementally, if I am expecting some revival in the revenue expenditure, so that would lead to, and again I'm not saying a big revival or something, but that will mean incrementally some revival in the consumer oriented sectors. So these are the two shifts that I'm looking for in the budget.
Consumer oriented, how would you split it between discretionary and staples? Where is your bias currently sitting?
At this point of time, I would say first impact will more be in the staples, and going forward then it will, because see that space has not been doing well for 4-5 years. Yeah. Okay, there has been real rural distress, and if there is one takeaway that we can have from the election result is that the rural distress was real. Sure. Yeah. So the first revival has to be in the staples, but eventually that will move to the discretionary as well.
So the Nifty FMCG is the top sectoral gainer at this point, just going to the budget. We're less than about 2 minutes away. PNG, ITC, Tata Consumer, HUL, all of these are firing. You think more of the same?
Couple of things are playing out over here. One is that, yes, that can be the shift. And the second thing is that it's kind of a perceived defensive sector. And there have been a lot of gains happening that have accrued in the other sector. So some shift away to the defensive sector is likely.
One question going back to consumption. If there is tinkering on the personal tax front, which seems to be a consensus in the market, and for a number of years that hasn't been changed, do you feel like in that case, urban consumption could be a key beneficiary? And maybe, just maybe, if may not be staples, but it'll be the Honasas and the Nykas of the world?
Can't rule that out. And honestly, in every first year of this government's term, they usually announce something big bang, which kind of sets the tone for the next 5 years. And I wouldn't rule that out completely, that there can be some tax benefit for the middle class, salaried class especially. And yes, that can play into the urban consumption theme as well.
One question, Ravi. You understand markets really well. They can't, okay, just a minute away by the way, but if there is no tinkering possible realistically for derivatives as a product, because they are already taxed max, what is within the purview of the budget to do if they want to clamp down on that a bit? And is there a case for clamping it down? Because there are a lot of statements around it. What's your personal view?
See, I am not going to get into what is prescribed or what should people do. I think it is more at individual level. But I think the way the kind of noises have been made by the RBI as well as by SEBI chief, and some maybe even it's got a mention in the economic survey as well. So definitely some action is likely to be over there. I have no idea what action, but I think some disincentivization away from getting into speculative activity.
Could it impact the markets, you think?
there will be a short-term impact, but that will be more knee-jerk, and for a long-term investor, probably it will not matter much.
Ravi, just one quick question before we go to the budget. Do you anticipate a correction in the tune of 5 to 10% post the budget? Because we've talked about this for many months now. And also, what sector are you overweight on? You said defensive, so we can build on that.
So I don't know whether a budget is the reason that leads to that kind of a correction, but you cannot rule that kind of a correction just purely from probabilistic perspective, because we have rallied so much. Everything is looking good, but without a reason also, even if the budget fails to provide a new, something that markets can hold on to, that can be a reason enough for markets to correct.
And it's a good thing, right? Given that we look so expensive and stretched right now, a little bit of consolidation would be good.
That's the feature of the market, right? 2 steps up, 1 step down. 1 step down has not happened in a while, so it could be in the offing.
Maybe that will keep all the derivative trading, fix the problem in itself as well.
Just look at the sharp buzz right now, recovery, and even while we've been talking about FMCG companies, look at the sharp moves in ITC coming in, up about 1.5% right now. I don't know if we can show that in today's chart on our screens, but you are seeing a lot of movement as we wait for that budget announcement. Just a couple of minutes from now, that's the announcement happening. You're seeing the chair of the House now first coming in. I remember that was also an exciting election/selection of the speaker. And there you have the speaker over there. The opposition had come and said, we'll get our person. But finally, of course, you've had the speaker coming in and a continuation there as well, which is why I'm saying you'll see a lot of policy continuation. And he will, of course, welcome the finance minister to speak. Let's listen in.
और तंजानिया संयुक्त गणराज्य की नेशनल असेंबली की अध्यक्ष माननीय डॉक्टर तुलिया एक्सन का स्वागत करते हुए अत्यंत प्रसन्नता हो रही है। वे हमारी सम्मानित अतिथि के रूप में भारत की आधिकारिक यात्रा पर आई है। ये हमारे लिए खुशी की बात है कि डॉक्टर एक्सन बजट सत्र को देखने के लिए यहाँ उपस्थित है। माननीय डॉक्टर तुलिया एक्सन शुक्रवार दिनांक 19 जुलाई 2024 को भारत पहुंची। उन्होंने 21 जुलाई 2024 को आगरा का भ्रमण किया और उस समय वह विशेष बॉक्स में आसीन है। हम भारत में उनके सुखद और सफल प्रवास की कामना करते हैं। हम अंतर संसदीय संघ के प्रेसिडेंट के रूप में उनकी भूमिका के लिए सफलता की भी कामना करते हैं। उनके माध्यम से हम तंजानिया गणराज्य की संसद के सदस्यों, तंजानिया की सरकार तथा वहाँ की मित्र जनता को बधाई और शुभकामनाएं देते हैं। मान्य सदस्यगण, जैसा कि आपको समाचार भाग 2 के माध्यम से पहले ही सूचित किया जा चुका है कि माननीय वित्त मंत्री जी के बजट भाषण की प्रतियां हार्ड कॉपी के रूप में उपलब्ध कराई जाएगी। अतः बजट प्रस्तुत हो जाने के पश्चात माननीय सदस्य कृपया बजट भाषण की अपनी अपनी प्रति प्रकाशन काउंटर से प्राप्त कर लें। आपको ये भी सूचित किया जाता है कि माननीय मंत्री द्वारा बजट प्रस्तुत किए जाने के पश्चात बजट की प्रतियां आपको मेंबर्स पोर्टल के माध्यम से भी उपलब्ध करा दी जाएगी। माननीय वित्त मंत्री श्रीमती निर्मला सीतारमण।
Honorable Speaker, I present the budget for 24-25. Introduction. The people of India have reposed their faith in the government led by Honorable Prime Minister Shri Narendra Modi and re-elected it for a historic 3rd term under his leadership. We are grateful for their support, faith, and trust in our policies. We are determined to ensure that all Indians, regardless of religion, caste, gender, and age, make substantial progress in realizing their life goals and aspirations. Global context. The global economy, while performing better than expected, is still in the grip of policy uncertainties. Elevated asset prices, political uncertainties, and shipping disruptions continue to pose significant downside risks for growth and upside risks to inflation. In this context, India's economic growth continues to be the shining exception and will remain so in the years ahead. India's inflation continues to be low, stable, and moving towards the 4% target. Core inflation, that is non-food and non-fuel, currently is 3.1%. Steps are being taken to ensure supplies of perishable goods reach markets adequately. Interim budget. As mentioned in the interim budget, we need to focus on 4 major castes, namely the Garib, Mahilaye, Yuva, and Annadata, the poor, women, youth, and the farmer. For Annadata, we announced higher minimum support prices a month ago for all major crops, delivering on the promise of at least a 50% margin over costs. Pradhan Mantri Garib Kalyan Anna Yojana was extended for 5 years, benefiting more than 80 crore people. Administrative actions for approval and implementation of various schemes announced in the interim budget are well underway. The required allocations have been made. Budget theme. Turning attention to the full year and beyond in this budget, we particularly focus on employment, skilling, MSMEs, and the middle class. I'm happy to announce the Prime Minister's package of 5 schemes and initiatives to facilitate employment, skilling, and other opportunities for 4.1 crore youth over a 5-year period, with a central outlay of 2 lakh crore rupees. I will speak about them shortly, while more details may be seen in the annexure. This year, I've made a provision of 1.48 lakh rupees, 1.48 lakh crore rupees for education, employment, and skilling. Budget priorities. The people have given a unique opportunity to our government to take the country on the path of strong development and an all-round prosperity. In the interim budget, we promise to present a detailed roadmap for our pursuit of Vikasit Bharat. In line with the strategy set out in the interim budget, this budget envisages sustained efforts on the following 9 priorities for generating ample opportunities for all. Number 1, productivity and resilience in agriculture. Number 2, employment and skilling. Number 3, inclusive human resource development and social justice. 4, manufacturing and services. 5, urban development. 6, energy security. 7, infrastructure. 8, innovation, research and development. And 9, next generation reforms. Subsequent budgets will build on these and add more priorities and actions. A more detailed formulation will be carried out as part of the economic policy framework, about which I will speak later in this speech. This budget details some of the specific actions to be initiated in the current year towards fulfillment of these priorities with potential for transformative changes. The budget also covers some of the previously made announcements with intent to strengthen them and step up their implementation for expediting our journey towards the goal of Viksit Bharat. Priority 1, productivity and resilience in agriculture. Transforming agricultural research. Our government will undertake a comprehensive review of the agricultural research setup to bring the focus on raising productivity and developing climate resilient varieties. Funding will be provided in challenge mode, including to the private sector. Domain experts, both from the government and outside, will oversee the conduct of such research. Release of new varieties. New 109 high-yielding and climate-resilient varieties of 32 field and horticultural crops will be released for cultivation by farmers. Natural farming. In the next 2 years, 1 crore farmers across the country will be initiated into natural farming, supported by certification and branding. Implementation will be through scientific institutions and willing gram panchayats. 10,000 need-based bio-input resource centers will be established. Missions for pulses and oilseeds. For achieving self-sufficiency in pulses and oilseeds, we will strengthen their production, storage, and marketing. As announced in the interim budget, a strategy is being put in place to achieve Atmanirbharta for oilseeds such as mustard, groundnut, sesame, soybean, and sunflower. Vegetable production and supply chains. Large-scale clusters for vegetable production will be developed closer to major consumption centers. We will promote farmer-producer organizations, cooperatives, and startups for vegetable supply chains, including for collection and storage and marketing. Digital public infrastructure for agriculture. Buoyed by the success of the pilot project, our government, in partnership with the states, will facilitate the implementation of the digital public infrastructure in agriculture for coverage of farmers and their lands in 3 years. During this year, digital crop survey for Kharif using the DPI will be taken up in 400 districts. The details of 6 crore farmers and their lands will be brought into the farmer and land registries. Further, the issuance of Jan Samarth based Kisan credit cards will be enabled in 5 states. Shrimp production and export. Financial support for setting up a network of nucleus breeding centers for shrimp brood stocks will be provided. Financing for shrimp farming, processing, and export will be facilitated through NABARD. National cooperation policy. Our government will bring out a national cooperation policy for systematic, orderly, and all-round development of the cooperative sector, fast-tracking growth of rural economy and generation of employment opportunities on a large scale will be the policy goal. This year, I have made a provision of 1.52 lakh crore rupees for agriculture and allied sectors. Priority 2, employment and skilling. Employment-linked incentive. our government will implement following 3 schemes for employment-linked incentive as part of the Prime Minister's package. These will be based on enrollment in the EPFO and focus on recognition of first-time employees and support to employees and employers. Scheme A, first-timers. This scheme will provide 1 month wage to all persons newly entering the workforce in all formal sectors. Direct benefit transfer of 1 month's salary in 3 installments to first-time employees as registered in the EPFO will be up to 15,000 rupees. The eligibility limit will be a salary of 1 lakh per month. The scheme is expected to benefit 210 lakh youths. Scheme B, job creation in manufacturing. This scheme will incentivize additional employment in the manufacturing sector linked to the employment of first-time employees. An incentive will be provided at specified scale directly both to the employee and the employer with respect to the EPFO contribution in the first 4 years of employment. The scheme is expected to benefit 30 lakh youth entering employment and their employers. Scheme C, support to employers. This employer-focused scheme will cover additional employment in all sectors. All additional employment within a salary of 1 lakh rupee per month will be counted. The government will reimburse to employers up to 3,000 rupees per month for 2 years towards the EPFO contribution for each additional employee. The scheme is expected to incentivize additional employment of 50 lakh persons. Participation of women in the workforce. We will facilitate higher participation of women in the workforce through setting up of working women hostels in collaboration with industry and establishing creches. In addition, the partnership will seek to organize women-specific skilling programs and promotion of market access for women SHG enterprises. Skilling program. I'm happy to announce a new centrally sponsored scheme as the 4th scheme under the Prime Minister's package for skilling in collaboration with state governments and industry. 20 lakh youth will be skilled over a 5-year period. $1,000 industrial training institutes will be upgraded in hub and spoke arrangements with outcome orientation. Course content and design will be aligned to the skill needs of industry, and new courses will be introduced for emerging needs. Skilling loans. The model skill loan scheme will be revised to facilitate loans up to 7.5 lakh rupees with a guarantee from a government-promoted fund. This measure is expected to help 25,000 students every year. Education loans. For helping our youth who have not been eligible for any benefit under government schemes and policies, I am happy to announce a financial support for loans up to 10 lakh rupees for higher education in domestic institutions. For this purpose, e-vouchers for this purpose will be given directly to 1 lakh students every year for annual interest subvention of 3% of the loan amount. Priority 3, inclusive human resource development and social justice, saturation approach. Our government is committed to all-round, all-pervasive and all-inclusive development of people, particularly farmers, youth, women, and the poor. For achieving social justice comprehensively, the saturation approach of covering all eligible people through various programs, including those for education and health, will be adopted to empower them by improving their capabilities. Implementation of schemes meant for supporting economic activities by craftsmen, artisans, self-help groups, scheduled caste, scheduled tribe, and women entrepreneurs and street vendors such as the PM Vishwakarma, PM Swanidhi, National Livelihood Missions, and Stand Up India will be stepped up. Purvodaya. The states in the eastern part of the country are rich in endowments and have strong cultural traditions. We will formulate a plan, Purvodaya, for the all-round development of the eastern region of the country, covering Bihar, Jharkhand, West Bengal, Odisha, and Andhra Pradesh. This will cover human resource development, infrastructure, and generation of economic opportunities to make the region an engine to attain Vikasit Bharat. On the Amritsar-Kolkata industrial corridor, we will support development of an industrial node at Gaya. This corridor will catalyze industrial development of the eastern region. The industrial node at Gaya will also be a good model for developing our ancient centers of cultural importance into future centers of modern economy. This model shall showcase Vikas Bhi, Virasat Bhi in a growth trajectory. We will also support development of road connectivity projects, namely 1. Patna-Purnia Expressway, 2. Buxar-Bhagalpur Expressway, 3. Bodh Gaya, Rajgir, Vaishali and Darbhanga spurs, and 4. Additional 2-lane bridge over River Ganga at Buxar at a total cost of 26,000 crore rupees. Power projects, including setting up of a new 2,400 megawatt power plant at Pir Painti, will be taken up at a cost of 21,400 crore rupees. New airports, medical colleges, and sports infrastructure in Bihar will be constructed. An additional allocation to support capital investments will be provided. The requests of Bihar government for external assistance from multilateral development banks will be expedited. Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. Recognizing the state's need for the capital, recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Our government is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well. Under the Act, Andhra Pradesh Reorganization Act, for promoting industrial development, funds will be provided for essential infrastructure such as water, power, railways, and roads in Kopparthi node on the Visakhapatnam-Chennai Industrial Corridor and Varavakal node on the Hyderabad-Bangalore Industrial Corridor. An additional allocation will be provided this year towards capital investment for economic growth. Grants for backward regions of Rayalaseema, Prakasham, North Coastal Andhra, as stated in the Act, will be provided. PM Awas Yojana. 3 crore additional houses under the PM Awas Yojana in rural and urban areas in the country have been announced, for which the necessary allocations are being made. Women-led development. For promoting women-led development, the budget carries an allocation of more than 3 lakh crore for schemes benefiting women and girls. This signals our government's commitment for enhancing women's role in economic development. Pradhan Mantri Janjatiya Unnat Gram Abhiyan. For improving the socio-economic condition of tribal communities, we will launch the Pradhan Mantri Janjatiya Unnat Gram Abhiyan by adopting saturation coverage for tribal families in tribal majority villages and aspirational districts. This will cover 63,000 villages, benefiting 5 crore tribal people. Bank branches in northeastern region. More than 100 branches of India Post Payment Bank will be set up in the northeast region to expand the banking services. This year, I have made a provision of 2.66 lakh crore rupees for rural development, including rural infrastructure. Priority 4, manufacturing and services, support for promotion of MSMEs. This budget provides special attention to MSMEs and manufacturing, particularly labor-intensive manufacturing. We have formulated a package covering financing, regulatory changes, and technology support for MSMEs to help them grow and also compete globally, as mentioned in the interim budget. I am happy to announce the following specific measures. Credit guarantee scheme for MSMEs in the manufacturing sector. For facilitating term loans to MSMEs for purchase of machinery and equipment without collateral or third-party guarantee, a credit guarantee scheme will be introduced. The scheme will operate on pooling of credit risks of such MSMEs. A separately constituted self-financing guarantee fund will provide to each applicant guarantee cover up to 100 crore rupees, while the loan amount may be larger. The borrower will have to provide an upfront guarantee fee and an annual guarantee fee on the reducing loan balance. New assessment model for MSME credit. Public sector banks will build their own in-house capability to assess MSMEs for credit instead of relying on external assessment. They will also take a lead in developing or getting developed a new credit assessment model based on the scoring of digital footprints of the MSMEs in the economy. This is expected to be a significant improvement over the traditional assessment of credit eligibility based only on asset or turnover criteria. That will also cover MSMEs without a formal accounting system. Credit support to MSMEs during stress period. I'm happy to announce a new mechanism for facilitating continuation of bank credit to MSMEs during their stress period while being in special mention account, SMA stage, for reasons beyond their control. MSMEs need credit to continue their business and to avoid getting into the NPA stage. Credit availability will be supported through a guarantee from a government-promoted fund. Mudra loans. The limit of Mudra loans will be enhanced to 20 lakh from the current 10 lakh for those entrepreneurs who have availed and successfully repaid previous loans under the Tarun category. Enhanced scope for mandatory onboarding in TREDS. For facilitating MSMEs to unlock their working capital by converting their trade receivables into cash, I propose to reduce the turnover threshold of buyers for mandatory onboarding on the TREDS platform from rupees 500 crore to 250 crore rupees. This measure will bring 22 more CPSCs and 7,000 more companies onto the platform. Medium enterprises will also be included in the scope of the suppliers. SIDBI branches in MSME clusters. SIDBI will open new branches to expand its reach to serve all major MSME clusters within 3 years and provide direct credit to them. With the opening of 24 such branches this year, the service coverage will expand to 168 out of 242 major clusters. MSME units for food irradiation, quality and safety testing. Financial support for setting up of 50 multi-product food irradiation units in the MSME sector will be provided. Setting up of 100 food quality and safety testing labs with NABL accreditation will be facilitated. E-commerce export hubs. To enable MSMEs and traditional artisans to sell their products in international markets, e-commerce export hubs will be set up in public-private partnership mode. These hubs, under a seamless regulatory and logistic framework, will facilitate trade and export-related services under one roof. Measures for promotion of manufacturing and services. Internship in top companies. As the fifth scheme under Prime Minister's package, our government will launch a comprehensive scheme for providing internship opportunities in 500 top companies to 1 crore youth in 5 years. They will gain exposure for 12 months to real-life business environment, varied professions, and employment opportunities. An internship allowance of 5,000 per month, 5,000 rupees per month, along with a one-time assistance of 6,000 rupees will be provided. companies will be expected to bear the training cost and 10% of their internship cost from their CSR funds. Industrial parks. Our government will facilitate development of investment-ready, plug-and-play industrial parks with complete infrastructure in or near 100 cities in partnership with the states and private sector by better using town planning schemes. 12 industrial parks under the National Industrial Corridor Development Program also will be sanctioned.
No, please, Petty.
Rental housing with dormitory type accommodation for industrial workers will be, just 1 minute. Rental housing, I repeat, rental housing with dormitory type accommodation for industrial workers will be facilitated in PPP mode with VGF support and commitment from anchor industries. Shipping industry, ownership, leasing and flagging reforms will be implemented to improve the share of Indian shipping industry and generate more employment. Critical mineral mission. We will set up a critical mineral mission for domestic production, recycling of critical minerals and overseas acquisition of critical mineral assets. Its mandate will include technology development, skilled workforce, extended producer responsibility framework, and a suitable financing mechanism. Offshore mining of minerals. Our government will launch the auction of the first tranche of offshore blocks for mining, building on the exploration already carried out. Digital public infrastructure applications. Turning to the services sector, I propose development of DPI applications at population scale for productivity gains, business opportunities, and innovation by the private sector. These are planned in the areas of credit, e-commerce, education, health, law and justice, logistics, MSME service delivery, and urban governance. Integrated technology platform for IBC ecosystem. An integrated technology platform will be set up for improving the outcomes under the Insolvency Bankruptcy Code for achieving consistency, transparency, timely processing, and better oversight for all stakeholders. Voluntary closure of LLPs. The services of the Center for Processing Accelerated Corporate Exit, CPACE, will be extended for voluntary closure of LLPs to reduce the closure times. National Company Law Tribunals. The IBC has resolved more than 1,000 companies, resulting in direct recovery of 3.3 lakh crore to creditors. 3.3 lakh crore rupees to creditors. In addition, 28,000 cases involving over 10 lakh crore rupees have been disposed of even prior to admission. Appropriate changes to the IBC, reforms and strengthening of the tribunal and appellate tribunals will be initiated to speed up insolvency resolution. Additional tribunals will be established. Out of those, some will be notified to decide cases exclusively under the Companies Act. Debt recovery. Steps for reforming and strengthening debt recovery tribunals will be taken. Additional tribunals will be established to speed up recovery. Priority 5, urban development. Cities as growth hubs. Working with states, our government will facilitate development of cities as growth hubs. This will be achieved through economic and transit planning and orderly development of peri-urban areas utilizing town planning schemes. Creative redevelopment of cities. For creative brownfield redevelopment of existing cities with a transformative impact, our government will formulate a framework for enabling policies, market-based mechanisms, and regulation. Transit-oriented development. Transit-oriented development plans for 14 large cities with a population above 30 lakh will be formulated, along with an implementation and financing strategy. Urban housing. Under the PM Awas Yojana, Urban 2.0, housing needs of 1 crore urban poor and middle-class families will be addressed with an investment of 10 lakh crore rupees. This will include the central assistance of 2.2 lakh crore rupees in the next 5 years. A provision of interest subsidy to facilitate loans at affordable rates is also envisaged. In addition, enabling policies and regulations for efficient and transparent rental housing markets with enhanced availability will also be put in place. Water supply and sanitation. In partnership with state governments and multilateral development banks, we will promote water supply, sewage treatments, and solid waste management projects and services for 100 large cities through bankable projects. These projects will also envisage use of treated water for irrigation and filling up of tanks in nearby areas. Street markets. Building on the success of PM Swanidhi scheme in transforming the lives of street vendors, our government envisions a scheme to support each year over the next 5 years the development of 100 weekly hearts or street food hubs in select cities. Stamp duty. We will encourage states which continue to charge high stamp duty to moderate the rates for all and also consider further lowering duties for properties purchased by women. This reform will be made an essential component of urban development schemes. Priority 6, energy security, energy transition. In the interim budget, I had announced our strategy to sustain high and more resource efficient economic growth, along with the energy security in terms of availability, accessibility, and affordability. We will bring out a policy document on appropriate energy transition pathways that balances the imperatives of employment, growth, and environmental sustainability. PM Surya Ghar Muft Bijli Yojana. PM Surya Ghar Muft Bijli Yojana. In line with the announcement in the interim budget, PM Surya Ghar Muft Bijli Yojana has been launched to install rooftop solar plants to enable 1 crore households obtain free electricity up to 300 units every month. The scheme has generated remarkable response with more than 1.28 crore registrations and 14 lakh applications, and we will further encourage it. Pumped storage policy. A policy for promoting pumped storage projects will be brought out for electricity storage and facilitating smooth integration of the growing share of renewable energy with its variable and intermittent nature in the overall energy mix. research and development of small and modular nuclear reactors. Nuclear energy is expected to form a very significant part of the energy mix for Viksit Bharat. Towards that pursuit, our government will partner with the private sector for 1. Setting up Bharat Small Reactors, 2. Research and development of Bharat Small Modular Reactor, and 3. Research and development of newer technologies for nuclear energy. The R&D funding announced in the interim budget will be made available for this sector also. Advanced ultra supercritical thermal power plants. The development of indigenous technology for advanced ultra supercritical thermal power plants with much higher efficiency has been completed. A joint venture between NTPC and BHEL will set up a full-scale 800 megawatt commercial plant using AUSC technology. The government will provide the required fiscal support. Moving forward, development of indigenous capacity for the production of high-grade steel and other advanced metallurgy materials for these plants will result in strong spin-off benefits for the economy. Roadmap for hard-to-abate industries. A roadmap for moving the hard-to-abate industries from energy efficiency targets to emission targets will be formulated. Appropriate regulations for transition of these industries from the current perform, achieve, and trade mode to Indian carbon market mode will be put in place. Support to traditional micro and small industries. An investment-grade energy audit of traditional micro and small industries in 60 clusters, including brass and ceramic, will be facilitated. Financial support will be provided for shifting them to cleaner forms of energy and implementation of energy efficiency measures. The scheme will be replicated in another 100 clusters in the next phase. Priority 7, infrastructure investment by central government. Significant investment the central government has made over the years in building and improving infrastructure has had a strong multiplier effect on the economy. We will endeavor to maintain strong fiscal support for infrastructure over the next 5 years in conjunction with imperatives of other priorities and fiscal consolidation. This year, I have provided 11,11,111 crore rupees for capital expenditure. This would be 3.4% of our GDP. Infrastructure investment by state governments. We will encourage states to provide support of similar scale for infrastructure, subject to their development priorities. A provision of 1.5 lakh crore rupees for long-term interest-free loans have been made this year also to support the states in their resource allocation. Private investment in infrastructure. Investment in infrastructure by private sector will be promoted through viability gap funding and enabling policies and regulations. A market-based financing framework will be brought out. Pradhan Mantri Gram Sadak Yojana, Phase 4 of the PMGSY will be launched to provide all-weather connectivity to 25,000 rural habitations, which have become eligible in view of their population increase. Irrigation and flood mitigation. Bihar has frequently suffered from floods, many of them originating outside the country. Plans to build flood control structures in Nepal are yet to progress. Our government, through the Accelerated Irrigation Benefit Program and other sources, will provide financial support for projects with estimated cost of 11,500 crore rupees, such as the Kosi-Michi intra-state link and 20 other ongoing and new schemes, including barrages, river pollution abatement, and irrigation projects. In addition, survey and investigation of Kosi-related flood mitigation and irrigation projects will be undertaken. Assam grapples with floods every year by the Brahmaputra River and its tributaries originating outside India. We will provide assistance to Assam for flood management and related projects. Himachal Pradesh suffered extensive losses due to floods last year. Our government will provide assistance to the state for reconstruction and rehabilitation through multilateral development assistance. Uttarakhand too suffered losses due to cloudbursts and massive landslides. We will provide assistance to the state. Recently, Sikkim witnessed devastating flash floods and landslides that wreaked havoc across the state. Our government will provide assistance to the state. Tourism has always been a part of our civilization. Our efforts in positioning India as a global tourist destination will also create jobs, stimulate investments, and unlock economic opportunities for other sectors. In addition to the measures outlined in the interim budget, I propose the following measures. Vishnupad Temple at Gaya and Mahabodhi Temple at Bodh Gaya in Bihar are of immense spiritual significance. Comprehensive development of Vishnupad Temple Corridor and Mahabodhi Temple Corridor will be supported, modeled on the successful Kashi Vishwanath Temple Corridor to transform them into world-class pilgrim and tourist destinations. Rajgir holds immense religious significance for Hindus, Buddhists, and Jains. The 20th Tirthankara Muniswarata Temple in the Jain temple complex is ancient. The Saptarishi, or the 7 hot springs, form a warm water Brahmkund that is sacred. A comprehensive development initiative for Rajgir will be undertaken. Our government will support the development of Nalanda as a tourist center, besides reviving Nalanda University to its glorious stature. Odisha's scenic beauty, temples, monuments, craftsmanship, wildlife sanctuaries, natural landscapes, and pristine beaches make it an ultimate tourism destination. Our government will provide assistance for their development to Odisha as well. Priority 8, innovation, research, and development. We will operationalize the Anusandhan National Research Fund for basic research and prototype development. Further, we will set up a mechanism for spurring private sector-driven research and innovation at commercial scale with a financing pool of 1 lakh crore rupees in line with the announcement in the interim budget. Space economy. With our continued emphasis on expanding the space economy by 5 times in the next 10 years, a venture capital fund of 1,000 crore rupees will be set up. Priority 9, next generation reforms. Economic policy framework. We will formulate an economic policy framework to delineate the overarching approach to economic development and set the scope of the next generation of reforms for facilitating employment opportunities and sustaining high growth. Our government will initiate and incentivize reforms for 1. Improving productivity of factors of production, and 2. Facilitating markets and sectors to become more efficient. These reforms will cover all factors of production, namely land, labor, capital, and entrepreneurship, and technology as an enabler of improving total factor productivity and bridging inequality. Effective implementation of several of these reforms requires collaboration between the center and the states, and building consensus as development of the country lies in development of the states. For promoting competitive federalism and incentivizing states for faster implementation of reforms, I propose to earmark a significant part of the 50-year interest-free loan. Working with the states, we will initiate the following reforms. Land-related reforms and actions, both in the rural and urban areas, will cover land administration, will cover 1. Land administration, planning and management, and 2. Urban planning usage and building bylaws. These will be incentivized for completion within the next 3 years through appropriate fiscal support. Rural land-related actions. Rural land-related actions will include 1. Assignment of unique land parcel identification number, UL PIN, or Bhu Aadhaar for all lands. 2. Digitization of cadastral maps. 3. Survey of subdivisions, survey of map subdivisions as per current ownership. 4. Establishment of land registry. And 5. Linking to the farmers registry. These actions will also facilitate credit flow and other agricultural services. Urban land-related actions. Land records in urban areas will be digitized with GIS mapping. An IT-based system for property record administration, updating, and tax administration will be established. These will also facilitate improving the financial position of urban local bodies. Labor-related reforms. Services to labor. Our government will facilitate the provision of a wide array of services to labor, including those for employment and skilling. A comprehensive integration of e-Shram portal with other portals will facilitate such one-stop solution. Open architecture databases for the rapidly changing labor market, skill requirements, and available job roles, and a mechanism to connect job aspirants with potential employers and skill providers will be covered in these services. Shram Suvidha and Samadhan portal. Shram Suvidha and Samadhan portal will be revamped to enhance ease of compliance for industry and trade. Capital and entrepreneurship related reforms, financial sector vision and strategy. For meeting financing needs of the economy, our government will bring out a financial sector vision and strategy document to prepare the sector in terms of size, capacity, and skills. This will set the agenda for the next 5 years and guide the work of the government, regulators, financial institutions, and market participants. Taxonomy for climate finance. We will develop taxonomy for climate finance for enhancing the availability of capital for climate adaptation and mitigation. This will support achievement of the country's climate commitments and green transition. Variable capital company structure. We will seek the required legislative approval for providing an efficient and flexible mode for financing leasing of aircrafts and ships and pooled funds of private equity through a variable company structure. Foreign direct investments and overseas investment. The rules and regulations for foreign direct investment and overseas investments will be simplified to 1. Facilitate foreign direct investments, 2. Nudge prioritization, and 3. Promote opportunities for using Indian rupee as a currency for overseas investment. NPS Vatsalya. NPS Vatsalya, a plan for contribution by parents and guardians for minors, will be started. On attaining the age of majority, the plan can be converted seamlessly into a normal NPS account. Use of technology. We have successfully used technology for improving productivity and bridging inequality in our economy during the past 10 years. Public investment in digital infrastructure and innovations by the private sector have helped in improving access of all citizens, particularly the common people, to market resources, education, health, and services. We will step up adoption of technology towards digitalization of the economy. Ease of doing business. For enhancing ease of doing business, we are already working on the Jan Vishwas Bill 2.0. Further, states will be incentivized for implementation of the business reforms, action plans, and digitalization. Data and statistics. For improving data governance, collection, processing and management of data and statistics, different sectoral databases, including those established under the Digital India Mission, will be utilized with active use of technology tools. New pension scheme. The committee to review the NPS has made considerable progress in its work. I'm happy that the staff side of the National Council of the Joint Consultative Machinery for Central Government Employees has taken a constructive approach. A solution will be evolved which addresses the relevant issues while maintaining fiscal prudence to protect the common citizens. Budget estimates for 24-25. For the year 24-25, total receipts other than borrowings and the total expenditure are estimated at 32.07 lakh crore rupees and 48.21 lakh crore rupees respectively. The net tax receipts are estimated at 25.83 lakh crore rupees. The fiscal deficit is estimated at 4.9% of the GDP. The gross and the net market borrowings through dated securities during 24-25 are estimated at 14.01 lakh crore rupees and 11.63 lakh crore rupees respectively. Both will be less than that in 23-24. The fiscal consolidation path announced by me in 2021 has served our economy very well, and we aim to reach the deficit below 4.5% next year. The government is committed to staying the course. From 2026-27 onwards, our endeavour will be to keep the fiscal deficit each year such that the central government's debt will be on a declining path as percentage of GDP. I will now move to Part B. Indirect taxes. Sir, I start with GST. It has decreased tax incidence on the common man, reduced compliance burden and logistics cost for trade and industry, and enhanced revenues of the central and the state governments. It is a success of vast proportions. To multiply the benefits of GST, we will strive to further simplify and rationalize the tax structure and endeavour to expand it to the remaining sectors. My proposals for customs duties intend to support domestic manufacturing, deepen local value addition, promote export competitiveness, and simplify taxation while keeping the interest of the general public and consumers surmount. In Budget 22-23, we reduced the number of customs duty rates. I propose to undertake a comprehensive review of the rate structure over the next 6 months to rationalize and simplify it for ease of trade, removal of duty inversion, and reduction of disputes. I shall now take up sector-specific customs duty proposals. Medicine and medical equipments. To provide relief to cancer patients, I propose to fully exempt 3 more medicines from customs duties. I also propose changes in the BCD on X-ray tubes and flat panel detectors for use in medical X-ray machines under the phased manufacturing program so as to synchronize them with the domestic capacity addition. Mobile phone and related parts. With a 3-fold increase in domestic production and almost a 100-fold jump in exports of mobile phones over the last 6 years, the Indian mobile industry has matured. In the interest of consumers, I now propose to reduce the BCD on mobile phone, mobile PCBA, and mobile charger to 15%. Critical minerals. Minerals such as lithium, copper, cobalt, and rare earth elements are critical for sectors like nuclear energy, renewable energy, space, defense, telecommunications, and high-tech electronics. I propose to fully exempt customs duties on 25 critical minerals and reduce BCD on 2 of them. This will provide a major fillip to the processing and refining of such minerals and help secure their availability for these strategic and important sectors. Solar energy. Energy transition is critical in the fight against climate change. To support energy transition, I propose to expand the list of exempted capital goods for use in the manufacture of solar cells and panels in the country. Further, in view of sufficient domestic manufacturing capacity of solar gas, glass, and tinned copper interconnect, I propose not to extend the exemption of custom duties provided to them. Marine products. India's seafood exports in the last financial year touched an all-time high of more than 60,000 crores of rupees. Frozen shrimp accounted for about 2/3 of these exports. To enhance their competitiveness, I propose to reduce BCD on certain broodstock, polychaete worms, shrimp, and fish feed to 5%. I also propose to exempt customs duty on various inputs for manufacture of shrimp and fish feed, leather and textile. Similarly, to enhance the competitiveness of exports in the leather and textile sectors, I propose to reduce BCD on real down-filling material from duck or goose. I am also making additions to the list of exempted goods for manufacture of leather and textile garments, footwear, and other leather articles for export. To rectify inversion in duty, I propose to reduce BCD subject to conditions on methylene diphenyl diisocyanate MDI for manufacture of spandex yarn from 7.5 to 5%. Furthermore, the export duty structure on raw hides, skin, and leather is proposed to be simplified and rationalized. Precious metals. To enhance domestic value addition in gold and precious metal jewelry in the country, I propose to reduce customs duties on gold and silver to 6% and that of platinum to 6.4%. Other metals, steel and copper are important raw materials. To reduce their cost of production, I propose to remove the BCD on ferronickel and blister copper. I am also continuing with nil BCD on ferrous scrap and nickel cathode and concessional BCD of 2.5% on copper scrap. Electronics. To increase value addition in the domestic electronics industry, I propose to remove the BCD subject to conditions on oxygen-free copper for manufacture of resistors. I also propose to exempt certain parts for manufacture of connectors. Chemicals and petrochemicals. To support existing and new capacities in the pipeline, I propose to increase the BCD on ammonium nitrate from 7.5% to 10%. Plastics. PVC flex banners are non-biodegradable and hazardous for environment and health. To curb their imports, I propose to raise the BCD on them from 10 to 25%. Telecommunication equipment. To incentivize domestic manufacturing, I propose to increase the BCD from 10 to 15% on PCBA of specified telecom equipment. Trade facilitation. To promote domestic aviation and boat and ship MRO, I propose to extend the period for export of goods imported for repairs from 6 months to 1 year. I'll read that again. To promote domestic aviation and boat and ship maintenance, repair and operations, I propose to extend the period for export of goods imported for repairs from 6 months to 1 year. In the same vein, I propose to extend the time limit for re-import of goods for repairs under warranty from 3 to 5 years. I now move to direct taxes. We will continue our efforts to simplify taxes, improve taxpayer services, provide tax certainty, and reduce litigation while enhancing revenues for funding the development and welfare schemes of the government. It has been our endeavor to simplify taxation. We have taken a number of measures in the last few years, including introduction of simplified tax regimes without exemptions and deductions for corporate tax and for personal income tax. This has been appreciated by taxpayers. 58% of corporate tax came from the simplified tax regime in the financial year 22-23. Similarly, as per data available till now, for the last fiscal, more than 2/3 have availed the new personal income tax regime. Comprehensive review of the Income Tax Act. I am now announcing a comprehensive review of the Income Tax Act 1961. The purpose is to make the Act concise, lucid, easy to read and understand. This will reduce disputes and litigation, thereby providing tax certainty to the taxpayers. I will also bring down the demand embroiled in litigation. It is proposed to be completed in 6 months. A beginning is being made in the Finance Bill by simplifying the tax regime for charities, tedious rate structures, provisions of reassessment and such provisions, and capital gains taxation. Simplification for charities and tedious. Two tax exemption regimes. The two tax exemption regimes for charities are proposed to be merged into one. The 5% tedious rate on many payments is being merged into the 2% tedious rate, and the 20% tedious rate on repurchase of units by mutual funds or UTI is being withdrawn. Tedious rate on e-commerce operators is proposed to be reduced from 1 to 0.1%. Moreover, credit of TCS is proposed to be given in the TDS to be deducted on salary. Further, I propose to decriminalize delay for payment of TDS up to the due date of filing statement for the same. I also plan to provide a standard operating procedure for TDS defaults and simplify and rationalize the compounding guidelines for such defaults. Simplification of reassessment. I propose to thoroughly simplify the provisions for reopening and reassessment. An assessment hereinafter can be reopened beyond 3 years from the end of the assessment year only if the escaped income is 50 lakh rupees or more, up to a maximum period of 5 years from the end of the assessment year. Even in such cases, a time limit of 6 years before the year of the search, as against the existing time limit of 10 years, is being proposed. This will reduce tax uncertainty and disputes. Simplification and rationalization of capital gains. Capital gains taxation is also proposed to be hugely simplified. Short-term gains on certain financial assets shall henceforth attract a tax rate of 20%, while that on all other financial assets and all non-financial assets shall continue to attract the applicable tax rate. Long-term gains on all financial and non-financial assets, on the other hand, will attract a tax rate of 12.5%. For the benefit of the lower and the middle income classes, I propose to increase the limit of exemption of capital gains on certain financial assets to 1.25 lakh rupees per year. Listed financial assets held for more than a year will be classified as long-term, while unlisted financial assets and all non-financial assets will have to be held for at least 2 years to be classified as long-term. Unlisted bonds and debentures, debt mutual funds, and market-linked debentures, irrespective of holding period, however, will attract tax on capital gains at applicable rates. Taxpayer services. All the major taxpayer services under GST and most services under customs and income tax have been digitalized. All remaining services of customs and income tax, including rectification and order giving effect to appellate orders, shall be digitalized and made paperless over the next 2 years. Litigation and appeals. While our concerted efforts to reduce pendency of appeals at various appellate fora are beginning to show good results, it will continue to engage our highest attention. To dispose of the backlog of first appeals, I plan to deploy more officers to hear and decide such appeals, especially those with large tax effect. For resolution of certain income tax disputes pending an appeal, I am also proposing Vivad Se Vishwas Scheme 2024. Further, I propose to increase monetary limits for filing appeals related to direct taxes, excise and service tax in the tax tribunals, high courts and Supreme Court to 60 lakh rupees, 2 crore rupees and 5 crore respectively, with a view to reduce litigation and provide certainty in international taxation. We will expand the scope of safe harbor rules and make them more attractive. We will also streamline the transfer pricing assessment procedure. Employment and investment. I have a few proposals to promote investment and foster employment. First of all, to bolster the Indian startup ecosystem, boost the entrepreneurial spirit, and to support innovation, I propose to abolish the so-called angel tax for all classes of investors. Second, there is tremendous potential for cruise tourism in India. To give a fillip to this employment-generating industry, I am proposing a simpler tax regime for foreign shipping companies operating domestic cruises in the country. Third, India is a world leader in the diamond cutting and polishing industry, which employs a large number of skilled workers. To further promote the development of this sector, we would provide for safe harbor rates for foreign mining companies selling raw diamonds in the country. Fourth, to attract foreign capital for our development needs, I propose to reduce the corporate tax rate on foreign companies from 40 to 35%. Deepening the tax base. I have a couple of proposals for deepening the tax base. First, security transaction tax on futures and options of securities is proposed to be increased to 0.02% and 0.1% respectively. Second, for reasons of equity, I propose to tax income received on buyback of shares in the hands of recipients. Other proposals. To improve social security benefits, deduction of expenditure by employers towards NPS is proposed to be increased from 10 to 14% of the employee's salary. Similarly, deduction of this expenditure up to 14% of salary from the income of employees in private sector, public sector banks and undertakings opting for the new tax regime is proposed to be provided. Indian professionals working in multinationals get ESOPs and invest in social security schemes and other movable assets abroad. Non-reporting of such small foreign assets has penal consequences under the Black Money Act. Such non-reporting of movable assets up to 20 lakh rupees is proposed to be depenalized. Other major proposals in the finance bill relate to withdrawal of equalization levy of 2%, expansion of tax benefits to certain funds and entities in IFSCs, and immunity from penalty and prosecution to Benamidar on full and true disclosure so as to improve conviction under the Benami Transaction Prohibition Act 1988. Personal income tax. Coming to personal income tax rates, I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows. 0 to 3 lakh rupees, nil. 3 to 7 lakh rupees, 5%. 7 to 10 lakh rupees, 10%. 10 to 12 lakh rupees, 15%. 12 to 15 lakh rupees, 20%. And above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually. Mr. Speaker, sir, with this, I commend the budget to this august House. Jai Hind.
All right, lots of changes. That is how you would define this budget. On the positive side, the fiscal glide path, well, strengthened 4.9% for FY25. You're looking at 4.5 for FY26 for sure. That aside of that, but the capital gains tax deserves the mainstay. Let's first get in our guests to try and understand what they make of it. We'll come in with our take in just moments from now. But Ravi, start off with you. You heard the speech with us. What stood out? Capital gains or something else?
No. From a immediate knee-jerk reaction point of view, clearly, capital gains is going to pinch. We are sitting on a lot of gains and now the tax has increased. But there is no rationalization of the time period as I understand. It's only the increase in from 15% to 20% of STCG and 10 to 12.5%. In the longer term, we'll digest this and move on. But I think for the time, the context of the stage at which we were in the market, I think this is going to be perceived negatively for the time period.
Right, and the market has tanked. It's down about 1%. So it was just about holding on until the news on capital gains came in. Manish Dangi as well joins in. You have a few takeaways. So you start with what stood out for you in this budget.
I think the bigger thing is on the capital gain tax, you touched it. And so therefore, what it means is that there will be a long period over next many years, a rationalization where both will merge. So I think the thing in the market and the consensus that, it should be 0 or 10, and 10 was also difficult to digest. But given that you are starting to tweak, it basically means an open area.
So it only means it's going to be tweaked upward,
I think so,
and this could be a
fear. It's a matter of time, and this is a global consensus that, capital gain tax, what Europe has done, everything will converge to one rate, maybe 20%, maybe 25%, whatever that is. So in a sense, if you have a very long term, and I make this point over and over again, that if you're a very long term investor, you be prepared that you will end up, if you're actually booking profit much later, you will end up paying much higher taxes
eventually. I think the
eventually.
sound way of looking at it is if you're making money, you pay your fair share of taxes, right? That's probably what the government is thinking.
So Manish, just to come to you specifically on the STT, which the finance minister mentioned on futures and options, because we've been talking consistently before the budget what will come on F&O. How do you see it? Do you see it as a dampener? Do you see it as a small slap in the wrist, not as bad as what was expected? Where on that scale?
It isn't as bad, right? We sort of, at least I thought that this income would be speculative, and therefore the tax rate applicable would go up quite substantially. It turns out to be more benign than what at least I thought.
Ravi, just your take on
yeah,
that?
I mean, if they had classified everything as a speculation and straight away the highest slab of income tax would apply, that would have been a big, big dampener. I think that has not happened. So from that perspective, I think incrementally it might impact the volume a little bit because it does change the economics of the trader and the kind of strategies that they deploy. They deal with very, very micro moves. So for them, it does make a difference. But from the overall market and system point of view, I don't think it changes in a big way.
Okay, we're getting Pranav Sehta in moments from now as well. But Manish, what quick word actually to both of you. I mean, the tax thing has enveloped the mind space, but 4.9%, the glide path. This was not expected. I mean, people thought 5.1 ka 5 hoga.
5, I thought. Yeah. So,
it's come to 4.9.
So the big saving of 50 basis point right now is being deployed. 50 basis point because of the RBI bounty and better run rate of taxes is 50 basis point of GDP. That's being deployed in actually 20 basis point of fiscal consolidation. So in some sense, it remains a bond budget that we argued last budget also. Surprisingly, to me also surprising that the capex number has not risen. So I thought
surprise. I mean, there are 8 months left. How can the economy absorb a higher number?
If you had a 1.5 lakh crore to spend, okay, especially when the nominal GDP is now starting to slow, you sort of would keep the momentum. So that capex I thought 1.5 lakh crore of RBI plus tax bounty would get deployed in some form in capex. That's not happened.
Okay.
So that's surprising to me. A lot of it we will discuss jobs and MSME schemes and employment schemes, and we'll discuss. But there are a lot of positives.
Just before we get to Mr. Sehta though, Ravi, the same question to you really. The 4.9% number.
Yeah, no, clearly I think government has chosen the path to stay on the fiscal side rather than give in to the consumption side or the welfare side. Yeah, I think they have surprised us positively on that side. I think we spoke about it 7 days back also. I was not expecting a 4.9% number. There was the way the political compulsions and also the way the read from the election result was that should spend some more on the bottom of the pyramid, but I think the government has decided to strictly stay on the path.
Yeah. So the voter is not a constituency. Again, if you see the budget, even the coalition dharma, in some sense, a lot of Andhra and Bihar trade.
Yes.
Trade meaning it's...
yes, we get what you mean.
A lot of Andhra and Bihar allocations.
Allocation. It's still through multilateral funding and long gestation one. So in some sense, it's not a direct door.
But there's 15,000 crores for Andhra Pradesh this year.
Very small.
It's not as bad. So
just a quick check on the bond market, because I think we're talking about the glide path and that 4.9% number. The rupee should have seen some reaction, and so would the because I think Manish calls this a bond budget in that sense, right? But a big sort of uptick is what you'd expect between now and the next couple of months. Remember, after India's inclusion in the JPM, the hope is that with very good fiscal discipline, a re-rating could be around the corner. And if that does happen, all stakeholders will stand to benefit. And I think that's what's a key takeaway, that fiscal discipline being very, very significant. We also got Pranav Sehta joining in. Pranav, you want to come in on this? Are you impressed by the fact that they've reduced it from 5.1 to 4.9 and for next year, sub 4.5?
Absolutely. I think that's a great move. They have tasted success over the years because of the great macro management, I would feel, and that continuity is very evident. They have not compromised on the fiscal deficit at all. In fact, they've improved significantly. So I would think full credit to the government for this through the period, particularly also in this budget. Despite all the expectations of welfare measures being higher and so on. So I think it's a great move. Yes, of course, from the direct taxes side also there are lots of measures. Maybe we can come to it.
So let's unpack it one by one. Let's start with the capital markets focused tax changes. So long-term capital gains tax, short-term capital gains tax, some categories for 2 years, some for 1 year, and STT. So let's unpack that portion first.
Right. So I would feel that the short-term capital gains tax increase from 15 to 20% was something that I wouldn't say was completely unexpected, given that probably they wanted to temper the short-term trading a bit, and that might have been the provocation as well as raising some revenue. Also some amount of equity in taxation. If a salary taxpayer, a normal business income, small business earner pays tax at 20-30%, short-term capital gains tax, probably they wanted to show some equity as well. So that's something that was pretty expected in some sense by me at least. The long-term capital gains tax was a little of a surprise. Yes, indeed. And I don't know how the market will take it, because I don't think the market expected it as well.
Not too well so far.
Yeah, not 12.5. But I think that looks a little early in stage in terms of implementation. I would have felt that given that there is an STT in place, given that the collections from STT are so robust, given that they want to give a fillip to the domestic capital being invested in risk-bearing financial assets, which has been going so well, that's one move that I thought was a little earlier than what I would have expected in the normal course. But certainly I think overall the steps have been good. Another thing which, of course, one has to see the fine print, but it seems that debentures, etc., also might probably go into the normal tax rate bracket instead of the 20%. So last year we saw the indexation benefit go away on mutual funds and so on. And now if the concessional tax rate also on that capital gain goes, which one has to see the fine print, if it goes into the regular slab rate, that might be another big move.
But that could be good for deposits.
That could be good for fixed deposits, and probably and that has been the provocation.
Yeah, that is the purpose.
That seems to be the provocation to bring.
I don't know. We all can agree with. Actually, just one thing. Also, MLDs is such a small.
No, that's dead already.
That's
so
dead,
MLD,
right? Yeah.
You know, we killed
a couple of years ago.
Yeah, 2 years ago. We killed direct access to bond markets now. That extra incentive that you had versus mutual funds. So if you go to mutual fund, you get taxed as normal in fixed income. But in the bonds, if you were listed and you bought, there was a capital gain of a listed instrument, concessional rate. That's gone. So in some sense, it's fair, right? I mean, Ravi is directly investing and I am investing through mutual fund. Why should he benefit? I mean, why should I not be same as him? So in some sense, it's a fair thing to do.
Yeah.
And it's for the super smart dudes in this country, treasury guys, and
the big quantum of money.
The big HNI.
Yeah.
This government, let's
level
it all. Sabka saath, sabka vikas.
Okay. Yes. Okay, Mr. Sethia, anything else on the tax front? Because there's a lot of other stuff.
I would feel, again, abolishing angel tax is a big positive, especially for entrepreneurs, small businesses, startups, the whole ecosystem. And including for foreign investors who always wanted to enter the private equity and VC funds, so to say. So I think that's a great move indeed. The dropping of the foreign companies' corporate tax rate from 40 to 35 was again something that was very, very welcome. I think it was expected as well, because when the corporate tax rate on Indian companies came down, they had not brought the foreign company corporate tax rate down. So I think that again is a good leveling off. In terms of both foreign companies as well as Indian companies. Also, some of the trust building measures, the TDS rate rationalization, etc., seems to be a good move, very good move indeed. Again, focus from a personal income tax standpoint on the new tax regime, increased standard deduction, and some amount of new tax regime tax reduction.
Do you think it brings it on par? Because the problem was always to move people from old tax to new tax. The new guys are happy to come into new tax, but if you're already used to all those Section 80C benefits, it's difficult to wean them off. Does this bring more parity on the face of it?
I would feel, again, those who probably get the allowances of HRA, etc., are going to continue to want to stay in the old regime. But most others, I think, are slowly moving into the new regime. There are only big allowances which are more in the nature of house rent allowance, etc., which will probably stay out.
By the way, we've got a bit of a bounce on the market, so just want to mark that the Nifty, after coming off 1.8% or 1.9%, let's get the intraday on the screen, has just moved back a little bit, if I'm not wrong, about 100 odd points, right? So is the market digesting? Was this a short blip? I think time will tell. Let's wait for it. But that's the other thing. A lot of conversation, Ravi, was around, do we tinker with the tax rate at the current point of time when the government wants to do divestments and the party is going on fine? Why tinker with it? Is this 20% and 12.5 gonna have longer term implication? Could it hit divestments? Not that divestments were a big part of this government's fanfare any which ways.
No, so it is disappointing because, as he mentioned, there was no real compulsion or any need to do it at this juncture in the cycle. there is a corporate culture that is getting developed, investing culture that is getting developed. There is a economic upcycle that is in place, and corporates are getting incentivized to invest. There is I think we should have probably held off couple of years more, and I think probably the step one should have been to rationalization of period. But anyway, that is all hypothetical, doesn't matter. The steps have been taken
now, yeah.
And I wouldn't have expected it.
It's not the act still. It's a bill.
Yes, absolutely.
Not that I expected.
It's not as if finance ministers have not rolled back, things which are not popular.
I don't see a capital market lobbyist strong enough for us to get this. Come on.
I agree. This is not one cohort which really moves the needle.
Yeah.
But yeah.
The review of the rate structure on customs. I think we have also told we're getting Mr. Atul of Dixon, because there is a move that has happened there, wherein the mobile industry, there's a reduction of the BCD on mobile phones and chargers. I wonder if Dixon has corrected a bit. We'll get that in moments from now. But Manish, the review of the rate structure on customs, reversal of duty inversion, a lot of things, and the measures towards job creation, etc. Is there a rural consumption focus, you think?
It's a job focus, I would say, and instead of just rural. There isn't much for rural folks at margin in terms of absolute allocation. You can talk of many schemes.
Populism, you didn't think it was populist?
No, it's not populist at all.
At all, right.
Yeah. On jobs, many things listed. Lastly, it's mostly about can we get formal jobs? So the EPFO linked things, the internship linked things. For the MSMEs, you had announcement that you could borrow and a credit guarantee scheme up to 100 crore rupees for any guy who's borrowing. So these are substantial. Angel tax, I guess, is the biggest deal for people like who invest in startups or are starting up. This could be messy. So a lot of these things are positive for general small, mid-sized, new firm creation. And FDI linked, basically, if you bring down the taxes for the Firangi firms, foreign firms, that's also a positive news. So it is not populist. It will bear fruit in only few years, so to say. There's nothing now in let's do something today. Even for middle class, the total amount that someone calculated in my team is about $1,500 saving.
On the new tax regime,
have few 5 stars, and that's about it.
No, so savings on what extent? From new tax regime?
Yes.
Okay.
Yeah.
So okay.
Every day 5 stars.
So she said that I think 17,000
max. Yes.
Is the max that a person
budget,
could get.
The 17,000 is all that you transfer to the Twitterati middle class.
Middle class is not Twitterati. Twitterati is a different class.
No, your definition of middle class is very different from what I think of middle class. You think you are middle class, right?
Yeah, absolutely.
You are super rich in this country.
Right. We also have Atul Lal, Vice Chairman and MD of Dixon Tech, joining in. Hi, Atul. It's Amina. Thank you very much for talking to us right after this budget. First up, before we go into the BCD reduction on mobile and chargers, how are you reacting to this budget?
You see, I would like to really compliment Honorable Finance Minister. Please appreciate we are a highly labor-intensive manufacturing industry. And certain steps that have been taken to encourage and incentivize labor involvement, operators involvement, I think it's highly commendable. Particular emphasis on skilling, on internships are most welcome. And also a special focus on MSME industry, because that's the backbone. Please appreciate the electronics manufacturing industry. It's in a formative stage. It is growing extremely fast. It's hugely labor intensive. And for creating an ecosystem, the MSME support is required. So I strongly feel it's a very positive budget for our labor intensive industry. Yeah.
Lal, just very quickly, very specific to your industry, and I know we've got it's commendable. We've managed to pull off a good budget, not disturb too many things, still focused on Viksit Bharat, focus on employment. So lots of good things as well. But one thing that maybe Dixon could get impacted is the BCD reduction on mobile and chargers. What does this mean for a company like yourself? What's your reaction to this?
No. Please be rest assured that mobile manufacturing in India has reached a stage that all the mobiles being sold in India would be manufactured in India. That's the kind of depth the industry has, and a large portion of that is going to be exported. So this reduction of custom duty on the CBU imports of mobile from 20 to 15% or on chargers is not going to have any negative impact at all. In fact, it's welcome. I feel that it's not having any impact at all on the depth and the breadth of mobile manufacturing in the country. In fact, it's going to deepen.
Well, would you have expected more on the PLI schemes? That was something that was being talked about consistently, that PLI schemes have worked. Your company is, of course, a shining example of how well they work, that there would have been more push to extend manufacturing. Do you think that that is something that you would have hoped to see?
So we in the industry, through our associations, have been working very closely with the government for rolling out an incentive package for the electronic component industry, which is beyond semiconductors. And the government response on that has been extremely positive because that's what helps in enhancing the value addition. So I think it's going to happen because the response is very welcoming. And I think it's going to happen besides the budget. Yeah, it's something different, but it's going to happen. That's a policy package we're expecting. In any case, we were not expecting that to be announced in the budget speech. So that's what we are working on because that's important imperative for creating a component ecosystem and deepening the electronics manufacturing ecosystem.
Atul, just very quickly, I know while we didn't get too much in the PLI scheme, one expectation I believe from your industry was critical components. Something to come out on that. There was a little bit of noise in the industry that we could hear a PLI scheme on critical components. Are you disappointed? Is this a game changer of any sort? Okay, I think we've lost Mr. Lal, but we'll try and come back to him in a minute. Manisha, why don't you take that? Not much on the PLI scheme. Are you surprised? Because this was a big bet and it's worked really well.
No, it's not a big bang thing. PLI is in terms of amounts so far disbursed are very small.
It's only a couple of companies that have stood out.
Very few firms. No, so these interventions which worked in, of course, Korea, Japan. In India, it's very difficult to make these outright favors to large firms. There is a lot of backlash. So I think all of these will be small little tweaks. I think the big picture still the stuff on the, if you bring down taxes, if you new manufacturing 15% tax.
See, that's not happened. The sunset clause was something that there was an extent.
Those are the big things, if you stay for long enough, you'll eventually get local money getting pumped into not necessarily only markets, but
Neeraj, I think Pranav might want to come in on this because we spoke about this, the sunset clause extension, which didn't happen.
In fact, we represented in certain, for FICCI, for example, that we should extend it for 5 years and give that 15% benefit. But the government seemed very clear during discussions that they were just not for it. And therefore, they are not going to extend it, was very clear. So the expectation was just not there, so far as I'm concerned.
Yeah.
The merit of having done it is very evident. But they were very clear that they were not going to do it.
Well, there was a counter argument to that as well. But A. Bala is joining us now. Vaditya Birla, Sun Life, AMC. Bala, welcome to the conversation. And we spoke about so many things pre-budget. We have the announcements now. Let's start with your first take.
A pretty decent budget, clearly addressing the various needs of the country, whether it is employment, skill development, rural economy, giving a booster to the SME sectors, and access to the finance through the expanding the SIDBI into every part of the country to ensure that money is now actually going closer to the people who would be in need of funds. And last, of course, is the income tax, the change that they brought in terms of slabs, which is, of course, putting a slabs, which is basically giving more money in the hands of people. At the same time, above 15 lakh rupees, now 30% plus surcharge, giving a lot of money in the hands of people, which again, essentially, more towards boosting the consumption. And capital gain tax change, of course, given the fact a lot of wealth has been created, a lot of money has been made, people are deeply in money the last few years, the 2.5% increase in capital gain tax may not be actually significantly denting the investors' sentiment, given the fact that you have to pay this only upon the selling, and second is it all depends upon if you hold it for 5 years, 2% per annum it comes to, which is not significantly higher amount for somebody to get worried about it. Clearly, I think the growth-oriented budget. And second is a futuristic is not futuristic, it is an action-oriented budget with a clear allocation that is being kept aside for every segment of the activities. And last, of course, least is despite all these allocations that's increasing towards the 2 states where most of the people are thinking there will be populist budget. And each of these spending allocation that has come to these 2 states, whether it's Andhra Pradesh or Bihar, it is linked to the industrial activities pick up and special focus on tourism, improving the pilgrimage activities in these centers. All of them actually is more with the intention to increase the contribution from these states further to the economic growth. Therefore, I call it as a growth-oriented budget. And what is also very interesting is the fiscal deficit. They have maintained it and also given a roadmap that even next year they're showing the confidence of maintaining about 4.5%, which essentially means one, growth will continue to be the driver, and tax collection improvement will continue to be the driver. At the same time, ensure the overall the numbers adds up to ensure that the fiscal deficit also is maintained. And last but not the least, given the where we are current account deficit, the balance of payment surplus they are running, giving a specific focus on export sectors, whether it is a diamond or jewelries or even the textile sectors. That's something which has been one of the expectation from people that the export sector should give some kind of booster through these with the series of basic custom duty changes that they have brought in. I think clearly they have brought in some bit of focus on export sectors indirectly through through various changes that they brought in on the custom duty. That's why I feel it as a good budget and overall perspectives. Probably I would say 9 out of 10 in overall ranking.
Got it. Thanks, Bala, for that. And that's an important first take. Now, let's just drill it down to some specifics, because as you see the Nifty 50 gainers, there is FMCG, which has got this clear bent of an upside there. Some of the gold companies, Titan, etc., is doing well. Gold finances are not doing well. Staffing companies are doing well. Ravi, individually, a lot of sectoral movers. Anything that is sustainable and something that stands out for you?
No, clearly, a lot of emphasis on creating formal jobs. And that is a direct beneficiary over there seems to be the staffing companies. There will be second order impacts of this also, of all this money being given to the interns, to the first time jobs, employees, and the lot of benefit even to the employer in terms of in the manufacturing sector. So that there will be a second order benefit of that on the consumption sector, but it's too difficult to say right now which sector. It's just that the job growth as well as the wage growth have been 2 problem areas, and I think government has clearly identified that and has laid an extra emphasis on reviving those.
So does this budget bring about a corrective move? You had mentioned that you don't know when what will lead to the correction, whether it's the budget or not. Now you heard the budget speech. Does the budget bring the correction?
Clearly, it seems so. I think correction probably started a couple of days back, and I think now it is getting elongated. And I think there will be a churn in the kind of companies that do well. Capex incrementally is not a needle mover anymore. Not to say that the focus on Capex is reduced or anything, but the stocks were kind of factoring in 3-4 years out. So the entire savings and the extra benefit from RBI has gone towards actually fiscal consolidation rather than towards giving extra impetus to the Capex or towards welfare. So that I think is, you're taking away from, we are all happy about the fiscal discipline, but the suffering is on the Capex front for sure.
That money had to go somewhere.
Yeah.
And one of the places you were talking about incentive to employers, I thought this was very interesting because the government will give 3,000 rupees towards all new time employees. They'll pay to the employers towards their PF contribution. This is up to, for those, all additional employment within salary of 1 lakh rupees per month. And they will give this EPF for contribution for 3 years. So while we get the details from the budget allocation, and we're wondering where all that RBI bonanza went, perhaps these are some of the heads that we have to look at. The push for employment is absolutely huge. Bala, just wanted to get your take on the kind of push we have seen for employment. And, you know, for budget after budget, we've been talking about what about the jobs? What are we doing about the jobs? Do you think that we have seen, at least for once, some very clear-cut allocation and push towards employment?
It's a big move in my view, given the fact that EPFO does the two things. One, it brings in the people who get employed. Once they get registered in the EPFO, they come in the formal sectors. And second, government incentivizing by way of the EPFO contributions up to 3,000 rupees, even for the 4 months up to certain period, especially for the new one, is also something will create an employment. In fact, I must mention that the way the GIFT City started originally in Gujarat, one of the big incentives that they gave, about 12.5% of the employer contribution, was given by the Gujarat state government. And that's one of the reasons most of the companies start setting up their own entities in GIFT City, like KPI, like knowledge processing centers and so on and so forth. So definitely I think it will bring in the unorganized, the employment that happens in the unorganized segment will come to the organized segment that will create employment. Second big takeaway which I saw about giving 1 crore students intern. Often I see people struggle to get intern in major companies. In fact, one of the top 500 companies have to employ close to about 1 crore people by way of providing intern, for which they can use some bit of funding from CSR, which in my view is a great move. And given the fact that a lot of people are actually now getting out of the college or not in the college, they can get access to the corporate way of functioning for them to become employable for the future. This is my view another big move that has been initiated. In fact, this in my view is a great thought which will not only serve the students who are who have an aspiration to get fulfilled by getting an employment. This is also something I see as a big, innovative, out-of-the-box thinking that they've introduced.
Ravi, you might want to come in on this one, and we talked about it before we went into the budget, where PSUs had become the biggest trade on the street. Of course, after the budget, these stocks are on 10% each. For the next 6 to 8 months, what's the trade? Is it defensive or is it PSUs?
I don't think defense. PSUs, first of all, I don't classify PSU as a sector. It's just government-owned companies which are either in banks or in defense or whichever other business.
Or fertilizers.
So from that perspective, I think the focus shifts back to companies that haven't done well so far, and market was looking for a reason to correct, and I think budget has provided a reason to correct. And also market was looking for a reason to rotate out of certain sectors and into other sectors. So from that perspective, that particular trade, the reversion to mean trade ends, and probably we need to look at something that is more attractive from the longer 3-5 years perspective in a risk-reward manner.
Okay, and before we get in, Navneet, Manish, final comments from you as well. You called it a bond budget. What else is something that we've not discussed that you want to bring to the table? I think there's a focus on jobs, MSMEs, etc., etc.
No,
is there anything else? I mean, the capex number was in which ways the same, but
no, nothing much.
So standard budget, par for the course, if you will.
Yeah, it's a good budget. Nothing populist. Everything is being paved for potentially better growth tomorrow.
Just one quick one, Manish. We've been all talking about an outstanding a correction that could be around the corner because we look stretched. Do you feel like between now and a few months that correction is almost a given? Because the budget hasn't left us asking for more, to be honest, right?
Look at the reason why India is difficult to correct it in a substantial manner without global markets correcting is because there's an inertia, there's local money flowing in. And the reflex that Ravi would confirm of an investor is that has 5% correction and reallocation towards equity goes up. So you necessarily need a global headwind for you to sort of
So constructive as we stand at 24,200, this market still looks good to buy for an investor?
No, so that's very different.
No.
That's very different.
Stay
I'm
invested.
saying kal correct hoga kya?
Nahi hoega.
I'm saying inertia hai, that there is a lot of money backing it. So that's the tailwind.
There is fresh money, agar money is on the sidelines.
But if you're asking him or me or anyone else, is market cheap?
Agree.
It's not. Are you likely to make decent returns over next 3 years at these valuations? Answer is no. Will markets correct tomorrow? We don't know.
So we stay in cash.
I like
that's a summary.
I like that. That's a great summary. So last take you want to take
last
from
take with Mr. Sethar. Mr. Sethar, just your last take, but and before we get Navneet Munot in, the buyback tax, does it have any implications for companies or sectors which are doing large buybacks?
I would feel that so far as companies are concerned, if dividend income was the choice between buyback still remains an attractive proposition. That's what I would feel, subject to reading the fine print, because the buyback tax is still a capital gains tax, lesser than the normal dividend tax rate. I think overall, I would feel from an economy standpoint, from a stability, continuity, certainty standpoint, this is a very good budget. Yes, from a market standpoint, the capital gains tax changes might be a little bit of a dampener, but they've addressed the weaker sectors of the economy. Like agricultural growth was very weak. I think there's a lot on the agri sector. Job creation was very important. From production-linked incentives, we are now talking of employment-linked incentives. So I think that should help as well. So from an economy standpoint, I think the stability, continuity, addressing the weak spots and continuing the growth on the rest, I think is overall good for the economy, is the way I look. And the fiscal discipline is a big macro point.
Now I'm asking him that this rationalization on term for capital gain, she said that all financial instruments will go to 1 year. So does it mean that even debt actually goes to 1 year, or it still remains? Debt is actually part of, anyway it's an income, so it's capital gain doesn't
So the
apply.
way I think she's put it, and we look at the fine print, but listed financial assets is 1 year. I think others, she said, is 2 years.
She said unlisted financial assets, so I have that line, will be held for 2 years.
Correct.
Yeah.
So listed financial assets, whether it is debentures, bonds, I think that's how it is 1 year for long term, and others is 2 years.
But
listed
in bonds,
securities,
long term doesn't apply anymore.
Correct.
So therefore it's only equity.
So she said that way, the listed financial assets. So I assume it will be mutual funds which are in listed equity as well as listed shares. I would presume would be 1 year, and all other financial assets and other assets is 2 years. So she's trying to simplify the capital gains tax rate.
Okay. We'll have to wait and see what the impact is. But thank you so much, Pranav Saita, Manish Dangi, Ravi Dharamshi with us. A Bala, great to have all of you for your first take. That was our think tank. We'll of course hear from Manish Sabarwal, who's part of our think tank. He's actually, we're told, in a meeting with government functionaries and was part of really also recommending a lot of things. Maybe we've seen some of them, and he has been talking about them. But Navneet Munot with us now, MD and CEO of HDFC AMC. Navneet, great to have you on Budget Day on NDTV Profit. Let's start with getting your take on what has been done with capital gains tax and how you are seeing it. The first reaction from the market is clearly negative. A bit of recovery right now. Do you see it as a big hindrance?
I think we have seen these changes many times over the last 30 years, and what the market has been expecting is some bit of stability on this front. I hope that we get stability over the next several years, and this is what is final. Our demand from mutual fund industry has been to also look at the taxation on the debt funds because it has multiple objectives, including the development of the corporate bond market, which is very critical to achieve our ambition of becoming a developed country and really boost investments. We have seen a good SIP book building, the retail resilience, providing stability to the market through the equity flows, but we need to encourage debt flows also. But I'm sure you have experts who will tell you a lot more about the nuances within the taxation change structure. But what I liked about when she said that we are going to have a very simplified structure and a comprehensive review of the Income Tax Act, and I hope that that makes life better for all the taxpayers, enhance the tax base, and it's good for everyone.
We also have with us Hiren Vaid, Director and CIO of Alchemy Capital Management, joining in. Hiren, what are your thoughts after this budget? Are you disappointed with what's happened on capital gains, or are you impressed that we've pulled off that fiscal consolidation number better than what the street was expecting? All in all, good budget, bad budget?
No, I think on the whole, the budget is good. Obviously, for market participants, the increase in capital gains tax is a sentiment dampener. Yes, I mean, over a medium to long term, these things get evened out. If you go back and look at when the 10% long-term capital gains was introduced, obviously there was an impact for a short period of time, but then everybody adjusted to it, right? Well, I mean, our sense was that there was no overarching need to raise resources and therefore tinkering with capital gains tax. But I think if I were to read between the lines, my guess is that given that capital markets were competing fiercely with bank deposits, and the worry that the regulators and the government had was that will this skew savings substantially in favor of capital markets versus other instruments. I think this is probably to kind of calm down and cool down the markets a little bit because there was a kind of a runaway rally in the markets. In my view, longer run, it really doesn't matter. But in the very short term, it is definitely a sentiment dampener.
Hiren, just want to understand to what extent it's a sentiment dampener. I mean, the tweaking on STT for futures and options, perhaps not as bad as what was expected?
I don't think that the increase in STT on futures and options is a dampener because frankly speaking, that was expected, right? I mean, and I think that, something was supposed to happen there and I think it has happened. I think the dampener is really in terms of tinkering of the long-term capital gains tax to 12.5% and 20%, which was not expected. And therefore, to some extent, this could be a dampener in the short run. But as I mentioned, in the medium to long term, people adjust, market participants adjust and move on. And I think that's what will happen. Outside of that, and I think that what the government has done is that used the additional resources that they have to reduce the fiscal deficit, which on the whole should be positive for the economy because it reduces your cost of capital. And secondly, I think that they have given some support, to human capital, right, across the board. And also by reducing custom duties on a few products, and we'll have to see the fine print, the idea is to promote value addition and reduce the costs for local manufacturing. So I think broadly, having kept the capex number at what it is, they continue to do the heavy lifting. They've used the additional resources to help, give a little bit of a fillip to consumption, which is not bad. So you have a little more balanced growth. And I think, broadly speaking, also removing angel tax is a great step because you need new entrepreneurs and they need risk capital. So I think, broadly speaking, the thrust of the budget is fairly good. I don't think the budget is bad. I think it's just that, all capital markets players don't want taxes to go up. Let's be realistic, right?
Yeah.
So if that goes up,
no one likes to be taxed. No one likes to be taxed, and capital market players have always been very clear that this is still nascent. You need to get more investors on. Don't tax. Have we reached that inflection point where the government feels comfortable in increasing taxes on capital gains, looking at the huge gains people have made as well? But hold that thought. I just want to get in Rajiv Anand, Deputy MD of Axis Bank, for his first take on the budget. Rajiv, welcome. Great to have you on NDTV Profit. And, just to understand from your perspective, the support given to MSMEs, the support given for educational loans, how do you see all of these measures in a broader view?
Firstly, I think notwithstanding the whole issue of increase in capital gains, which obviously the markets are a bit disappointed. But the way that I think about it is there's been all your viewers have made a truckload of money over the last few years. You're taking a little bit of that gains to support two things: the angel tax to create more entrepreneurship. And money in the middle class pockets, and I don't think we should be too bothered with that. Maybe in the short term, yes, but I think in the long term, I think that allocation of resources I'm quite comfortable with. There is focus on job creation, particularly through the MSME sector, and I think if you look at bank balance sheets, the size of the books of lending to MSMEs has only increased quite strongly over the last 3 to 5 years. And my own belief is that the MSME sector will be over the next decade what retail was over the last decade, for banks in terms of the ability to lend to these entities because of the entrepreneurship that they bring, because of the infrastructure that is getting built, more transparency through GST, digital, etc., has made many of these entities a lot more bankable. And therefore, the fact that there is greater thrust on the MSME sector is quite heartwarming as a banker. I think educational loans, addresses the whole issue of employability, and I think there was a headline in this morning's newspaper as well from the economic survey that many of the graduates are in a sense not employable, and I think that is a problem that corporate India faces and has been a big issue over the last few years, and therefore being able to fix the employability and therefore be able to fix employment as we go forward, to my mind is a very positive step.
Rajiv, Mr. Anand, it's also Samina joining in. Were you pleasantly impressed with that fiscal deficit number coming in lower than 5% and the glide path where we're talking about a sub 4.5% next year? Do you feel like all this put together makes this budget a bond budget and also could, in the near term now, in the foreseeable future, help India's ratings improve, which will benefit institutions like yourself for sure?
Oh, absolutely. I mean, I think the previous speaker spoke about the fact that this is going to push the cost of capital down, for corporate India. And I think that, notwithstanding, the markets grumbling today, is very positive from a long-term perspective. We've all spoken about the fact that large fiscal deficits have crowded out, private sector investments, etc. That to my mind is going to be less of an issue as we go forward. And all the good things that you spoke about, the fact that we have shown commitment to this fiscal glide path should impress foreign investors and certainly should impress rating agencies abroad as well, and that in turn will once again bring in both liquidity and lower cost of capital for this country.
Okay, so a lot of positives coming in. I don't know, on a broader view, Mr. Anand, I just want to get your sense of all the 5-6 policies to boost employment, and the focus is also on employers, incentivizing employers. There's an internship scheme which is applicable to the top 500 companies. So obviously your company as well. Government will pay 5,000 rupees. The intern will be paid 5,000 rupees a month, one time 6,000 rupees. From what I heard, the private sector has to give 10% of it. How do you look at some of these schemes? Do you think they're implementable first off?
So first and foremost, I think the budget is growth oriented. As a bank, the fact that the economy is being prepped to grow at an even faster pace, I think is good for business, both on the deposit side as well as on the asset side. So I think that's the sort of the overarching philosophy that I first want to put out. There's a lot of detail in the budget one will have to go through. But as we have seen in many of the budget proposals over the last many years, implementation is always a challenge, and how the government engages with the corporate sector to be able to implement many of these schemes is something that we will have to certainly wait and watch.
Well, I think the big story, though, I think is what ENY has just picked up for us. Mr. Mayur Shah is joining us in the studios, but we'll come back to that in a minute. Navneet, what is your portfolio view now? The budget is behind us. It seems like it's largely in line with what we were expecting, even though the push on capex, agri consumption is not as much as we'd have liked or the street would have liked. There's tinkering on capital gains as well. If you're a market participant sitting with cash on the sidelines, what should one do?
No, I think the broader direction of sustainable growth, inclusive growth, focus on innovation while keeping the fiscal prudence has continued. And all of this is good in the long run. Think about it. Over the last 5 years, the capex has almost tripled. The central government capex has almost tripled from 3.35 lakh crores to 11 lakh crores. And now incrementally, it looks like government want to spend more money on the rural economy, which is actually good because a large part of the population is there and we need to invest tax more. It looks like government want to focus a lot more on employment creation, which is very good. We need to reap the benefit of demographic dividend. So both for consumption as well as from an investment perspective in your portfolio, there would be opportunities.
Very interesting. Okay. Rajiv Anand, one final question, and then I have a question for Hiren Ved as well. And this is Neeraj here. This, I heard you mention about the overall a good budget, focus on jobs, so on and so forth. Is there a tilt towards giving this much needed impetus to consumption? All job focus gives that tilt to consumption any which ways. There are for skill developments, etc. also money being put on the table. Do you get the sense that it is a budget in that sense tilting towards consumption as opposed to an overarching focus on capex, which continues as is?
It's a little difficult question, and I think that's the bet that the finance minister is making. But I just want to leave a thought on the table that we are seeing relatively weaker consumption in an environment where net household savings are actually relatively weak, meaning that that despite the fact that households have levered themselves up quite strongly over the last 4 to 5 years, we're seeing a situation where we're seeing consumption relatively weak, and so therefore the savings that is going to come through either better jobs because they're skilled better, or because of some of the tax breaks, whether that will go to reduce leverage in households or whether it will go to consumption is something that we will have to certainly wait and watch. But I think the bet is that all this will ensure that we will see improvements in consumption.
Rajiv, we'll leave it at that. Thanks so much for taking the time out and really being with us today. Navneet, take a moment. Understand I have to let you go, so thank you for joining in as well and giving us your thoughts. Really appreciate your time today. Hiren Ved, the markets not as disappointed as you would think when a capital gains tax hike would happen, because most people are saying this is not the greatest of times to do it, so on and so forth. Is the market taking heart from the fact that this was anyways going to come? Good, it's done in the first term, but it's being accompanied by fiscal prudence, which will help maybe in ratings at some point of time in the future, and it shows the bent of the government that they are not resorted to populism in a very large scale.
No, absolutely. I think the fact that they've signaled 4.9% fiscal deficit and 4.5% next year is very clear signal to the rating agencies that we as a country are very serious about fiscal consolidation, and that we are aiming for a much more sustainable advantage in terms of ratings upgrade and the resultant reduction in cost of capital that can happen. And that itself is a growth enabler, if you ask me, right? So rather than relying every year on the budget to stimulate growth, I think if we do things which are more structural in nature, which reduce our cost of capital in a durable manner, I think that's a better outcome than trying to use the balance sheet every year to spur growth, right? And as you rightly mentioned, that they've done this without actually taking the pedal off capex, because they've kept the capex same. And I want to bring another perspective. While there was an expectation that the capex number would increase slightly because the government has a little bit of resources, we must also mention that there is a lot of money which has been set aside for Bihar and Andhra Pradesh for infrastructure, right? So there is a new power plant coming up. There is the Polavaram irrigation project. So I think that money, whether it is for tourism, whether it is for power, whether it is for roads, whether it is for other infrastructure in these two states, also means that it is capex, right? So to that extent, I think that they've been able to bring up these slightly more struggling sectors and areas that needed focus like job creation, skilling, without taking the pedal off capex.
Right.
And hoping that now the private sector will start to kick in, which actually has already happened, because if you heard the CEA say that private capex has already gone up 20%.
Yeah, it has. The top firms have, maybe the bottom ones haven't. But Hiren, you spoke about the renaissance of private capex way earlier. It's showing signs. Thank you so much for joining us on the budget day and giving us your thoughts as well. Really appreciate your time. Okay, my colleague Charu Singh is speaking to Ashish Chauhan, the CEO of NSE. Let's dip in to hear that.
Incentives. Even smaller companies have been given incentives by saying they will get the first salary of the new employee over 3 tranches, and also some portion of the provident fund has to be paid, have to be paid by the government. So many incentives have been given to create jobs, create skills, and also include the women in the workforce. And those are the way we would be able to take advantage of our demographic dividend going forward.
So, sir, in all, you feel positively towards the budget?
I would give 10 out of 10 to the finance minister for just sticking to the basics of what is required. And that is, I think my friend Nilesh had told me in the morning that it has to be like a Surya Kumar Yadav catch in the World Cup final. And the employment creation is that catch, right? And so for me, this is focusing on the right thing for the future of India.
Thank you so much for speaking to us, sir.
Okay, well, that's the view from NSE as well. But Samina, big changes afoot on the taxation front.
And good changes from the sound of it, right? So I think what we have, Mayusha from Ernst & Young as well, who's in the studios with us. But indexation benefit, we believe, on real estate, gold and other non-financial assets has been abolished. And there's a change in treatment of LTCG. Mayush, you picked this up a few minutes ago while we were all disappointed what was happening on LTCG from 10 to 12.5. But I believe on real estate, it's actually reduced. So this could be good news for real estate companies and gold companies.
That's right. So, you are right. In terms of tax rate, it has gone down from 20 to 12.5% for long-term capital gain arising on account of property sale or any other assets. However, at the same time, what they have done is they have withdrawn the indexation benefit which was available for any property which was transferred from today onwards. So till today, if any property has been transferred, it will definitely get indexation benefit, but thereafter it will not get any indexation benefit.
Can you simplify this for us?
Sure. So let us say that if a property is sold, say on 1st of July, you will get the indexation benefit on sale of such property. But if you are selling anything after today, then that property will not have any indexation benefit available to them.
But property is an asset class which can't be sold just like that. So suffice to say that indexation benefits on real estate are gone.
It's gone. Absolutely right.
Now this could be a big negative impact, right?
It would have negative impact coupled with the tax rate has gone down from 20 to 12.5. So to that extent, I believe, it will set off the impact, but it is simplifying that now indexation and all that, we don't have to recalculate, calculate and things like that. It becomes very simple.
And I think the markets are seeming to like it because all your real estate stocks are reacting negatively to their news flow. In fact, from the likes of an Oberoi Realty to every other one on the street that we are seeing, Phoenix Mills, are all trading deeply in positive territory. They may be off their day's high point, but still looking good. What about gold? You want to take us through, because it's at non-financial assets. I'm guessing there's real estate and then there is gold as well.
That's right.
So you want to walk us through what has changed for gold taxation and what could it mean for the companies? So companies like a Titan, a Senco, is there a direct correlation?
Yeah. So what happens is that when any gold is bought as a capital asset, earlier, we used to take indexation benefit and we used to pay tax at the rate of 20%. Now what is happening that same like immovable property, if we are selling off any gold or any other item as a capital asset, in that case now no indexation benefit is available. At the same time, the tax rate has gone down from 20 to 12.5. So to an extent,
does your math suggest that this 7.5% downtick in capital gains rate kind of equates with the indexation benefit that came in for very old properties or gold bought way earlier, 20 years ago? I'm guessing the indexation benefits would still be higher than the 7.5% reduction?
Let's look at it because we had to replace the fair market value as on 1st April 2001.
Right.
And indexation has started from that point onwards. So if we look at now 300% is what the kind of upside we could have availed.
Right.
Because of the inflation indexation number.
Exactly.
Now, when tax rate has gone down, it has not gone down to that effect.
Exactly.
Right. It's not gone down by 300%. So you will have some.
So net for something that was bought way earlier, it's still a negative. But for a lot of stuff which has been bought in the recent past, the reduction in tax rate nullifies the indexation benefits going away.
And this is being in line with the global practices.
Got it.
Because a non-resident investing in India, if they have to go through, though non-residents are not entitled to indexation benefit. But like Indian people who are investing abroad, they are taking indexation benefit as well as currency exchange benefit. Now, they will be able to have only one benefit and it will be unifying because then you can claim all the credits which has been paid in foreign country over here and vice versa. So it will kind of simplify from an international standpoint and it will be aligned with the global tax policies.
So this is also for financial assets outside the country. So if you're going out and buying funds or stock, say in the US, the same applies to these.
That's right.
And that's also a big piece, by the way, with the LRS being utilized by most people who live in this country. This could be one more factor to watch out for. Mayur, anything else that stood out? I think we've highlighted most of it, but you want to share with us your thoughts on what have you made of the changes as a whole on the personal taxation front?
See, the way I look at a budget is, they are simplifying a lot of things, which was kind of creating a lot of complexity. Especially when you are going to digitalize everything. The challenge is that when you fill up the form, it is so lengthy and cumbersome. So this will kind of simplify so much that, nobody would need any consultant like me.
So you might be out of a job. You're not worried about that?
No, not at all.
Just one thing. One last question actually. And this holding periods being now just 2 holding periods, right? 12 months and 24 months. In
That's
that
right.
itself, is that a big
It's a big change.
It's a big change.
Big change. Because earlier, what asset will be qualifying as a long term, depending upon the type of assets, we used to decide what should be the long term and what should be the short term. Now it is very simple. 12 months and 24 months.
Got it.
Anything which is being held for 12 months is long term and rest is.
Got it. Okay. Mayur Shah, thank you so much for bringing us this piece of update as well. So for real estate, gold or non-financial asset investors, it's a big change on the taxation front as well. Must say the markets have behaved fairly okay. 0.7, 0.8% lower. Look at that volatility though. And this was anticipated. Kush Bora is with us. Kush, what stands out in terms of the charts currently on specific pockets? Because FMCG, Titan, etc. are all really running amok.
Hi, Neeraj. First up, let me just give you a quick update on something that we discussed in the morning, which is Bank Nifty. We were talking about a constant writing, in the call options, a constant pressure on the call options, and the 52,000 put option, that we discussed with a target of 700. Well, the high for that was 69.95. So I think that pressure is going to continue. If the Bank Nifty does indeed close below 51,800, then I think we could slide to 50,000 or maybe just a little under as well. So that's a bit of a caution on the Bank Nifty. Now, you're right, as far as the sectors go, the consumption sector is a standout right now. Titan's seen a massive short covering. So I think this could continue, but perhaps 3,500 is the level where it will halt because there's a 200-day moving average pressure as well, the call rating also. This is for Titan.
Okay, Kush, just before you move ahead, so viewers just want to mark, one is Titan, and look at that, 7.5% uptick in the session today. So big move for Titan, that is one. And then you look at FMCG names as well. I think those two have had a good move. ITC and some of the others have had a serious up move there. Kush, any thoughts here?
I think that a couple of stocks stand out for me. Godrej Consumer Products, Tata Consumer Products. I think some of these continue to do well. They were doing well before the budget as well. And this Philip is just going to boost the rally that we are seeing. So Godrej Consumer Product is perhaps something that I would buy, perhaps hold at current levels also.
Just a few Andhra stocks that are actually doing quite well. So pull up KCP, NCL, Deccan. All those stocks are actually looking good, though. Anything to do with Andhra Cement companies also having a pretty pleasant day. There you go. Aditya Vision, if you can pull that one up too. Let's see what Aditya Vision is getting up to. But KCPL is up 3%. Aditya Vision, which was trading negative at the start of the budget, had moved in. And there you go. 4% on KCP is what we have. So some of these counters are looking well placed in trade. Kush, another space that's actually looking good is real estate.
Kush, apologies. We'll come to you in a moment from now. But Ramdev Agarwal, Chairman and co-founder of Motilal Oswal, is with us. So we need to go across to that conversation. Mr. Agarwal, great having you. Thanks so much for taking the time out. What is your initial assessment of the budget? The market seems to have taken a budget with capital gains tax being hiked rather well.
Yes. So, Neeraj, I would say that it was in any case expected to be a capital market heavy budget, and FM has delivered to that promise. So long term has been increased, short term has been increased, STT has been marginally increased. So clearly there is a I was a bit disappointed with the increase in the long term taxation. Not that it hurts me a lot, just that the asset class should be encouraged. When the SIP flow is coming, the whole nation is becoming very inclusive, and it's fundamentally a long-term kind of a story. And there, I think they should not have changed the long-term capital gains tax from 10 to 12. Short-term, speculative, whatever you do. So otherwise, I think it's a consumption-oriented budget. They've given something to everybody. So I think that consumption boost will come to some extent. And the guys who make money in the market, see, market-facing economics has not changed fundamentally. They have not changed the market-facing economics. Only thing is, after you made money, you pay a little more taxes, which is kind of not an unfair kind of expectation.
Mr. Agarwal, very good afternoon, and great to have your take. In terms of just what the impact is of capital gains, do you think that this initial hit will sort of recede? The market will be able to digest it after a point? And are you disappointed that they've tinkered with long-term capital gains tax, or was that coming sooner or later?
Yeah, so that's what I was saying, that they have not changed materially the market-facing economics. When I come to the market, first I need to make money, then only I pay taxes. So my market-facing economics remains same. Basically, yes, there is some amount of change in the STT for I think high-frequency traders will pay a lot more than what they are paying. So I think they have hit the heart of excessive trading. I think that's where the trader may pay a small amount, but actually government will get a lot of money out of that change in STT. That's my sense. Second, I think the capital gains tax, I think every level has been increased, long as well as short. So I think it's a long-term change, and people have to get reconciled to paying a little higher tax only if they make money in the market. The issue is whether you make money in the market or not, and that is not dependent on your taxation charges. It is dependent on what happens to the corporate earnings, and I think corporate earnings will definitely get a boost out of the consumption which will be there across the board thanks to what concessions they have given.
Are you seeing enough, Mr. Agarwal, to really boost the consumption story in a longer view? I mean, today we might be seeing a very momentary response in that space and in those stocks because of what they've done on employment or the new tax regime, etc. Do you think enough has been done to really move the needle? Because we've been talking about consumption at the bottom of the pyramid needing that boost.
See, this consumption or GDP growth consumption pickup, I mean, it's a multifaceted kind of thing. I mean, it's not the one thing, one taxation benefit here or there that's going to impact. I think the good monsoon across, RBI governor is already saying that the rural demand is picking up recently. So I think the good monsoon and now widespread benefit to the masses, whether it is standard deduction or lower tax rate or stipend and the job subsidy. So all those things will over a period of time should give boost to the consumption, and that will see the FMCG companies or consumer companies which are not doing well. I think that's where I think you'll get some earnings pickup over a period of time. So my sense is, on the whole, it will be accretive to the corporate earnings. But some kind of a little more taxation for the people who are making money in the stock market.
Mr. Agrawal, hi, it's also Samina joining in. So it's back to business then. Budget is behind us. Where from here? What should investors be doing? Does the budget give us an excuse to correct from here, take profits off the table? Or will the fact that it's a neat, clean, fiscally well-consolidated budget give the market the impetus for the next leg of the rally from here on?
Yeah, I don't think there is any impact to the market outlook. I mean, whatever was the outlook before the budget, I think it remains fully intact. Because right now market outlook is dependent on whatever the corporate earnings expected for next 1 year. I would think that corporate earnings will get little bit, almost 0.5% to 1% boost out of this budget. Second, I think the flow, which is going to determine the overall demand for the securities, that remains intact. So I would think that if market has to go at the rate of 15% for next 5 years, that doesn't get impacted at all. So the true investors who are coming through SIP revolution, which is on, I think they must continue, and they must make sure that in the next month or so, if there is a correction in the market, then also they continue with their SIP. So I would think it's a perfectly healthy environment for long-term investing.
Mr. Agrawal, there was a lot of talk of how the money or the extra bonanza from the Reserve Bank would be used. It seems that, and because there is only 8 months left, there isn't as much capex that could be done. So it seems that the government has opted for higher fiscal consolidation. Is this a nudge to global rating agencies as well, that we are doing something which the other global nations aren't quite doing?
I would think so, but we have to listen to the interviews of the finance secretary and FM of the post-budget presentations, and what strategy went behind in terms of fiscal consolidation, and because a lot is happening beyond the budget. There is a bond inclusion, JP Morgan bond inclusion, so you are seeing the flow. Last week itself, our forex balance went up by $8-9 billion. So now I think they must have been waiting for the budget, and the post-budget, again I think you'll see the FDI and FI flow picking up. So my sense is that we are in a very sweet spot as far as the foreign flow is concerned, and budget is just about one of the small event on the way, and then basically maintain the environment, the positive good feel factor in the economy that has been fully maintained, and they have given a little more boost. So my sense is that tomorrow people will forget what has come in the individual taxation. And I think there is one more big thing about abolition of the buyback tax. Now and then the taxation will be in the hands of the recipient. I think that is a huge bonanza for the actually promoters. Promoters earlier were paying 20% tax at the corporate level, and if it has to be paid in the hands of promoters, then they'll pay only 12.5%. So my sense is, let's see what is there in the fine print, but it looks like a very big change.
Thank you so much, Ramdev Agarwal there with his take on the budget and what we can expect. But let's also welcome to the conversation Prashant Khemka, founder White Oak Capital with us, Nilesh Shah, MD of Kotak Mahindra AMC also with us, and Sunil Sanghania, founder of Abacus AMC. So we've got a power-packed panel with all the voices in at this point. Let's start with the quick first takes. Nilesh Shah, I'm not going to do the standard rating of the budget, but this one at least had a surprise in terms of capital gains tax. Everyone was in the will she, won't she, will they, won't they kind of a situation. Are you surprised negatively?
No, I'm not negatively surprised. I'm just disappointed. STT was levied in place of capital gains. Now STT and capital both continue since 2018. Now capital gains tax is revised upwards. But there is a non-level playing field between foreigners and locals. If FPI invest in Indian derivatives, they make capital gain. If you and I invest in Indian derivatives or trade in Indian derivatives, it is business income. The foreigners doing trading in our derivatives are earning tax-free income, whereas we pay tax as per applicable slab rates. I think we should create a level playing field between foreign and local participants in the market so that there is equal distribution of taxation.
Got it. Okay. Okay. So, okay, that's the first take. Let me get the first take from Prashant Khemka as well, and then I have a follow-up for Mr. Nilesh Shah. Prashant, what does this mean for equity markets by and large? There is also this angel tax, which is a very interesting thing which has come in. But what's your first take on the budget from a market's perspective, both from a taxation as well as this adherence to the fiscal deficit are actually beating what they had laid out?
Certainly, thank you, Neeraj. So, first of all, in almost all respects, other than capital gains tax, the budget to me seems like a continuation of prior budgets. The prior budgets were all received well by the investment community, and we have to keep in perspective that the impact of budgets in normal course of events is with some rare exceptions, is fairly short-lived on the markets unless there's some very tectonic shifts in the way the economy is expected to grow going forward. So in some sense, there's a continuity budget. This one negative on capital gains tax, I think, as Nilesh Bhai also mentioned, the revenues could have been generated in other ways as well. It just, besides, first of all, it's a 2.5% increase. Let's forget for a minute the short-term gains tax, which you can't really forget, but the long-term gains tax has been increased by 2.5%. That means if you are going to expect 10 to 11% over time, I think reasonable to expect 10% return from the market, then it has shaved it off by 25 basis points. It's material, because there's no indexation benefit. So your real return has gone down more than 2.5%. It's gone down probably by 5%. It also opens up a Pandora's box in a sense. We had a certain stable tax regime on investors for last several years. 10% on capital long term, 15% short term. Now the increase in this budget also raises the risk in investors' mind, legitimately so, that we can have frequent changes. And when I say changes, usually with things related to taxes, they only go in one direction. So could this imply future tax hikes as well? Already, I think in my experience of having invested in developed and EM markets, the taxes on investments in equity markets in India are towards the high end, especially the variety of taxes, all taken together. I'm not saying just look in isolation, long-term gains tax or short-term gains tax, and so on, including the dividend tax and the buyback tax and the STT and all those. So at a certain point, there'll be a straw on the camel's back. A theory would be applicable. I don't think this 2.5% increase is that straw, but increases the risk that down the line you'll have further uplift in this tax rates. But that is the primary concern with the budget. Otherwise, I think most of the budget, particularly, hopefully the fine print would have to be looked at. Nilesh Bhai was just mentioning a short while ago on the media, which is what I'm frantically searching for in the fine print, that certain laws have been amended in the direction of ease of doing business, which would allow fund managers like myself sitting outside India to come back to India and live a normal life in India. I'm yet to see that print. My team is looking for it as well. But if such things are indeed included in the fine print, then ease of doing business is what I usually always look for from a budget rather than this tax tinkering. The budget is an opportunity. Every budget to me is an opportunity to improve ease of doing business, because all said and done, we are last published, ranked 63rd on ease of doing business. We want to be number one to become a developed nation by 40. We can't become a developed nation by being 63rd nation on ease of doing business.
That's true.
Yeah?
That's
so that
true.
fine print, I'm very much eager to look into as it becomes available.
Yeah. Prashant, I can almost feel the pain But I think that's the kind of voice that Nilesh Bhai gave as well, and you rightly referred to it. So Nilesh Bhai, I think Prashant makes this important point, that does this open up the, in a sense, a bit of a runway that people will not have clarity now about whether this is the last of the tax changes and the max tax that we have, which is 20% on short term, or could it be more?
So at least this year, Neeraj Bhai, the details are out. And I'm sincerely hoping that the safe harbor clause which Prashant Bhai referred to, and which I had the pleasure of handing over to the Honorable Finance Minister in my pre-budget consultation, really works out. And next time, both me and Prashant Bhai are in your studio in person, and not I am in local office and Prashant Bhai in global office. And that's the important point. If India has to develop as a regional financial center, we have to bring Prashant Bhai in India, not keep him outside, by changing our rules and facilitating it. And this budget is a step in the right direction. There are changes being proposed to improve ease of doing business, ease of doing investments, and we should keep on taking feedback so that we ultimately achieve our objective of bringing talent into India.
Nilesh Bhai, so a couple of things. I want to ask you about employment, etc. But I just want to play devil's advocate on the capital gains tax changes. Of course, the impact for real estate and gold still has to be understood because indexation goes out of it. But on equities, if the counter argument would have been that look at the kind of gains made in equities by everyone, why should the government not take a little bit more from you? Every other kind of income is also being taxed. What would you say to that?
So one, why do we give tax incentive? We give, like vitamins, tax incentives for correct certain deficiency. Where is the challenge today? Is government doing its job of building infrastructure? Answer is yes. Is private investment coming through as much as they wanted? Even yesterday's economic survey mentioned that now the ball is in private sector's court to take it forward. How will private sector invest if there is no capital formation? The corporate India makes 16 lakh crore of profit, and they give probably 40% of that by way of dividend. Now, is there an investment happening? Answer is it's happening on a limited manner, which is why tax incentives are needed so that capital market can provide capital to our entrepreneurs and they can go and then invest. Today, 9 lakh crore rupees in last 3 years between FY21 to 23 has gone into currency notes. Does people make money on currency note? Answer is no. We need to give them incentives so that currency note, instead of lying in Tijori, comes back into the economy. We have imported on an average 700 tons of gold. In 22 years of this century, our net import of gold, including gold smuggling and people wearing jewelry and passing through green channel, is about $500 billion. More than our foreign direct investment, more than our foreign portfolio investment. Where is that gold lying? It's lying in Tijori. Shouldn't we give tax incentives so that that gold comes out of Tijori and stays in formal economy? Tax incentives are needed to correct the deficiency on low capital formation.
Okay, just that's a good point there. So perhaps we could have been a little softer with long-term capital gains tax there. That's the resounding voice coming through. I just want to get, Prashant Khemka, your view on the employment push. And that really, I would say, if I had to predict what tomorrow's headlines will be in all the newspapers, among other things, after capital gains tax, would be the big push for employment. I want to understand from your point of view, do you think that there are some out-of-the-box ideas which could really change things?
Certainly, but before I go to that, I do want to, thank Nilesh Bhai for really batting for the industry on this, regardless of what is there in the fine print, batting for the industry for this change, which would really spawn and it's tied to the employment creation as well. It would spawn a birth of a global hub in India. Just like for IT services, India is a global hub with a small change in the policy, the right change in the policy that Dilesh Bhai was referring to, the safe harbor clause, it would lead to India becoming the global hub, just like it is in IT services, becoming a global hub for asset management as well. And think of the employment creation that would lead to. So the employment creation initiatives are very positive in the budget, but what structural measures that can, besides the incentives, other structural measures which come along with ease of doing business, not just related to the safe harbor clause, but across board. The finance ministers talked about reviewing the tax code within the next 6 months by the time of the next budget. Simplification of tax code, ease of doing, leads to greater ease of doing business. That itself should spawn and have a far deeper and much larger impact on job creation. Then, what is also welcome, very welcome, in the interim, the higher allocation to job creation initiatives, be it in skill development, upgradation of skills, and incentives to manufacturing sector for first-time employees, and the incentives in form of contribution to the pension plans. All those are very welcome moves, but you have to think in terms of combination of these fiscal incentives, which may work very well in the short to interim time periods. Combine that with the structural job creation possibilities that would come with greater and greater ease of doing business.
Absolutely. So overall, a good budget. No one likes to pay more taxes. So you're seeing that also play out, not just in the markets, but from some of the conversations we're having. Having said that, markets have recovered from its worst levels of the day. An interesting conversation going on right now. My colleague Samina is speaking to Sunil Singhania, founder of Abacus. Let's listen in.
CG, your consumption, and it's worked out beautifully well, and we can see that in terms of your Abacus portfolio returns as well. But going ahead, what about other consumption or rural-facing sectors? So two-wheelers, tractors, those look expensive, or those could make good bets for now?
So our view on two-wheelers has also not been great, but two-wheelers have been the star performer last 1 year. I think it's been a case of P multiples going from like mid-teens to mid-20s. Which is surprising because volume growth for two-wheelers has also been low single digits, and there's also a threat of EV which is around the corner. So frankly, we don't have a very strong view on two-wheelers, though we have sort of made good the underweight on two-wheelers by having some ancillaries which are focused on two-wheelers. Tractors continue to be a little bit of a cyclical play. You always have 2 good years and then 1 bad year as far as tractor is concerned. Last 1 year has been that soft year. But now with monsoons trending up well, hopefully, towards the later half of the current calendar year, you'll start to see uptick as far as tractor sales is concerned.
Sunil, what was the cash position that you went into this budget with? And now that the budget is behind us, but we're still in the thick of the earnings season, what sort of an allocation or growth path are you planning out for the excess money that's on the sidelines in your portfolios?
No, so we never have had a large cash position. Neither we have had any view that we need to create 8%, 10% cash. Our view is that invest rightly rather than being fully invested. And I think that has been our stance. Before the budget, we did not feel that the market would correct sharply, nor do we have a view that the market is going to move up sharply. I think we have already seen last 3-4 years markets giving extraordinary returns. I think our base case scenario going forward for the next 3-4 years is low to mid-teen returns. And that continues pre as well as post-budget.
Okay, low to mid-teen returns possibly is what Sunil Singhania is saying. Let's get one more voice into the mix. Dharmesh Mehta, MD and CEO of DAM Capital, joins in on the conversation. Dharmesh, great having you. Thanks for taking the time out. You speak, Dharmesh, to a lot of people who put in capital into the country as well as companies which are going public. What's your sense of the impact that a hike in capital gains, both short-term and long-term, could do to the sentiment at the very least?
See, honestly, it's a very disappointing move because the stock markets were giving great returns, it was fueling the economy in a big way. to dent that in a bit is not very good science. But markets live out this. In 2 days, people will forget. People come to stock markets to make money, so they won't care whether the tax has gone from 10 to 12.5 or 15 to 20%. If they see market giving returns, they'll forget about this move, which was, should have not been done. But now that it's done, people will forget it. So I wouldn't see a big sentiment negative for the market, but this could have been avoided.
Does this impact the primary market pipeline, Dharmesh? Because a lot of conversation around how maybe 80,000-90,000 crores worth of primary paper slated to hit the markets in the next 9 months. Do you think that gets impacted at all?
No, I don't think so. That will be impacted because, as I said, people come to make outsized returns. So 2.5% of higher long-term capital gains or short-term will not dent that sentiment for sure. India is in a sweet spot. They're doing very well. If you look at this budget also, it has been a decent budget in that sense. If you remove the stock market impact, there's nothing negative in the budget for which the view on India will change. So this negative event will be forgotten in 2 days and we'll be back to business of making money and identifying companies where they can make more than 20, 30, 40% returns rather than worrying about the short-term tax impact.
Dharmesh, hi, good afternoon. Tamanna here. Apart from the tax piece of it, and you addressed that quite clearly, I'm just wondering that after this budget and from what we're seeing in the markets today, are you seeing a longer sort of rejig in what the favorites are? We're seeing your rail stocks really suffer, your PSUs suffer, all of those infra plays. Today is all about consumption. Do you see that trend continuing for a bit, looking at the thrust of the budget?
Well, I don't think that will be a big impact because in another 6 to 7, 8 months, you're going to see another budget coming. So unfortunately, we have 3 budgets in last 1 year. So I wouldn't say markets will react too much on this budget. I think so. It's the same story again back tomorrow. People will look at, good sectors which they are following. And I don't think that there's anything in the budget which will make me negative on certain sectors.
You're not negative on any sector right now, but what are you most positive on? Let me just place the question that way.
Well, this budget has thrusted on the rural economy. So I believe any rural theme or rural stocks, that should do well. So that's a big positive out of the budget on the rural economy.
Okay. Dharmesh, no sectoral moves per se, but are you happy with the fact that the number on capex has been kept as is, and the money that was there, excess from the RBI dividend, has been used to prune down the fiscal deficit even further? Is it a signal to global agencies of sorts about what India is doing and sticking to the fiscal glide path with even more alacrity?
Well, fiscal discipline is always good for the country and for the markets as a whole. But yeah, I would have been more happy if there was more thrust on capex, especially on infrastructure, which is the need of the hour. But as I said, another budget is on the way in 6 to 8 months. So maybe they kept it for the next one.
All right. So thank you for that. Dharmesh Mehta, MD and CEO, DAM Capital. Short, sweet and crisp answers there on what he expects from the budget. Kush is with us. So Kush, we've heard all the gyan, all of the inputs coming in. Everyone likes the budget like they always do in every budget. Except this time people are being quite honest that they're not very excited about the capital gains tax. Markets, of course, took a huge knock. Look at that Nifty chart. And then has begun recovering. They'll get over it. Market will get over having to pay a little more tax. But what do they do right now? You are entering the fag end of this budget session, about 1.5 hours to go. What's the play?
I think, again, I'll allude to what we discussed in the morning, which is 24 hours from now, markets will perhaps continue doing what it was doing before the budget was announced. In fact, the markets are doing that a little earlier. What do I mean by that? Real estate had seen quite a bit of a bump up, but most of these stocks are in the red, perhaps one of the highest losing sector for the day. And guess which sector is doing the best? Lo and behold, IT has made a strong comeback. So we're exactly doing what the market was doing before the budget, and I think this theme will continue. From a standpoint on the indices, I think 24,200, if that is held on the Nifty, you should continue to hold your long positions, but once that is taken out, exit. 51,800 seems to be the level that the Bank Nifty might close below. So if that is lost, then Bank Nifty goes into a short territory. And from a near-term perspective, as I said, something if you have to take out from the budget. Anthony Waste, this stock was doing well before the budget. Even today, it's holding on to its gains. So I think from a near-term perspective for a target of 725, this is one stock that you can consider. Keep your stop losses close to 660 levels.
What about a team lease right now? team leads, Quest, all of your employment sort of pushes, and you're seeing that play out definitely fundamentally, a team leads as well. What are you seeing on the charts, Kush?
Again, my concern comes from the fact that they're not able to hold the highs that they have made. If you remember, when the budget speech was on, and we were having this conversation that a lot of stocks that are moving aren't really able to hold the highs that they had made. The same thing applies for team leads. So while this is a shot in the arm, the stocks perhaps now already witnessing some profit booking. Quest Corp too, I think 650 is a resistance level, so I wouldn't buy into them